Good morning. Making sure that my sound's on. Sounds like my sound is on. It's a sound. Hey, thank you so much for joining us for the, February 2020 edition of the Trader Summit. It's so great to have you here. My name is Greg Lewis. I'm the marketing director for Metastock. If you haven't heard of Metastock, I'll be playing a little video in just a minute so you can know more about it. But I really just wanted to take a moment to thank you so much for joining us today. If you're watching this, you're watching it on YouTube. We are simulcasting today on YouTube as well as GoToWebinar. Now, if you're watching on YouTube, you can continue watching on YouTube, and if you want to see the recording, this is where you come back to, because this is where we're recording it. And while you're here on YouTube, go ahead and like and subscribe, and make sure you hit that bell so that when you can be notified when we have live events throughout the week. And we usually have 2 to 3 live events a week, so it is definitely worth your time to click subscribe and click on the bell. Also, really quick, today's 8-hour presentation will begin now. Excuse me, because this is always a little tricky for some reason. Just a second. Okay, so it's why is it so hard to understand? Okay, so today's presentation will start with there it goes. Steve Bigalow. That'll be starting here in about 8 minutes. He'll be talking about accurate candlestick breakout trading. Then we'll have Jeff Tompkins, the Slingshot setup. Then at 12 o'clock Eastern, we'll have Dominating the Market with Vince Fora. And if I can get this stupid thing to work, Jeff Gibby, our own Jeff Gibby, finding a trading strategy that works for you in 2021. Next will be Steve Primo and the ever-popular force of nature, Oscar Carboni. And finally, Kevin Nelson. So, it's a lot to look forward to. It's a lot to take in. And remember, if you don't have 8 hours to sit and watch the whole thing, you can just come here, right back here, and watch the whole thing at your leisure because it's recorded right here on YouTube. Now, did I mention? Oh, so the one thing. Oh, Dave's bringing me my coffee. Just a second. Sorry about that. I really needed this. Okay, so if you are watching this on YouTube, that's great, but you might want to go ahead and go to metastock.com/traders-summit and register, because if you do register, then you can get the freebies that are included that each of the presenters provides. I believe I've already put that link in the chat. I have metastock.com/traders-summit. It takes just a second. If you just want to go there and check it out, it's a good place to see who the presenters are and what they're talking about today and what time their presentation is at. It's also a great place to check out the freebies and make a decision as to whether you'd like to register or not. When you do register, you will get an email from us, but it's very simple just to unsubscribe. Well, actually, you can unsubscribe at the point you register too, but we are responsible emailers, so don't worry about that. All right, I think now I'll play our little Metastock video. Oh, by the way, as you're coming on, make sure you say hello. For instance, Real Racing, good morning. Jeff Gibby, good morning. Thomas Jones, whose name we always enjoy making fun of. Good morning. I'll let it go, Tom. And that's all I see right now. Don't hesitate to say hello. Don't hesitate to be conversive and make lots of comments today. We really encourage that. And right now, let's listen to a little video about Metastock. Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, thank you so much. Did you enjoy watching that? I made that in my basement last June under quarantine. Because what else are you going to do? Hey, if you'd like to know more about Metastock, stick around because we'll surely be discussing it. Most of our presenters do use Metastock, and many of them use it actually in the presentation. Also, Jeff Gibby will be talking about it during his presentation, surely. Or right now, if you'd like to learn more, go ahead and give us a chat, metastock.com/saleschat. The coworker, the handsome young man that just, bless his heart, bought me some coffee, is David Derricott, and he can help you. We also have Robert on the line today, so if you have any questions about Metastock or anything that we're talking about today, go ahead and chat into those guys or call them at 1-800-8... I can't remember the number. I'll chat it in just a second. So we got about a minute to go. I'm going to go ahead and mute myself, but I do just want to encourage you... Oh, hello, Vincenzo. Ciao. I do want to encourage you today to like and subscribe right now. Just go ahead. You got a minute. What are you doing? Just go ahead and like and subscribe to our YouTube channel. And also, if you have a little time, go register so you can get the freebies at metastock.com/traders-summit. All right. See you in a bit.
Hello, everybody. I hope you're doing well. My name is Chef Gibby, and I'm looking at the group of speakers today that we've got lined up for you today. It's awesome. So I want to welcome you to the Online Trader Summit, February 27th. I hope you have a great day, and I know we're going to have some great speakers today. So let's go ahead and get started. We're going to get started, though, first with our legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So when we start to, we're not going to be recommending trades. What our goal is today is to kind of help you kind of understand what you should be looking at when you look at stocks. We've rounded up some really good experts, so we have a great lineup to help you do that today. So I do want to thank everybody for coming. It's good to see a lot of you here. Vincenzo, Thomas, Real Racing. For those of you that are joining, go ahead and kind of type out where you're from and say hello in the chats, and let's make it an interactive day. These things are better with questions. They're better with audience participation, and we would encourage you to do that. I do want to spend 2 seconds to say thank you for Stocks and Commodities. It's already more than 2 seconds. They sponsored every single Trader Summit. We've been doing them. We've been doing them for 8 years. They're a great magazine. You can get a free issue. If you go to metastock.com/Trader Summit, fill out the registration form for today's event, you can get a free issue of Stocks and Commodities magazine. You can also sign up for like a free 2 weeks access to Steve's room and a bunch of other prizes. They're all available there just by filling out the registration form and telling us which prizes or which complimentary things that you want. We're Metastock, if you're not familiar. We'll be hosting the presentations and the speakers and using the software today. If you haven't heard of Metastock, well, we'll be talking about it all day today. We like to brag a little bit that we've been rated #1 in our price category for more than like 25 years in a row. We'll be talking about it today. We're very, very proud of the software. We're proud of our support and ourselves and all that kind of stuff. So we'll get kind of those things out of the way. Our first guest today is Mr. Stephen Bigalow. Stephen is a good friend of mine. I've had the pleasure of traveling across the country with Mr. Steve, and he does a great job. A lot of the stuff that I run on a daily basis or explorations that we kind of created with Steve. He has some really, really good patterns. The thing I like about Steve is he does a really good job of kind of understanding, but also being able to explain with good humor the different patterns that he's looking for. So I'm going to go ahead and get him on the line here. He is here. How you doing today, Steve?
Good, Jeff. Welcome, everybody.
I'm going to make you the presenter here. So there comes the instructions. Good morning, Thomas, Anthony, Vin, Mike, Ken, Sheldon, Anton, Ruslin, and Tony. Welcome, everybody. Thanks for telling us where you're from. And you should have the screen share controls coming over to you, Steve.
Show my screen. Also, do I have the right chat up? If anybody has questions as we go along, feel free to ask questions. But the first question,
go ahead.
I see the chat where you and I talked. Let's do this. My normal first question is, how many people have seen my presentations before? I guess Y for yes, N for no.
Hello, Gary. Steve, what you'll want to do if you haven't expanded it yet is open up the questions pane, because that's where all of...
There it is. Okay.
You should see good morning from Anton. How many people have seen from Steve before is the question. Hello, Lee. And I'm going to go ahead and let you get started.
Yeah. Now I lost the questions box. Where did I? Well, if that isn't a fine howdy do.
If you click on view and then questions, you should be able to kind of just click and get it back. But you do have Anthony saying yes, Richie saying yes, Ken yes, Sheldon no, yes. There's too many. I can't read them all.
Okay. Well, what's the percentage look like?
I'd say it's roughly, actually, probably going to guess it's like 40% have seen it.
Okay. Well, I just clicked on the questions box and it disappeared. That's just great.
Up at the top where it says File Options View, if you click on View, you should see questions, and there should be a little check mark next to it if it's visible.
Boy, I don't even see that up there. And I'm trying to expand this. File Options View, I don't see.
It's above sharing. It's just the menu.
Okay.
Yeah, up at the top it says File Options View Help, and then underneath that you have kind of where you pulled the questions out. It'll be the View button there. It's on the main console.
There it is. It's over on
find
another
it?
screen. Okay, now I see it. Okay. Now
Good.
I just lost it. That's just what's happening here. It's like I just had it, pulled it over here, and now it's gone again. So I will find this.
Russell says, I got fascinated with your presentation before from YouTube.
Okay. I don't know what has just happened here. So I'll just get going and Shazam. Why am I not able to see the questions box?
Let's see.
Jeff, maybe you could monitor the questions for him if he's not able to.
Yeah, do you want me to kind of...
you could do that. So do I hit start broadcast? Okay.
No, yeah, the broadcast should be started, and it
Okay.
is.
All right. Sorry about that, everybody. Welcome. What I'm going to do today is we've seen, or if you've been here before, you've seen a lot of the logic of candlestick analysis. Basically, the candlestick signals are merely the graphic depiction of human nature. And I always start off by saying prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's exactly what candlestick charts does, is that it illustrates what's going on in investor sentiment. So there is a very simple way for identifying very powerful trades. And that is basically, you've got the easy scanning techniques of Metastock that can show us when a breakout is occurring. And then we've got what we call Candlestick Rare, which stands for Research Analysis Reverse Engineering. I used to tell people that you don't need to know what the fundamentals are of a company because that's already built into the candlestick charts. People have made their decisions based upon what they've researched as far as the fundamentals, and that was their decision for buying or selling. Except now we're taking that a step further. I'm coming back around 180 degrees and saying you use the research when you see a breakout, especially in these sectors like the biotechs, and right now the electric vehicle sector is extremely strong. And the electric vehicle sector is obviously going to have a very huge market share coming up over the next couple of years. So I always like to talk about electric vehicles because there's so much potential, and even allowed to say that little Johnny's mom found that little Johnny discovered static electricity and he was going around and shocking everybody. So she grounded him. So with that, what we want to illustrate is how the breakout sessions allow us to get in very strong trades. And this happened to just be an accidental situation where I saw this breakout while I was talking to my brother on the phone. And this stock right here, OCGN, had no idea what they did. It traded flat for months. And all of a sudden it broke out. So the simple process of what we call rare was we went back to see why it broke out. And it turns out they had a COVID vaccine that was approved in India, and yeah, India. So we started buying the stock at 73 cents. Now, was that because we knew what was going on? No, we saw there was a breakout, and we went back and researched what the news was telling us. As you can see, what he bought that day at 73 cents, we sold out a couple months later up here at the 17 range. And this is basically boiled down to that when you saw this move and saw it break out, that told us, let's go back and find out what was causing that. So once we were in it, we knew we had, or when we analyzed what that information was, that they were approved for vaccines in India, we figured there's probably going to be more upside. So this is a very simple process. Every time it breaks out, we can see why, or go back and research why. Did the same thing over here. It drifted for a couple months, and then they had another announcement of, I think, going into a partnership with a biotech firm in India, and caused that next run. And then this is what happened on Friday. That biotech firm that they are in partnership with got approved for selling vaccines in, I think it was Brazil. So that gives us the prospects that there's going to be another run. So this is not rocket science. This is just common sense built into when we see a breakout situation. There are some breakouts you don't want to buy. For example, if somebody does a upgrade and the stock pops, well, when you analyze that, you realize there wasn't any real major change of investor sentiment. It was just an aberration of supply and demand. So these are the things that we have the advantage of knowing what patterns to be looking for. The fry pan bottom is one of the major candlestick patterns. It's a buildup of investor sentiment. And then when it breaks out, it tells us not only is the pattern kicking in, but the prospects of a price move being accentuated is extremely strong. What it really boils down to is it puts us in a situation where the probabilities of being in a strong trade is greatly in our favor. CCIV, one of the electric vehicle sector stocks, broke out after trading like this. All we had to do is go back and say, all right, what did I say we, in our chat room, since everybody's now acclimated to the rare system, basically somebody said, well, they had this announced. And when you analyzed it, it basically told us there was probably more upside. And how long was our upside? That's very simple, as long as it stays above the T line. So this becomes an alert to tell us, all right, we need to research and see if that whatever they announced today is going to create more upside. So this is not a difficult process. This is merely identifying the pattern and our best friend breakout, and then seeing why they broke it out. So then the next prospect is, how long do you stay in this trade? Well, with candlestick analysis, we have the T line. That's the 8 exponential moving average. And the T line has Fibonacci characteristics, meaning it acts like a natural support and resistance level of human nature. So the most powerful combination of candlestick analysis is that if each individual signal tells you, oh, there's the questions up there. The T line is the 8 exponential moving average. Let me see if I can make that bigger. Oh, dang, I did it again. For some reason, I can't get, there it is over here. Okay, hold on. I'll figure this out. There's everybody's questions. Are these stocks with options? They can be. Is that a MACD? No, I don't use MACD as a primary analysis. How do you define a breakout? Which indicator? A breakout is just visually seeing that there's been a big price move. So let's see, now that I found everything, okay, now I can get going. The T-line is the 8 exponential moving average. It acts like a natural support and resistance level of human nature. So a very simple combination. If you see a candlestick buy signal, and remember, the candlestick signals are the graphic depiction of investor sentiment, telling you what's going on in investor sentiment, and the T-line acts like a natural support and resistance level of human nature. When you combine those two, you've got an extremely high probability trade. And the T-line rule is if you see a candlestick buy signal and a close above the T-line, you can stay long as it stays up above the T-line. You don't see a sell signal or close back below the T-line. So real quick, on our charts, we have the 200-day and the 50-day simple moving average, because every major money manager in the world uses those moving averages to make their decisions. What we can see graphically is what those decisions are at that level. Then the T-line is the 8 exponential moving average. And I tell people, the nice thing about candlestick analysis is the signals work, or we wouldn't be looking at them hundreds of years later. Put the 8 exponential on and see how often it acts like a natural support and resistance level. The caveat to this is the further away you move from the T-line, the higher the probability it's going to come back and test it. So that equates to the Japanese rice traders showing us where most people buy. They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. Does rare analysis mean following the news, or is it more detailed? No, it's the other way. If you see a breakout, I'll get it. Then you just go back and Metastock, you just click on the chart and it will bring up the news. So if you can analyze that news and say, wait a minute, this has got more, this is going to affect this stock further in the future, that's when you start buying. Are the EMA, yes, everything, Thomas, is the same. This could be a 5-minute chart, a daily chart, a 1-minute chart. The candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. How much time to react? It's not like it's all of a sudden going to, Lawrence, that a price is going to move without you. It's going to start the uptrend. That's what we're looking for. Okay, so the same thing on the downside. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. Again, I was the worst investor in the world before candlesticks came along. I was a stockbroker for 8 years and got out of the business because I realized the brokerage firms had no more idea about what was going to move a stock up or down than the man on the moon. When candlesticks came along and I started looking at it, I kept thinking, man, this makes sense. And the more I looked at it, the more sense it made. So instead of being the worst investor in the world, at least now I was starting to make a little bit of money. And then when I put candlestick or the T-line on there, it started making a lot of money. What is the gray line above the T-line? Oh, there's a little, sometimes there's what we call the 3T line. This little green line, it works in conjunction. And then I also have the 34 EMA on the chart. Again, this is the nice thing about candlestick charts. It's not very cluttered because the important factor is the signals themselves. So Workhorse, not too long ago, remember they came out with an announcement? Well, let's did it the other way. We saw Workhorse trading up pretty strong. And then we went back and researched, and it was basically the government saying that by the year, 2025 or something, all their vehicles are going to be electric. So we saw this breaking out. It had a nice buy signal right off the off the 50. So we were buying on this day. How long do we hold? As long as it stayed above the T line. I don't use RSI. You can use RSI. I use stochastics. 1233. Slow stochastics. And again, we're not buying stochastics. We're using it to tell us, are we in the overbought or oversold area? Just very logic reasoning from the Japanese rice traders. If you see a candlestick buy signal in the oversold area, more than likely you've got a reversal. If you see a candlestick sell signal in the overbought area, you've probably got a downtrend reversal. Or if you see a candlestick buy signal in the overbought area, it doesn't mean very much. Or a candlestick sell signal in the oversold area doesn't mean very much. You want to see the buy signals occurring in the appropriate place of the trend. Iran, candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. It doesn't pertain to one thing. It's anything that has human nature in it, or human emotions. Stocks, bonds, currencies, commodities, tulip bulbs. Anything that has fear and greed. So here's one that we got into because of the gap up. We checked the news, and it just puts you in the right place at the right time. So if you can see the breakouts occurring in the patterns that we recognize, a lot of people in our chat room got into this one early because there was your scoop pattern. Look how it looks like a scoop, and look where it broke out. This is what you call your best friend signal, one of the top or most powerful signals, which is a doji followed by a gap up. And this is what we're going to be doing in a training session this next Saturday in our power trade mini session, is putting 2 plus 2 together. If this is a doji best friend gap up through the 50 and a scoop pattern and above the T line, that puts us in the right place at the right time. Then it's very simple analysis at that point. How long do you stay long? Until you see a sell signal and a close back below the T line. Or if you start moving too far away from the T line, we go to our 10-minute chart. Okay. Call exits. Yes, there's candlestick buy signals as well as there's candlestick sell signals. This works on the indices. I didn't finish my statement, Imran. It works on everything. And I'll show that here in a minute. When the market is selling off like this week, are there signals still working, especially on the long side? There are. You've got 9,500 trading entities. And using the scanning techniques, Metastock scanning techniques, in less than 10 minutes, you're going to find the best bullish trades. There's always going to be bullish trades in a down market. But logic says, if the market's rolling over, what are your probabilities? In the short trades. So here's another scoop pattern we made a quick pop on, because you can see the pattern, you can see where it broke out. And if we went back to check our news, told us there was probably something that's going to substantiate further upside. So essentially, what does this illustrate? It told us coming out of this fry pan bottom, there was something new going on in investor sentiment. That alerts us to research what that new information was that was creating a change of investor sentiment. Whoops, that wasn't today. But there's your best friend breakout. Again, a doji followed by a gap up. Now, let me go back for people that haven't seen these presentations before. There's 50 or 60 candlestick signals in the candlestick universe. I've broken them down over the last 30, 40 years to 12 major signals, 6 longs and 6 shorts. And this, those 6 longs and 6 shorts, you don't have to learn all the rest of them. I tell people don't boggle up your mind by trying to learn too many. If you learn the 12 major signals, you're going to have more trades than you'll ever be able to handle. And the 12 major signals are the ones that are going to produce the strongest trades. Now, a combination is the doji. A doji is that little indecisive trading day, telling you the bulls and the bears don't know what, they're indecisive. And then that gap up tells you they've told you what their decision is. There's about 6 or 8 candlestick patterns. And the reason they work so well is that human nature works the same way time after time. That's why we recognize patterns in the first place, is because human nature works the same way time after time. Oops, hold on. I've had to scroll past me here. Can you elaborate what you mean by candlestick buy and sell signal? Joseph, yeah, I'll show you some. They're signals. They're the candlestick formations. That's just going back even to the basics. If it opens here and closes above where it opens, it's this bullish candle, a white candle. If it opens here and closes below where it opened, it creates the dark candle. That gives you a heck of a lot more information on what's going on in investor sentiment than just a bar chart. Sheldon, you can. And that's a whole different, one of the trainings we do is your entry and exit strategies. When using Metastock Explorer, do you look for a certain value for the slope to narrow down the trades? No. The number one criteria is the signal itself. It's because the slope has nothing to do. And a lot of people say, "Well, do you use when you're buying options? Do you use the Greeks?" And the answer is no, because the delta on this is going to be completely different than this right here. This information tells us we've got a strong price move. So when you saw the weed stock start moving, look at our little fry pan bottom. There's your little best friend breakout. That puts you in the right place at the right time. So you can see eventually what happened. This is a signal. This is called a hanging man signal, one of the 12 major signals. It's called a hanging man because there's his head and there's his legs dangling down. It is a reversal signal. Told you that if this opened lower the next day, you close it immediately. In this case, look how far away you are from the T line. And what's the simple rule of the T line? The further away from the T line, the more likely they're going to come back and test it. That just gets you much better prepared to taking profits at the appropriate time. So here's another one. This is what we call 2 + 2 analysis. You can see that it pulled right back to the T line, did a doji, did a little best friend gap up off the T line, and broke through this level. What can we assume? Well, there's our fry pan bottom. This is what we call the classic pattern. A fry pan bottom, a strong price move. And then this is your J hook pattern. Kind of a J hook. And we know that wave 1 and wave 3 are going to be pretty much the same value. So even if you miss this move, recognizing the best friend breakout through that resistance level, we knew approximately what that next move was going to be. Same thing here. Wave 1, wave 2, wave 3 breaking out. Again, this is what we call a double doji setup. They took it up, consolidated, indecisive, opened again. You could be buying on this day because that would tell you they're breaking out through this level and that this move right here is going to be the same magnitude as this move. So this is nothing more than identifying what the Japanese rice traders have illustrated for us for hundreds of years. I always mention that the Japanese rice traders didn't become wealthy. The Japanese rice traders became legendarily wealthy in Japan. They were the financial powerhouses, and they did it on the most basic of all commodities in the world, rice. You can apply candlesticks to anything else, and that's why they usually have me on first, because you're going to see a lot of good speakers today. If you use their trading methods, but you just put candlesticks on your charts, you're going to see much more clearly as far as confirming recommendations. I do it the other way. I use the candlestick charts to tell me what's going on because I know it's got extremely high probabilities of working correctly, and then see if everybody else's information is confirming. So this is what we call, again, the fry pan bottom. This is what we call a McMuffin. This is a morning star signal. It's a down day, a day of indecision, and the third day closes more than halfway up this candle. It usually occurs when you're in the oversold area. But the fact that they did it here, and then this is what we call a doji sandwich. A big up day, a doji, and the doji rule is very simple. The price will usually move in the direction of how they open after a doji. So if we open this, it opens positive, we know that we're probably going to have a same magnitude trade as this day, or the doji sandwiched in between. So we call this a McMuffin because this is your morning star signal followed by a doji sandwich, or your morning sandwich. Now, obviously, this was not a Japanese rice traders terminology. Oh, I was wondering why. Sorry, I didn't scroll down. What does a black-filled candle? A black-filled candle is that it opened and traded lower, but it was still positive on the day. Now, I usually take those off because all I want to do is see the red and white candles. Oh, you can use whatever trading platform you want to. I use Thinkorswim because out of my Thinkorswim account, I can trade stocks, options, or futures all from the same account. Richie, that question is not real relevant. It doesn't matter whether it's percentage-wise or price-wise. I'm just going to see that if wave one, and I don't have a wave one, that if wave one was so big that when wave three gets to that proximate area, I'm going to be more cognizant of whether there's a reversal signal showing up. Saffron, I've written 3 books on candlestick analysis. And the best one, or the one with the most meat in it, is High Profit Candlestick Patterns. And then I've written one to keep your emotions out of your trading. And then the first one was published by Wiley & Son, gives you more of just a basic background of candlestick analysis. Are all your moving averages EMA? No, the 50 and the 200 are simple. The 8 and the 34 are exponential. You have a chart of your 12 best candlestick patterns available. Oh, not a chart, but a list. Yeah, that's yeah, I think you just have to go to our website and you can just copy and paste it. Can we see in live market? Right now, yeah, all these are slides for this presentation. I do have the charts. Hold on for a little bit. When you use Bollinger Band, you can put whatever you want to on these charts. If somebody says, try the XYZ indicator, if I put it on and after a couple of weeks I see it's not really working, I'll take it back off. But here is the most powerful aspect of a candlestick chart, is the signal itself. Then everything else is just kind of a confirming indicator. Or the McMuffin. Let's see, what was the question, David? Oh, on VCT is not in the oversold area. No, but it's kind of, you can see how it's kind of a wedge breakout. So even though it's not, I should clarify that you're looking for a candlestick signal in the oversold area. You're looking for candlestick pattern breakouts, usually going to be occurring when stochastics are up in the overbought area. Okay, so let me make sure I'm not getting behind. Ooh. All right, so there again, there's that scoop pattern. There's your morning star signal in the oversold area. There's your doji sandwich that breaks out. This is what we call 2+2, when you can add multiple indicators that are telling you that there's a strong bullish move about ready to occur. It just improves the probabilities of not only being in the right direction at the right time, but in a very strong price move, much greater than just merely an uptrending stock in an uptrending market. The classic pattern is a fry pan bottom, which creates a very strong price move. And then usually what happens is there's profit taking that creates a J-hook pattern. So we call it the classic pattern because usually after a strong price move out of a fry pan bottom, then you're going to see a J-hook pattern setting up. My stochastics are 12-3-3, and that's nothing set in stone. I just sat one night many decades ago and said, all right, where is the bottom corresponding with stochastics? That at that time, the norm was like 14.55, but I'm a swing trader. My trades last anywhere from 2 to 10 trading days, and I needed something a little bit faster. So all I did was go back and say, all right, where on this chart does it correspond where you have a top, you have a bottom, that kind of confirms your the reversal. So somebody was asking, what are the signals? This is a bearish engulfing signal. This whole body of this candle engulfs the body of the previous candle. This is a bullish harami. On Western terminology, it's known as the inside day. In Japanese, harami means pregnant woman. There's her body and there's her little belly sticking out. It tells you the selling has stopped. We look for bullish confirmation the next day. This is a morning star signal followed by a doji sandwich. A morning star signal is a strong reversal signal telling you you're probably in an uptrend. A doji sandwich tells you you're probably in an uptrend. So when you combine the two, you get a double dose of probabilities being in an uptrend. So anytime I see a setup, there's your bullish harami. There's indecision, indecision, indecision. There's your bullish confirmation. You can see it's starting a scoop pattern. And then look what happened at the breakout level. It did a doji sandwich. What did it tell us about our resistance level that everybody else would be watching as resistance? We're looking at this as a handle, and this being the scoop, giving you the slingshot effect to the upside. So if you don't need to know formulas, you don't need to know all the technical stuff. All you have to do is analyze what's going on in human nature. That you're basically, now here's kind of your classic pattern. There's kind of a fry pan bottom that broke out, strong price move. That was your bearish harami, a doji, and a harami is where they open and close inside the previous day's trading. And then look what happened right here. Now here's the most significant part about illustrating the T-line. The T-line acts like a natural support and resistance level. We have it on our chart. But the significance is, notice where it reversed and came back up. That's significant in the sense that we know it's a support level, but the other aspect to it is nobody has the T-line on their chart. So it's not like everybody in the world is watching where it's going to support because nobody uses the T-line. So this is just kind of a added benefit of knowing where a natural support level is. So if we were long and we closed out right here, we could be buying back here or we could be buying here. This tells us if a J-hook pattern is starting, which we saw the evidence of that supporting on the T-line and buy signals, we could either be buying here, anticipating a breakout, or it could be a little bit more conservative and buy here, knowing that it did break out. can you kindly explain the T-line concept again? It's a natural support and resistance level of human nature. One of my first private training students came down from Anchorage, Alaska, Rick Sadler, and we sat in front of the screen for 3 days. He went back to Anchorage and he called me back 6 weeks later and said, hey, look at the 8 exponential. It works very effectively. And again, the nice thing about candlestick analysis is the signals are what work. Whatever else you put on is just a confirming indicator. So if you put on something and it doesn't work, take it off. When I put this on, I discovered, like he found out, that this acted very strong as a natural support and resistance level based upon the 8 exponential moving average. All right. I use 8 sharing uptrend. Stock does not go back to 8, so I use 5 in this case. All right. So this is what we call a bobble breakout. This is your J-hook pattern. Strong price move, pull back. There's your doji sandwich. So we either know it's going to test this level, and if it failed, we close it out, because what would that be? That would be a double top. The fact that they go through, what do we now calculate? Wave 1 and wave 3. But we call this a bobble breakout because it's even more defined. Look where the selling was, at a level where everybody else was watching, right here at the 200-day moving average. So when it comes back up through here, it has a much more credibility to it, because if there was nothing here, most people wouldn't recognize, or they don't trade a J-hook pattern, but most people are watching to see what it does at the 200. So we can see that it's setting up a J-hook. So we know that if it closes here, we definitely, if we want to buy more or add calls, we can be buying here because it did break out through a level everybody else is watching. So we just have a head start knowing here's our buy signals off the 50. Here's our sell signal, a bearish engulfing signal after they failed at the 200. Here's our bullish doji sandwich after a little bullish engulfing signal. So we can be buying knowing we have a high probability that this wave right here will be the same as this wave right here. Now, will they always be exactly the same? No, we just know at this point we've got the probabilities that we're going to be heading up higher. Okay, still, for me, audio and video is loud and clear. Okay, good. What do you use the 34 and the 2 SMAs for? The 50 and the 200 is where every major money manager in the world uses those to make their decisions. We're not using those to make our decisions. We're using those to see what everybody else's decisions are at those levels. And we can see graphically that they were not going back through the 50, and now we have a left-right combo. It's a doji followed by a bullish engulfing signal. Now a doji sandwich. That tells us they weren't failing or going back through the 50. And what happens to everybody's confidence when they can see that it's supporting to the 50? They start buying again. We can see it immediately. So we're in at these levels instead of buying up here somewhere. And let's see. Is the 1, 2, 3 wave stronger than the 200? Yeah, that's apples and oranges. One's, yeah, 200 is just a support or resistance level. Let's see. All right. I think I got those questions up to now. Oops. I better go fast. Okay. The doji rule. The price is going to move in the direction of how they open after a doji. So if you can see dojis right on a 50-day moving average in the oversold area, and they trade it positive, confirming, and closing above the T line, and then there's your doji sandwich. The kicker signal is one of your strongest signals. Fisker. did a kicker signal a couple days ago. So everybody's saying, look at Fisker, it's up. We went to the news. Fisker was doing a combination with, I think it was TopCon. So we were buying. We're still in this one because of the kicker signal. So again, this is not rocket science. When they do a kicker signal, opens here, closes here, opens above the previous day's open and goes positive, you've got a strong price move. This is a bullish flutter kicker. If you took out this little doji flutter, you basically have a kicker signal. This is a trend kicker. Look at our little J-hook pattern and look how they opened it here, closed here, then opened it here. That told us there was still a lot more upside to this trend. Same thing right here. There's our little kicker signal that kept the uptrend going. And there's a kind of a trend kicker telling you it's going to go further. Whoops, same one. There's another trend kicker signal coming out of a fry pan bottom. Puts us in the positions of being in the right place at the right time. That kicker signal is where it opens here, closes here. The next day, they open it at or above the previous day's open. So the gap's already built in there, and it goes the opposite direction. Essentially, the investor sentiment has been kicked in the opposite direction. Here's a doji sandwich right at a breakout level. And again, kind of a bobble breakout. Remember the doji rule. They're going to move it in the direction of how they open it after a doji. If they open this positive, we're buying immediately because we know it's broken out through that pattern. So here's your scoop pattern with a breakout, 2 plus 2. Look how they broke out not only through the handle with some strong or reversal signals, but when they opened it positive, it told us the 50 wasn't going to act as resistance. We were in an uptrend. Again, we looked at this one. So the classic pattern breakout results produce two things. One, an extremely high probability that you're in the right direction. And two, the magnitude of the move is going to be extremely strong. So here's the markets. This is how you can identify what the nature of the market is. Notice over the last 3-4 weeks, the Dow was doing lots of indecisive trading and they couldn't get up through this resistance level. Then, what was it, Wednesday, they broke out. Where do most people buy? They buy exuberantly at the top. This right here is a massive reversal signal. At the same time, we saw how they gapped down through the T-line on the NASDAQ. And what's our T-line rule? As long as you're trading below the T-line, you're in a downtrend. So that told us when we started seeing the NASDAQ trading below the T-line, we would start looking for sell signals. So we had kind of a reverse, what we call cradle pattern, and it closed below the T-line. What do we do here? We stay short until we see a candlestick buy signal. So just simple logic. If the indexes are starting to show weakness, we want to start scanning for weak trades. AZN, there's your bearish best friend, a doji gap down. There's your doji gap down right here at the 50. Even more evidence that they're still selling this off. Whoops. So I guess that's about all I got. We're going to be doing a what we call a mini spotlight next Saturday. They're supposed to last for an hour. They usually go for 2 hours, but it's concentrated identity of using convergence analysis, and we call convergence analysis that if there's one confirming indicator that tells you a reversal has occurred, if there's 2, 3, 4, or 5 that you can see all in a visual glance, it just produces that much more probabilities. So what we're looking for is charts like this, where we got a bullish engulfing signal in the oversold area, away from the T-line, followed by a doji sandwich, followed by bullish confirmation above the T-line, and then setting up for a scoop pattern. So you start adding this all together, you're dramatically improving the probabilities of being in the right place at the right time. So the powerful aspect of using Metastock scans, finding the breakouts, and then going back and seeing if that signal warrants identifying what that information was that created that signal. That's just kind of putting common sense all into graphics. What's the difference between a kicker? A kicker signal occurs at the bottom where it creates a reversal. A trend kicker is the trend is already in existence, and you have a day in the uptrend where they sold it off, and then the next day they gap it up and go the opposite. You're already in the trend. Do you use stochastics as divergence? No. Stochastics is only an illustration of what's going on in the current trend. Has nothing to do with what happened 3 days, 3 weeks, anything like that beforehand.
We do have two questions.
Go ahead.
Steve?
Yep.
We do have two questions I wasn't able to kind of address here in YouTube. I answered most of them. It's been a very active group. The first question, though, that I have for you is Grace wants to know if you can define the 2 + 2 pattern. Again.
2 + 2 is just merely saying, if I see a buy signal, let's see if I can find something here real quick. If I see a buy signal and I see a pattern setting up, that's just kind of saying 2 + 2 is going to be a much bigger number. It's just it doesn't have anything to do with the number of indicators. It's just saying 2 + 2 says we're adding up to something bigger.
While you're on this chart, Anne wants to know where you would place your entry. I think that's a really good question.
If I was aggressive, now, first of all, if I was short, I would have had my safety stop at the previous day's open because we're in the oversold area, and logic says if there's enough buying strength in the oversold area to come back up through the previous day's open, you want to cover your short positions. I might be buying on this day, hoping that the next day was going to confirm, or I would definitely be buying on this day because now I've got a bullish engulfing, a doji sandwich. A bullish engulfing is one of your 12 major signals. The doji sandwich implies there's going to be more upside. So if they open positive and start trading positive, I can assume there's going to be more upside because of the doji sandwich. And I can assume the T-line's not going to act as resistance. Now it acts as support, and that's further confirming my scoop pattern. So it's not like we're analyzing one thing. We're analyzing the whole gamut that this is a scoop type pattern. You're starting to see buying, and it's confirming by closing above the T-line. There's one very simple, dramatic statistical result, and that is if you see a candlestick buy signal and a close above the T-line, your probabilities are dramatically enhanced that you're in an uptrend. If you see a candlestick sell signal and a close below the T-line, if you were long, you close it out because the probabilities are dramatically enhanced that you're now going to be in a downtrend. Are these charts 10 minutes, 30 minutes? No, these are daily. But they could be, I mean, this could just as easily be a 5-minute chart. I trade soybeans, cattle, the dollar off the 10-minute chart each day if I'm in intraday trading. Yeah, how important is the 3T line? The 3T line becomes more relevant the further away it moves from the T line. All right, so how many people are watching the webinar? All right, a lot. Oh, just thousands, I think.
Let's see. One comment for you from YouTube that I missed. Grace says, I've learned how to read charts from Steve better than anyone else in the world. He makes things so simple. So I thought that was a pretty good. And Long says, thank you for the great presentation. And I just put that class is next Saturday in the room. It was only like $49, right, Steve?
$47, yep. And our mantra is you're going to get well more than your money is worth. It's more to just have people get in there and see the logic of adding everything together so that you're in a strong trade.
One of the questions that we get a lot, Steve, I want to say thank you for coming in today. I do want to show how the scanning works and kind of talk a little bit about the Metastock add-on. I do want to say thank you. I've learned a lot from you myself over the years, and it's you've been a great business partner. And thank you for everything you've done for my trading. So
thank you.
All right. Let me go ahead and I do want to kind of turn on my screen sharing real quick here. And let's just go ahead and make a few little changes. Okay. One of the questions we get a lot is how do we scan for these scoop patterns? And what I want to do is actually just show you, because one of the things I love about Metastock is how easy it is to find things. You know, if you're an optionable trader or if you trade stocks here in the US, you're kind of spoiled for choice, right? There's thousands of instruments you can pick from. So one of the things that we do a very, very good job of is actually kind of helping you identify exactly what stocks are out there. So like if you're an optionable trader and you want to go in and find a list of stocks that have a good opportunity, whether that's like a Doji best friend or a scoop or any of the patterns that we kind of have built for Steve, you have the ability to do that. So right here, this is just a picture of the product we put together with Steve a number of years ago. It's been one of our most popular add-ons that we have, and it's called the Candle Profit System #2. And if I go over here, I can show you kind of a list of the different things that we scan for. These are the multiple day patterns that we scan for, and here is a list of the single bar scatter patterns that we scan for. And what I have the actual ability to do, I'm going to go ahead and go into Metastock real quickly here, because we have 4 minutes, but I can show you that within 4 minutes. It'll be a little bit abbreviated from, I just need to go fast. So when I attach the Steve Bigalow indicators and like templates to the chart, you'll notice that it's going to apply all of the indicators that he was using. I've got a volume one applied here, but that's not actually, and there is one that includes volume just because I like to combine Steve's work with volume analysis and see kind of like what the volume looks like. But you'll notice that a number of patterns are just going to be labeled on the chart. Like right here, you had a scoop. Here you had a doji followed by a doji best friend, followed by a doji best friend, followed by a scoop back here in early November. And so all of these are labeled and identify. You can put any chart you want to. There's even a bit of what we call a commentary function that's going to kind of go in and tell you what that means. And I'll show you that super quick here. Like if I come in here, if I wanted to see what the bearish engulfing pattern was, it's going to tell me what that bearish engulfing pattern is. It's going to also tell me that there's a dark cloud. And, you know, if you have a little bit of time, you can read. I don't have a lot of time, but you can read. It kind of explains the pattern to you. In addition to that, because all of these things are programmed, and we spent, I think, a year and a half kind of helping create the initial version of this. But since all of these are actually programmed, I can say, okay, I want to find out the ones that kind of match on this screen for me. And so if I want to run a scan, this is the Power Console of Metastock. We call our scanning the exploration, or the Explorer. And go ahead and click on that. And I'm going to do right here, I've got the Doji Dynamite, or all of the CPS scans up here, just in a list to make it easy to show you. And if I highlight over them, this one will allow us to look for Doji Best Friend, Doji at the top, left, right, bullish, and then there's J-hook patterns and major patterns and power signals. And you just pretty much select the ones that you want to scan for. If I want to look for any of Doji Best Friends that might have happened in the market on yesterday, Friday, I can go ahead and select that. What I'm going to do is, looks like I'm not connected to the internet, but that is okay. Or I'm connected to the internet, obviously. It looks like my Metastock connection is back, but I'll just scan this offline last real quick. We'll go ahead and click on Start Exploration. What it's going to do, when I start this, we'll go ahead and do the online, the local instruments right here. We'll go ahead and click on OK. It's going to scan through all those 4,324 US optionable stocks. It's going to eliminate 98% of them is what it said eliminating right now, and just show me the ones that have the particular Doji Best Friend or the scoop or whatever happens to be in the scan that I'm running right now. So it works really, really well. This Doji Dynamite is actually a scan I like to run every morning. It gives me a lot of good ideas in terms of what I might want to look at. So if I'm looking at Doji Best Friends, you'll see that the Ultra Short Australia and ETF and the Ultra Short Basic Materials ETF both had Doji best friends. Those were the only Doji best friends that existed in the market. There's quite a bit of Doji at the tops right here that we could look at. But if I'm just looking to kind of find something to go long on, maybe I'm bullish. I don't, maybe I could go in and I could see the Doji best friend. I could easily kind of identify what kind of exists in the marketplace. The doji with what we're looking for is we're just looking for that doji followed by the gap up. When you see that, it's something that you can kind of take action on. So I like to scan them in the morning after the market open, just to kind of get a list of things that I might be able to trade the next day. So it's a very, very cool product. We're out of time, but it does identify those patterns for you. It gives you the exploration so you can scan for them all, the expert advisor with the commentary that labels them and explains them to you off to the side. So definitely we took advantage of like all of the Metastock things. I can see questions coming in through chat. I'm going to answer those by just typing answers to you. So I do appreciate the questions. We do need to kind of keep going. So Anis, thank you for the question. I'm going to answer that in just a second. And then all of these other questions that are coming in, I'll answer those as well. So this particular add-on is an add-on for our Metastock program. Metastock, the add-on itself is $499. It's $399 today at the summit. You can give us a call at 800-882-3040. And you can visit us online at metastock.com/saleschat. We also do have a summit package. We have some of my favorite presenters on today. We just had Steve Bigalow. We're gonna have Jeff Tompkins in a second. We're gonna have Vince Fora. We're gonna highlight a lot of different add-ons that I actually really like, and some of our most popular and some of our best add-ons. We've put together a package that would include Bigalow and Jeff Tompkins and Vince Fora, Barry Burns, learn Metastock, which we'll talk a little bit more about, unleash the power of Metastock. We're going to give you 2 years of Stocks and Commodities magazine with it. We're going to have somebody help you install everything. Basically, all of this is normally, if you bought it all separately from our online web store, would be $3,739. Here at the event today, we're going to give it to you for $1,645. We're going to back a big portion of like all of the one-time costs with a money-back guarantee. So give us a call. 800-882-3040. You can chat live with us at metastock.com/saleschat. And you can also order this online at metastock.com/summitdeal. I do want to say I love Metastock. It's a software I wouldn't trade without. There's a reason it's been rated #1 for more than 25 years in a row now. And give it a try. In any case, yeah, and you can do that. 800-882-3040 or metastock.com/saleschat. Do want to say thank you to our sponsor, Stocks and Commodities Magazine, for sponsoring our events. They do a great job. They've sponsored us ever since we started this crazy thing. I started it like 8 years ago now, if you can believe that. You can get a free issue if you're watching this on YouTube and you haven't registered yet. Or we also have 2 weeks free of Candlestick Forum with Steve's service. We also have a freebie from like all of the presenters today that you can sign up for. I would recommend you take advantage of some of these offers that are available, and you can do it for free, but you have to do it today. So metastock.com/Trader Summit, Traders-Summit. So our next speaker is Jeff Tompkins. Jeff has been a partner of Metastock for 3 or 4 years now. He's a great guy. Since he started partnering with Metastock, he now runs a hedge fund called Altos Trading. His methodology is very, very good. And I really like the way he presents as well. And he's always welcome in our room. So he does a really, really good job. He's a great partner of ours, a friend of mine. I consider him part of the family. Jeff, how are you doing today?
I'm well, Jeff. How are you?
I'm doing great. I didn't make the gag about how your name is awesome this time.
Yeah. Our moms did well.
All right. I just turned over the presentation for you, and I see your screen.
Excellent.
And I'm just going to get out of the way. Go for it.
All right. Yeah, I apologize. I'm not appearing on video. I'm still in my pajamas, so
Hey,
figured nobody wants to do that.
I'm pajamas from the bottom down.
I love it. All right. Well, I'll I'll try to make up a little time here. I want to keep everybody on schedule, but thanks again for having me. It's always great to be here. Thanks for the great presentation, Steve. I always enjoy watching Steve Bigalow's educational events. So really great to be here, and have some great stuff to share with the audience today. And in regard to that, thanks all of you for being here and taking time out of your Saturday morning. Looks like we got a strong group, about 500 people on, which is really great to see on a Saturday. So I'll make sure it's worth your while. But I'm going to be covering my proprietary setup that I use in the markets as well as in my hedge fund, called the Slingshot setup. And what the Slingshot setup does is it allows us to buy low and sell high, especially in volatile markets like we're in currently. The VIX has remained elevated ever since we had the Corona crash last year, and it's just been a really challenging market in terms of volatility. And we're going to talk about how to sort of address that and overcome it and use it to our advantage even. So I'll just read a quick disclaimer here before we get into the fun stuff. We all know that trading securities and options involves risk. And of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. And we, of course, need a broker to trade securities and must meet suitability requirements. We will be covering some trade examples on our session today. And just know that we don't guarantee that you'll mirror the performance of any of the examples we share. And of course, past results are not indicative of future performance. All right, so let's start out by looking at a few familiar faces. Some of you may recognize some of these faces, maybe all of them. They're all famous traders and investors. They've all done well in their careers. And they have actually something in common that you may not guess. And that is that they've all bought high and sold low. In other words, they've all made mistakes in their trading and investing careers. We all do it. I've done it myself. And why does it occur? Well, it's simply because they're human, just like the rest of us. We're all subject to emotions in our trading and investing. And in fact, it's really one of the reasons that the market is so difficult to trade. And a lot of it can be boiled down to psychology. Of course, there are a lot of different variables that can lead to success or failure in trading and investing. But when you boil it down, even if you have a really good system or strategy, you can still fail. And that's really because emotions can get in the way. They can influence the way that we interact with the markets. And if we don't use a contrarian approach to trading and investing, in fact, Steve mentioned this sort of briefly on his presentation, that a lot of traders and investors come in and buy at the tops of markets and during periods of exuberance, and that's what we want to avoid doing. So the Slingshot setup is going to help us overcome that. But this is basically a trading psychology curve where anytime we enter a trade or an investment, we of course have an optimistic outlook of where that will go, what the outcome will be. We would never, of course, get into a trade or even a long-term investment if we didn't have some degree of optimism that would work out in our favor. Now, unfortunately, what often happens with most traders and investors is anytime we encounter a losing trade or a difficult situation, or even a trade that was once successful that reverses on us, which inevitably happens to the best of us, that enthusiasm, exuberance, and euphoria can quickly turn to anxiety, denial, and fear. And oftentimes, we get into these types of situations when there is really a high level of financial risk in the markets. And we can become greedy when that happens. And then as the markets sell off, or there's any sort of a correction or even a crash, we become very fearful. When in reality, that can be one of the best times to invest or trade. And I'll show you why that is and how we can identify those periods in the markets. And unfortunately, this psychology curve sort of repeats itself in a vicious cycle. So we kind of go through that roller coaster of emotions, start all over again, and end up in the same spot. So this may sort of look familiar, resonate with some of you out there. I know that I've been through this myself. And when you use a system or a strategy, it's really important that that system or strategy overcomes this psychological drawback to trading and investing. So if we look at the psychology of failure, of course, anytime we enter a directional trade, our goal is to buy low and sell high. Or if we're shorting, we'd want to buy high and sell low. Unfortunately, that goes against our human instinct. And instead, when a security is going down, we sell it. Again, going back to the psychology curve, people panic and are afraid of losing money, so we sell. And then when a security's already gone up, we buy it because we're afraid of missing out on future profits. And when the panic really sets in when the price is falling, because we're again afraid of losing money. None of us want to lose money. And then we buy when it's rising because we're afraid of missing out. It's the FOMO mentality of fear of missing out. And that typically occurs during bull markets. So to compound that problem, we're then wired to repeatedly make the same mistake. So really nobody's immune from this, not even the great investors like Warren Buffett or Carl Icahn or some of the other phases that we looked at a minute ago. Everyone is subject to this. And it's really the people that take the contrarian approach to trading and investing that can overcome this. And Warren Buffett is a good example of that. Even though he's made some mistakes and bought at the tops of markets, he overall has been able to avoid that. And so really it's our emotions that are telling us when to get in and when to get out, even if we have a system. Because the problem with systems and strategies is at some point they can fail on us, and we then begin to second guess those. And so without a solid trading plan, we're really vulnerable to our emotions. And if you are lacking a strategy that can identify momentum shifts, meaning that you don't know when to get in or buy low and get out and sell high, this can really pose a major problem for inexperienced traders and investors. So what we're going to do in our session today is we're going to turn the tables. And rather than be greedy when there's a high level of financial risk in the market, or fearful when there's really a relatively low level of risk, we're going to turn the tables and we're going to be fearful when other people are greedy and there's a high level of financial risk in the market. And then we'll get greedy and buy when it's really the best time for investing. It's that old Warren Buffett adage, be fearful when others are greedy. And that's really the contrarian approach that we need to take. So here's what I'm going to give you today on our session to make it easier for you. You'll discover the Slingshot trade that's worked 100% of the time on all major indices, going all the way back to the beginning of the market. And I've been trading for a little over 20 years now, and I do manage money professionally. I rarely encounter a system or methodology that has played out 100% of the time and not failed once. And this particular setup has done so on the major indices going back to the beginning of the market. That's pretty incredible. And I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, and how to get in near the bottom and out near the top. And it's seldom that we'll be able to pick an exact bottom or top, but we can get pretty close. And you'll see how incredible this setup works when you understand how to identify it and use the rules to get in and out. And so I'm going to show you how to apply this setup to any market in any time frame. And we probably have a diverse group of traders on with us today. So whether you're trading intraday or you're trading off daily or weekly or even monthly charts, I'm going to show you how to identify this on any time frame. So kind of try to get the time frame thing out, sort of put it to the side. Everything I show you, although most will be off daily charts, really works on any time frame. And then I'm also going to give you a little trick on how to eliminate the majority of your losing trades. This is a really cool technique for entering trades, and it's actually built into our Metastock add-on into the algorithm. So I'm going to just show you how that works and how we built it into the algorithm. And then we'll look at some trade examples together, and then stick with me to the end, and I'll show you how you can copy my success and get my trade signals that I use to make a living in the markets. And I also use these in my hedge fund as well. So let's start out by imagining if we could buy low and sell high without any guesswork. That's really every trader and investor's dream. We don't want to be, some discretion's okay, but we don't want to be using a whole lot of guesswork in our trading. We really want to have a system or methodology that eliminates that and also overcomes the psychology of failure that occurs for so many traders and investors. So the good news is there is one volatility study that we're going to look at today that has actually made this possible, going back to the dawn of the markets. And we'll look at some examples going back even decades of how that plays out. And it's a unique setup that I've named the Slingshot, and you'll see why it has that name here in a minute. And when used correctly and across the major indices, it's allowed traders to buy low and sell high with 100% accuracy. That's pretty cool. It doesn't occur all the time. It only occurs in specific situations. So it also helps keep us out of the market when it may not be the best time to trade and invest. And so you'll see how that works. And it can also warn us of potential market sell-offs. We all fear that unknown, the black swan, or the correction, or anything that might be around the corner that we can't foresee that could cause the market to sell off. And we've had some very good examples of those in the recent past that we'll take a look at on charts. And so these volatility bands that we're going to look at and use in a very unique way work in a fashion where once they're stretched back and they can't go back any further, they have to bounce back. So it's really an inevitability in the markets as it relates to volatility. And you'll see why that occurs and why it's in an inevitability where it's basically has to take place in order for there to be price action in the market and trends developing in the market. And the rubber band effect that takes place within the Slingshot makes it possible to accurately identify tops and bottoms in the market. And you'll see how nicely that works here. So we'll start out by looking at a chart of last year and during the Corona crash. And you'll see that kind of where these entry points and exit points would be as it relate to the Corona crash. And we'll come back to this chart. I just want to kind of give you a sense of the entry and exit points, and as they relate to the psychology curve we started out looking at. So back in like mid to late February, we're still hitting new all-time highs in the market in February of 2020. And of course, we're in the midst of this pandemic. And as the market hits a new all-time high, I think right around February 20th, people are afraid of missing out, right? They're afraid of missing out on future profits, and they're jumping into the market. And this is where we want to be more cautious and fearful and actually look at selling when most traders are buying. Of course, then we have the Corona crash that ensues over the course of the next few weeks. And the market lost over 30% of its value in that time period. So it was a very significant sell-off in a very quick, short period of time. This is where we don't want to look at buying as the market is bottoming. And this is where most other traders are going to be, panicking and selling, not to mention all the way down as the market's selling off. So you can kind of see how this contrarian approach works. And then we want to look at getting out as institutions come in and buy at lower prices, which ultimately drives the price back up. And you can see on your screen, hopefully, sometimes on the webinars it's a bit small, but this is a daily chart of the S&P 500 index. So we're going to come back to this S&P chart, and I'll show you how to trade the Slingshot off of this. But the key here is that we had a significant sell-off in the market, and sort of towards the end of March as things are bottoming out. And I took this screenshot kind of back in early July of last year. We've obviously far surpassed these highs and hit new all-time highs in the market since then. But a lot of people wonder, in the midst of this major pandemic and global economic shutdowns and things like that, how did the market go all the way back up from where the sell-off ensued, and then also surpass those previous all-time highs and hit new all-time highs? Because really the stock market's not the economy. It's a representation of some parts of the economy, but ultimately the price is driven by supply and demand. And in these periods of market sell-offs, you're going to get institutions that come in and buy up shares at lower prices. And that's ultimately what causes these rebounds. All right, so we'll get into the Slingshot here in just a second. I'll give you a little bit of background on myself if you haven't seen me at one of the previous Metastock events. As I mentioned, I have over 20 years of experience trading the stock options and futures markets. I received professional training at Morgan Stanley, and I'm also the founder and chief investment strategist of Altos Trading. We're actually currently somewhere around 50,000 members in over 100 countries across the globe. So we have a really great group of members all over the world. And I'm also a hedge fund manager at Altos Capital. So I manage money for my clients, and also the founder and creator of the Trade Trend Signal software, an add-on for Metastock, which we actually launched, I think Jeff said it's probably been 2 or 3 years ago now. It's hard to believe, but first launched on Metastock as an add-on. So that's really exciting for us. We've gotten tremendous feedback and have a big base of users who use Trade Trend to help make their decisions in the markets. And I'll talk to you a little bit about that today on our session. So by the time we're done today, you'll discover the one trade setup that's produced massive returns going back to the beginning of the stock market. And in fact, it's so reliable, it's worked 100% of the time on the major indices, hasn't failed even once, including in the recent Corona crash. And we'll go back to that chart and plot the Slingshot on there so you can identify it. And it happens over and over again with astounding predictability. So whether you're just starting out or you're a seasoned pro, this is really must-have information, especially for today's markets with all the volatility that we're in the midst of. So you'll discover why volatility is one of the only leading indicators of market direction. And then I'll show you how to identify when markets may be vulnerable to a sell-off. And this really by itself can turn your trading around because it eliminates a lot of the fear component of that psychology curve and helps prep us in the case where we may be approaching a potential correction or sell-off in the market. And it helps us prepare for that by protecting our portfolio or even taking advantage of the sell-off by shorting the market. And I'll show you how to identify when the market's likely to go up after one of those events and how to determine exactly how far the market is likely to go up. This is a really powerful component of the Slingshot because it's what I call the trader's dilemma. So once you get into a trade and it works out in your favor, without a very strict exit strategy, it's often very difficult for us to know when to get out. All right, because we don't want to see our profits evaporate and the trade reverse on us and everything that we had achieved in that trade turn into a loss. We've probably all been there at some point. We also don't want to miss out on future potential profits. So if we could eliminate that component, that by itself can make a big difference. And the Slingshot setup does that for us. And then if you stick with me to the end of the session today, I'll show you guys how you can get your hands on a tool that will change your trading forever. And I'm confident in that because it's really changed a lot of our members' results. We get success stories every single day of people that are using Trade Trend and doing very well with it. And again, I use it myself and it's really changed my trading. So let's start out by imagining the Slingshot. I call this a Slingshot, and you'll see why and very clearly here in a second, because it really applies to the way the setup occurs, and the physics of a Slingshot can be applied to the markets as it relates to supply and demand. So we know that as the Slingshot's pulled back, the muscle energy is transferred to elastic energy in the bands of the Slingshot. And we can only pull those bands back so far until we need to release the pressure on the bands. And after you do that, you release it, the elastic energy, of course, is then transferred to the stone as energy of motion. That propels the stone out of the Slingshot. And in physics, that's called kinetic energy. And kinetic energy can actually be applied to the markets. It's a very similar principle. It simply kind of plays out as a supply and demand or buying or selling pressure. So if the bands are pulled too far back, it creates demand in the markets or buying pressure and ultimately drives the price back up. And that's where the bands are released. So once the bands become overstretched, it gives us a buy signal and we can enter the market with high confidence that prices will go up to the initial resting point of the band. So we're going to do that with a specific study that is available on really any retail charting or broker platform, and it's available on the Metastock charting platform, and that's the Bollinger Bands. And the Bollinger Bands are a really great volatility study, and they can actually be forward-looking and give us predictive information. And most indicators can't do that. They're typically lagging and give us information too late. But when you use the Bollinger Bands in a specific way, as I'll show you, they can actually be a forward-looking predictive indicator, because they tell us when prices move too far away from the mean or the average and is likely to reverse direction. And it's really an incredible indicator that can pinpoint turning points in a security with really astounding accuracy when used correctly. And that's the caveat. You know, they have to be used in a certain way to accomplish that. And just like any other indicator, there's many different ways to use them, and a lot of them are not effective. So we'll look at some of the different ways to use these, and then I'll show you how to use the Slingshot. But you'll notice here in the center of the screen, we've got a chart with the bands plotted. And this is kind of where that Slingshot setup starts to take place. And you'll notice that the price of this just sort of generic stock chart starts to sell off and trails the lower band. And this is where a contrarian trader would come in and buy, that ultimately drives the price back up, okay? So again, that's the Slingshot, and we'll look at the mechanics of it. I want to give you a little bit of quick background on the Bollinger Bands if you've not used these or been exposed to them in the past, just so you're familiar with what they are, how they work, and why we use them. But basically, they're a simple study that is comprised of 3 bands. And so in order to calculate them, we take a simple moving average of the security's price. And I'm going to give you my settings for the bands here in just a minute, so that you'll know exactly what settings to use. But that center band that you see on the chart is our moving average. Then we take the standard deviation of the security's price. And standard deviation is basically a mathematical measurement of average variance. So those are our volatility bands. Those are the outer bands that you see. And what the standard deviation does is it measures how spread out numbers are from an average value. So you can calculate that by taking the square root of the variance, which is actually the square difference of the mean, and then multiply that by the standard deviation value by 2. And then they're added and subtracted from that center point, or the simple moving average. And that's what produces those outer bands. Now, the good news is you don't have to make those complicated calculations. That's all done for you in the Metastock platform. But just to give you a little bit of background of what they are and why they're referred to as volatility bands. And because that standard deviation is a measure of volatility, here's the key, and what you really want to understand is that when the market becomes more volatile, the bands widen, and then when the market's less volatile, the bands contract. And so we'll look at that on the chart. But these are the settings that I use, and they're typically the default settings on most platforms, including Metastock. So you have a 20-period simple moving average for the middle band, and then a 2 standard deviation move from the mean, which of course is the center band, for your outer bands. All right, so price tends to can only move so far in terms of standard deviation for the mean before mean reverts. So that's the key component. But as I mentioned, there's a lot of different ways to use the bands, just like any other indicator. And I'll show you some of the more common ones and why they're not necessarily the best way to use these. And one common way that a lot of traders and investors use the Bollinger Bands is simply to buy at the bottom band and sell at the top band. And that can be effective in certain market conditions when price is ranging or there's low volatility. But the problem is, as we just looked at on a couple other charts, is that price can hug the upper or lower band for extended periods of time. And so you may have a strategy buying at the upper band, at the lower band and selling at the upper band that works a few times. But unfortunately, when there's a volatility expansion, it can wipe out all your profitable trades. So for that reason, we don't use that approach. Another common methodology is band contraction and expansion. And we do use this in terms of analysis, but not necessarily to make a trading decision. But this can be a good indicator of an impending big move in a security. And I'll highlight that on the chart in a second as well. But the problem is we don't know in which direction the move can occur. So for that reason, we don't use that approach. Another common one is to buy or sell at the middle band. And this one can work well in strong trending markets. If you've got upward trending bands and price is mean reverting to the middle band, those can be good entry points, but again, can fail in a lot of different situations where the market's not trending and it's moving sideways or ranging, or we're in a low volatility market environment. So for that reason, we don't use that approach. Now, the slingshot setup is a unique way to use the bands. And what we do is we wait for the lower band to break, and I'll explain what that means. Basically, price will hug that lower band and ultimately rebound to where the breach initially occurred. And this is really, in my experience, the best way to use these volatility bands. And it overcomes a lot of the sort of psychology issues that can get in the way of our success, going back to that psychology curve that we looked at the start of the session. And it allows us to take a contrarian approach to buying low and selling high, and eliminating that emotion that can prevent us from doing that. So the Bollinger Bands, they, number one, have been around for a long time. They were developed back in the 70s by John Bollinger. And he developed these to help traders have a higher probability of identifying when an asset is oversold or overbought. So that's really why he developed them for the stock market, and they can really be applied to any security, futures, forex, equities, ETFs. The same volatility principles really apply to any asset class or time frame. Now with the slingshot setup, we're going to use these again in a unique way to identify periods when there's a high level of financial risk and it's really not a good time to trade and invest, or not a good time to go long the market at the very least, maybe a better time to short. And then we're going to look at opportunities to get in aftermarket sell-offs. So as I mentioned, the price can exceed or hug a band envelope for prolonged periods during strong trends. So that's why we don't want to buy at the lower band necessarily. We want to wait for the lower band to break and then wait for that buy signal. And then we want to exit when price returns to the breaking point. All right. So just to highlight, and we're going to go back to that S&P chart on the next slide and take a look at that. But to highlight what the slingshot is capable of, going back to a lot of different situations in the market where we've had major sell-offs or even sustained long-term bear markets, the major market indices have returned to the initial volatility breakout with 100% accuracy, all the way back to the beginning of the markets. And of course, that's evidenced by the fact that we've recently hit new all-time highs in the markets, right? Over the long term, the market has an upward trending bias. And if you look at all four of the major corrections of 2018, that was a pretty choppy year in the markets that occurred every single time. This slingshot setup worked out perfectly. Even going back to the flash crash of 2015, where the market sold off really significantly on the open, I believe it was back on August 24th, and the slingshot setup played out very nicely. Or even the flash crash of 2010, or the crash following the 2008 mortgage crisis. That was a more sustained bear market where the market lost, I believe, more than half of its value in the second half of the year that year. And still the slingshot setup played out very nicely. Even the 2000 .com bubble going back over 20 years ago. And even the recent Corona crashes we'll look at here on the chart. Every black swan event, market correction, major crash, bear market, you name it, this setup has worked as I'm just about to show you. So here it is. This is that same chart we looked at earlier of the S&P 500. Now we've got the bands plotted on our chart, and you'll notice that on the left side of the chart, the far left, in February, we're in a volatility contraction. So you'll see that the bands are very close together. They're horizontal. Price is hitting new all-time highs. This is where we want to be fearful. Okay, so other people may be overly exuberant, optimistic that price is going to continue to go up and continue to hit new all-time highs. But unfortunately, at the end of February, that didn't happen, right? So we had a major sell-off in the markets. And this is where a lot of people got trapped. where the slingshot started to set up. So this is where the bands start to get pulled back. The price hits the lower band, and we were in a volatility contraction. Now look what's happening there. The two outer bands, the upper and lower band, are starting to diverge. They're moving away from each other. And they're not only that, they're moving away from each other when price is hitting the lower band. That's your warning sign. That's where the slingshot setup is starting to take place. And then you'll notice that price sells off and trades along the lower band, right? And this is where, after the sell-off ensues, we want to look to come in and buy at lower prices. Now, here's the second major component of the slingshot. What happens after the price starts to reverse? It returns right back up to that level where the volatility expansion took place, right there around the 3180 level. Okay, that's the key, and that's where I mentioned that, you know, how do you know when to get back out of the market after you buy low? This is where you would look to start taking profits, scaling out, moving stops to protect profits, etc. So this is where we would want to place our initial profit target. So we either want to get out of the position entirely and take profits, or scale out on, for instance, half the position and move our stop to break even on the remaining half. Because a lot of times, as we certainly have witnessed in the remainder of 2020 and even into this year, price has continued to move up past these levels. But this is where we want to initially look for that slingshot profit target. So it's kind of like an upside down triangle, right? So if you look at that as a sort of upside down triangle, it can help you identify that. All right. Now, I get asked often, like, this has worked very well, obviously, on the major indices. What about individual securities? Yeah, it works. It works on individual equities, futures, forex as well, because it's the same principle. It's the same psychology that's causing these fluctuations in price. So here's another example of an individual stock, Apple. And you'll notice that on the left half of the chart, we're in a strong uptrend, right? We're actually trading above the mean, which is that center band, and trailing the upper band. Now, there's actually a reverse slingshot in here where we trailed the upper band, and then where that volatility breakout occurred very far on the left chart, about candle number 5 into the left side of that chart, there was our volatility expansion. We could have actually used this as a short opportunity. It does work both ways, but it's more reliable on a sell-off. And so that occurred here. So interestingly, we actually had a couple of bullish reversal candles here. And a lot of people would have been coming in and seeing, oh, we've got a couple doji candles here. These are reversals right off that lower band. Let's go long Apple. Let's buy the shares right around 196 to 200, and this thing's going to continue its uptrend and go back up to the upper band. Well, not so fast. What happened? We had the volatility expansion. See, as the price hits the lower band, the two outer bands are diverging and moving away from each other. That's our warning sign. And then price trails the lower band and gives us an opportunity to come in and buy low. And then what happens? The price is driven right back up to where the band occurred. The volatility expansion occurred. And in this particular case, the stock continued to run. That can happen, fairly frequently. I also will show you a chart of the QQQ. This is an example from back in October of 2018. A very similar situation, hitting new all-time highs in the market. We had a volatility contraction. See how the bands are close together and horizontal. But then we have the slingshot here, where price hits the lower band. The two outer bands are pointing away from each other. We have a major sell-off. So, we were up around the 180 to 185 level. This thing sold all the way off down into 143.50. That's a big sell-off, right? In just a couple months. This is where we want to look at getting in as the market rebounds right back up to the volatility breakout level, right there around 180. Pretty cool. What about intraday time frames? Yep, same principle. So this is a 5-minute chart of advanced micro devices, AMD. We are in a low volatility market condition there on the left side of the chart, right? And in fact, if you're using that approach that I mentioned earlier, buying at the lower band and selling at the top band, you would have had a few nice trades in there until price starts to trail the lower band and we get a volatility expansion and we get a sell-off. Okay, these are opportunities to come in and buy before price rebounds right back up to the level of the volatility expansion. So you can go and look at these examples over and over on different time frames, different charts, different securities. Rajesh, the Bollinger Band values are a 20-period simple moving average for your middle band and a 2 standard deviation setting for the outer bands. And those are typically the defaults. So how do we identify the buy zone? That's probably what you're wondering. When do we get in? And there are a lot of different techniques we can use to enter on one of these slingshot setups. And we don't have time to get in all the nuances of that on our session today with the limited time that we have. But really the trick is to identify when the band is overextended and ready to snap back. So there's a number of different ways you can do that. You can use other indicators to identify trend reversals. You can use price action, look for bullish reversal candles, kicker patterns, some of the things that Steve Bigalow went over on his session. You can look for price to trade into the band a certain level. There's a lot of different ways we can identify these. We'll generally never pick the very bottom, but the idea is that we want to get close. We can also use money management techniques. One of the things that I do is scale in. So realizing that I can't identify the exact bottom, I might scale in on a slingshot setup and enter a third of the position after a certain percentage move into the slingshot, the second third after another percentage move, and then the final third after another percentage move. And that will generally dollar cost average me in pretty nicely before the rebound takes place. But I'm going to make it a lot easier for you guys. So I've spent more than a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. And I've gotten a formula dialed in that can be used in combination with the slingshot. And I had to configure it to work on all time frames and duplicate the success across all markets. And that can be challenging because every asset class has kind of its own behavior and its own price action, as I'm sure many of you have noticed. And so that creates a challenge. So in order to overcome that, we have to have something that's an adaptable algorithm that can adapt to volatility, average true range, and things like that that are specific to the security. And we develop that into a formula that can reliably predict market trends. And the result from all of this hard work has been a tool that provides accurate buy and sell signals near the outer channels of the Bollinger Bands. And the unique thing about it is it does so up to 3 candles in advance of the move. So it gives you a buy or a sell warning with a projected entry price that's valid for the next 3 candles. And most indicators, you've got to jump in when you get the signal. Trade trend is different because it gives us an advanced warning. And when you combine the right momentum indicators with price action setups, it can give us really accurate buy and sell signals at the outer band. So it's a great tool to use in combination with the slingshot. And this is what we've developed into the Metastock add-on trade trend. And what trade trend will allow us to do is accurately identify buy signals at the bottom of the slingshot. It also often gives us really nice sell signals to warn us of the slingshot setup. And it does it with a proprietary blend of momentum indicators that can warn us of these sell-offs and rebounds with short-term and long-term trends with astounding accuracy. And we have members that use it across many different asset classes, and that includes myself, whether it's stocks, ETFs, futures, Forex. And as you'll see, and if we have some time, maybe Jeff can share with you that there's a really cool Explore tool that lets you screen for trades really in a matter of seconds. So you can find these opportunities really quickly, whether you're trading an intraday time frame or even a daily time frame. And they also have a really, frankly, like the best back testing engine I've seen across any charting platform that can allow you to back test the results before you place a trade using the software. And we have a lot of members who also use it to supercharge their option strategies and more accurately identify entry points in the market and ultimately trade like a pro without any guesswork. And that's really important. You know, we really have to have very clear entry and exit signals that are contrarian to what most other losing retail traders are doing. And that's what really will help lead us to success and profitability in the markets. Now, I mentioned that I'll give you a little trick to help weed out a lot of false signals and help eliminate a lot of losing trades. And this can really be implemented with any strategy you're currently using, any system or indicator you're currently using. We've made this easy on you and built this into the algorithm for Trade Trend. But basically the way that it works is rather than jump into the market with a limit order or even a market order like a lot of people do, we want to really make sure we're confirming the momentum direction. And we do that with a specific order called a buy stop or a sell stop order. So when we get a buy signal, we would use a buy stop order just above the high of the signal candle in order to enter the long trade. And then we would use a sell stop order just below the low of the candle for a short trade. And what that does is it helps filter out a lot of false signals. I found it probably somewhere in the neighborhood of 30 to 40% of false signals can be eliminated simply using this entry technique. And again, we program this into the Trade Trend algorithm. So it gives you very nice, basically very nice entry points ahead of time. So you know your entry price ahead of time rather than jumping into the market and assuming that the signal is going to work out. So I often get asked, Jeff, how did you do using the Slingshot back during the Corona crash with the Trade Trend signals? Well, this is a screenshot from my personal real money TD Ameritrade account from back at the end of February. And I was really cautious back in February because I saw the volatility expansion. Of course, I was aware that we're in the midst of this pandemic, which we at that time didn't really have a full grasp on the magnitude of it yet. But I knew that, you know, this Slingshot setup was taking place, and it wasn't really a time to be all in the market. You know, I was predominantly in cash. I was trading very small, you know, somewhere between 1 and 6 contracts. These are futures contracts that I traded. But you can see at the end of February, on February 28th, I took a screenshot of my account and trading very small using the Slingshot. I did short the market on that Slingshot setup and made over $13,000 that month. Now, as the setup really started to set in, I identified it and I waited for a buy signal from Trade Trend. And those started to occur in March as we saw the market rebound. So I took another screenshot at the end of March and I started to get a little bit more aggressive. So I started to go into the market stronger, knowing that rebound was imminent and that we would see a return to the volatility breakout. So as I got into the market a little bit more and started to play the Slingshot setup with the Trade Trend buy signal, I came out at the end of March with over a $27,000 profit. And again, I was trading very small here. You see my contract sizes are only 1 to 3 contracts as I'm getting in. I was just trading more positions than I was back in February. But between the 2 months during the Corona crash, I totaled over $40,000 in real money profits using the Slingshot setup with the Trade Trend signals. So that's the power of it. And I believe in backing things up with real money proof. If you're going to consider using something that somebody else is providing, whether it's an alert service or a signal software or an add-on, that you should really be able to back that up with real money proof. So I wanted to share that with you guys during one of really the worst market conditions we've ever been in and show you what's possible. Now, the Trade Trend add-on for Metastock can help you trade in any market in any time frame, regardless of what size count you're using, whether you're just starting out or you're looking for an additional edge in your trading. And it provides predictive buy and sell signals before the move occurs up to 3 candles in advance. So when you get the warning signal, the buy or the sell, that's simply going to tell you that the algorithm predicts a move either to the upside or the downside, and it's going to give you a projected entry price. If the security doesn't hit that price within the next 3 candles, we simply don't get in and we wait for the next signal. If a signal is triggered, it also reads the market in real time and gives you a trailing stop after each candle, so you can help lock in profits as the security moves in the anticipated direction. And the beauty of Trade Trend, if we look at it on the major indices going all the way back to the beginning of the market, it's predicted every market crash and rebound with 100% accuracy. So it's given us sell signals near the tops of sell-offs, and it's given us buy signals near the bottoms of that Slingshot setup. So if we look at some examples, going back to the flash crash of August 2015 on the S&P, we're in that relatively low ranging market volatility environment. Prices kind of moving sideways there. Over the course of 4 or 5 months, there's the sell signal on August 15th from trade trend, literally right before the flash crash. We have a double bottom, and then trade trend flashed a buy warning signal at the beginning of October before the market rebounded. Can you guys spot the slingshot setup in there? There it is. Here's another example. So going back to the 2008 mortgage crisis, similar kind of situation, sideways moving ranging market, low volatility. On May 21st, trade trend flashes the sell warning. Okay, we're kind of bouncing off the top of that Bollinger Band. In the second half of the year, the market loses more than half its value. How nice would that be to have that sell warning signal there towards the end of May, right before the market went into bear market territory? And it also flashes a nice buy warning signal towards the end of November before the market rebounded. Now going back a couple decades to the 2000.com bubble, we had hit a new all-time high in the market, kind of like we did last February. People are becoming overly exuberant and optimistic and buying into the market with fear of missing out on future uptrend in the market. But unfortunately, that didn't happen. Now, astute traders would have spotted this slingshot setup there towards the end of October. And we also got a sell warning signal from trade trend. It was a little late on this one. It didn't get it right near the top. But as that slingshot setup started to take place, we did get a sell warning signal from trade trend before the market really tanked. And this is the S&P. You know, we were topping out around 1,500, sold all the way down to below 950. And then we got a nice buy warning signal in early October from trade trend. So guys, virtually every system will produce winning trades. The problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trades. I know I've certainly been there, and that probably sounds familiar to many of you. And we're going to change all that. So I'm going to share with you some more actual real money screenshots from my Thinkorswim TD Ameritrade account using the trade trend signals. And I took these screenshots, I believe, back in 2018 around those corrections, just to highlight that even when market conditions get choppy, we can use trade trend to help us navigate those types of situations. And these are some real money profits from my TD Ameritrade account using trade trend in the futures market. And I was simply trading off a daily chart with one contract per trade. So nothing big here. What trade trend allows us to do, and what I want to highlight here is that when we get into a successful trade, it helps keep that trade open as long as possible to let the profits run. And even when we have an inevitable losing trade, as you can see, I had a few of here, it keeps the losses relatively small and gets us out and helps the winning trades outpace the losing trades. And that's key. You really need a positive expectancy in your trading to accomplish what you see here on the screen. This is from back in 2020. These are, again, real money screenshots from my personal account, where I profited over $28,000 in a single day and over $13,000 with over $150,000 in open profits on only 3 positions. And I was able to do this because of trade trend. Trade trend allowed me to get in when prices were low and go long the futures before the markets went up. So again, I don't guarantee anybody's going to duplicate this, but all I did was use the trade trend signals on these 3 futures markets, and that's it to achieve this. So guys, it's possible. It's realistic. It's doable, and I've done it myself, and I wanted to share these with you. Now, here's my promise to you guys. I want to help you have days just like these, and I'm going to give you access to a tool that lets you copy my trades. So this is a one-time opportunity for the Metastock Summit to join me to discover how I make consistent income in the markets day after day and week after week. And I'm going to reveal every one of my special techniques and indicators that make profits like I've shown you today possible. And these weren't hypothetical. These are real money profits from my own account. So I can back it up with real money, and I'm here to help you guys also be successful with your own money. And I don't hold anything back. So here's everything you're going to get for the Metastock Summit special today. You get 12 months of trade trend on the Metastock platform, and you can use that for stocks, futures, Forex, whatever market you trade with exact entry and exit signals. We also hold live interactive trade sessions. So rather than just give you the tool and say good luck, we do hold live sessions. I host those sessions myself with my partner Richard, and we demonstrate the trade trend tool and do scans and back tests and things together to help you guys become successful with it. So we do those a couple times a month. If you're not able to join those, we do hold them in the evenings to try to make it more accessible to more people. But if you're not able to join, we record every session and post those in our members area, which you also get immediate access to as part of your package. And then you get full support and personal coaching from me on those sessions, as well as via email. And then we teach a lot of option strategies on our sessions that you can use in conjunction with the trade trend signals. And then we also teach a lot of trade adjustments to help fix losing options trades on those sessions, as well as in our courses. And then we go over some of our most profitable tickers to trade on those sessions. So again, here's everything you get with the trade trend add-on for Metastock. You can use it in any market on any time frame. You can back test it. You can use it to supercharge your options trades and ultimately cut the learning curve and start trading like a pro. And this is what the signal software looks on the Metastock platform. You see that you get the nice, beautiful chart there with the warning arrows and confirmation signals. You can scan across a whole basket of securities. You can scan in through different asset classes and in different time frames, which is pretty cool. So I want you guys to ask yourself, if you were able to buy low and sell high and even beat the pros, how much would that be worth to you? Here's what some of our members are saying about the trade trend signals. Jay Thomas says, very impressive results. Well done. Thanks for helping us little guys with small accounts who dream of growing our accounts over time and reaping the benefits of consistent monthly income. R. Julian says he made over $11,000 trading the Great British Pound pairs on Forex and Bitcoin as well. And he recommends the indicator for anyone who's serious about winning trades and making consistent money. Frank says, how refreshing to have someone produce a product that does what it says. I thought it was too good to be true at first, but you've proven me wrong. And Brian says he made over $90,000 of profits using trade trend in the past 90 days. That's pretty incredible, averaging $30,000 per month. He was actually down at one point the previous year, around $42,000, and he was able to recoup all of those losses and was net positive $47,000 on trade trend trades. So really great success story. Yeah, Ben, it does work on Forex as well. Alan, he was one of our early beta testers for trade trend. He says he's been involved with lots of software testing. He said that he's used trade trend and it does exactly what it says, and he's found some nice setups. So guys, I'm going to throw in a couple of really cool bonuses that complement the trade trend add-on for Metastock in our package. Number one is our professional trading series. It's over 9 hours of online training that you can watch at your leisure that covers our best stock options and Forex strategies. And you get access to that when you join our package. Bonus number two is my ebook, How to Create Risk-Free Trades and Let Your Profits Run with Little or No Risk. This is also a great money management strategy to use in combination with the trade trend add-on that can help you mitigate risk in basically any of your trades and oftentimes even eliminate it altogether. So a really cool book that will complement your package. So we've got a few minutes left. I want to open it up to Q&A here in just a second. And if I don't get to all the questions, which I'm guessing I won't have time to do, you can always email us at support@altostrading.com, and we're here to help and answer your questions. So here's everything you guys get with your package and the retail value for each component. So you get the 12 months of trade trend, that's a $1,499 value. The live trade sessions valued at $550. The personal coaching valued at $1997. You also get invitation-only Facebook group access to over 800 members in our group for a $199 value. We're going to throw in all of our trade adjustment training for a $900 value, and then our two bonuses. The professional trading series valued at $595 and our new ebook for $97. So on the retail value for this package, over $5,000 of value that you get built into our Metastock Trader Special. For today, we're taking 80% off the retail price and offering everything up for only $997. Guys, that breaks down to less than $3 a day for everything that you see here on your screen. I don't know, anyone that wouldn't want to pay less than a few bucks a day to have this kind of edge in their trading. And for that reason, we are going to limit it because we can only take on so many new members and onboard so many new people at one time. We do have a great team over at Metastock that will help us with that process. And we also want to be there for you on our live sessions and coach you and help you out. So we are going to limit this to 25 seats today. If you want to claim one of those seats, you can go to altostrading.com/Metastock. And once those 25 seats are up, we will shut this down and everything will return back to the retail price. So guys, it only takes one winning trade to pay for your lifetime membership to my Trade Trend Mastermind group. Buying low and selling high is really priceless. I'm going to throw in a guarantee as well. If you guys take advantage of the $9.97 package, you're going to get my guarantee, which says if you don't make money trading in the live markets with real money using the Trade Trend signals, I'm going to give you an extra year of Trade Trend at no cost, $1,499 value. I'm going to give you all the time you need to become successful. So altostrading.com/Metastock, and you'll get everything that you see here on your screen for 80% off the retail price. All right, so I'm going to go ahead and pass it back to Jeff and see if there are any questions. I haven't had, they've been kind of flying through on my monitor, and I haven't read every one. So Jeff, if you've been kind of monitoring that, if there's any you want to pick out of there and relay to me if we have enough time.
Mm-hmm. Well, we're out of time, but that's okay. I've promised we'd asked a couple questions, so I'm a man of my word, Jeff.
Okay.
Topher wanted to know if it works on Bitcoin, and then Vin wanted to know if it worked on Forex.
Yeah, so I've never actually personally used it on Bitcoin. I don't trade Bitcoin, but I did share that one testimonial from I believe it was Mr. Julian that wrote in and said he was using it on Bitcoin and the Great British Pound and did really well with it. But yeah, it should work. And same thing with Forex. It should, it's a momentum-based methodology. So just like any other algorithm, it's going to work better in certain market conditions than others. But the beauty of it is it helps keep you out of the market when the market conditions aren't favorable. And it does a nice job at warning you of developing trends as well as trend continuations, really regardless of the security or the time frame.
All right. Let's see. There was one more I had for you. Do you use Bollinger Band bandwidth as an indicator? Was a question I promised to ask you as well.
Oh, yeah. I have, yeah. I kind of trained myself to see that, just visualize it using the standard bands. But I'm familiar with that indicator and have used it. It's a good one.
Ronit wants to know if it's too late to apply these ideas to the current market conditions.
Yeah, so great question. Right now, we're really kind of potentially in the midst of a potential slingshot setup. So, keep an eye on that. We've obviously recently hit a new all-time high. We had a big sell-off, I believe it was Thursday last week, and then sort of a reversal day on Friday. But basically, we're kind of in that potential. That sell-off Thursday was really due to rising bond yields, which typically doesn't cause a real sustained market sell-off. It's typically something you kind of see the day of the rising bond yield, and then it sort of subsides. But yeah, we're in a fragile spot right now, and we are vulnerable to another correction. So definitely want to be wary of that.
Dean asks, I have Metastock and Zenith. Does this work on Metastock? Dean, thank you for using Metastock.
So I can let you answer that one, Jeff.
Yeah. It works well with Metastock. Jeff, I think we're out of time. I want to say thank you. That was great. I'm going to kind of talk a little bit just for a second about kind of the entry. We had a question about if we have a setup today, do we give a signal for the market tomorrow? And the answer to that, if you want to answer this, yes, right? We give you the exact price to get in on the next day.
Yeah, exactly right. Yep, you get the warning signal, and then if you're on a daily chart, you have the exact entry price for the next candle for the next day. So you have all evening, and then the next morning before the market opens to go ahead and enter your order. And Jeff can show you kind of what that looks like in the commentary.
Yeah, are you seeing my screen?
Yes.
Okay, good. I just want to make sure. So right here, Jeff, thank you very much. I appreciate it.
Thanks for having me.
Every time. We'll have you every time. Thank you for coming.
I'll be back. Thank you.
All right, very good. So I just want to kind of show this real quick. We need to get to Vince Vora, and we will. But I want to show you exactly kind of how this works on a chart. One of the questions William has is, can you show it on a certain specific chart? And you absolutely can. on this meta, but we can actually, if we're not gonna have a time to look at a lot of charts just because we're running over time, but if you want to look at it on a specific chart, get a hold of my sales guys. You can call them at 800-882-3040. You can chat online with them at metastock.com/sales chat. They're here today, all day, to help answer any questions, get you more information if you're interested in. And I'm very, very proud of these guys. They do a really good job. So anyway, I've got Boeing. The reason I pulled up Boeing is I did a little bit of a system test with the trade trend, and this was the best performing system based on the system testing that we can do in Metastock. And we'll talk a lot about system testing when we get to my presentation. But right here, if we were looking at Boeing right back here on December 9th of 2020, you'll notice, because I'm going to point it right out, there's a little triangle, a rectangle, diamond, I think is the right adjective there, right above this chart. And that indicates that we have a setup to go short the following day. And so if I was running a scan for this setup, you're going to see that triangle appear. If I open up this commentary and focus in it on this day, it's going to say right now the trade trend is projecting a move down. The criteria for the sell short up has occurred based on the alignment of the technical patterns, including volume, volatility, momentum, and other factors. The probability of prices moving in the anticipated direction is currently at its highest. The suggested entry price, to answer your question about the entry price, is 228.15 using a sell stop limit order. However, do not take this trade if the price is below 221. So saying, okay, you want to get in at close to 228. If it gaps down below 221 because of the risk reward involved, you're not going to take the trade. So it is very, very specific, but you're going to want to get in as close to 228, and this is what it's telling you. So I hope that's doing that. Kind of answers that for you. I love Metastock. I love the way that it kind of helps identify these for you. I might be a little biased, but I love Metastock. So in any case, Vin says, thanks for the presentation, Jeff. Nice presentation, Jeff Tompkins. One question that comes up quite a bit is, do I get a recording of the full summit? And you will. For those of you that are watching on YouTube, go ahead and save the link, and you can just come back anytime and watch it. If you're joining us on GoToWebinar, we will actually automatically send you a link up to the YouTube channel an hour after the broadcast ends today. So either way, you will get a recording. We are recording it. Go watch it. And if you go watch it, give us a like, a comment, and a subscribe. It helps. It helps a lot. And we appreciate it for sure. So Jeff did talk a little bit about there's a picture of the trade trend package. You can actually sign up for that lifetime package through us. You can give us a call at 800, or that, I'm sorry, not lifetime, year package through us, 800-882-3040. You can also visit us at metastock.com/sales chat, and we can kind of help you set up for that year package with all of the training. As part of the summit pack, what we're going to do is we throw in 3 months of the Jeff Tompkins trade trend for that. And so that's going to include your Steve Bigelow's candle profit system, the trade trend, Vince Vora's brand new victory method, the Barry Burns Top Dog Trading Toolkit, 3 months of a subscription called learnmetastock.com, which is, we'll actually be talking to Kevin. He's going to be doing a really good lesson later on, but he just does lessons on Metastock. He has hundreds of lessons that are available. That's included for 3 months. We give you a training CD. We'll give you 2 years of stocks and commodities. We'll help you install everything, get it running with our white glove service and our white glove installation service. Normally, if you bought everything separately, it'd be about $3,739. Your price here would be $1,645. So again, if you have questions or if you want to see charts, I know Bill wanted to look at the Dow, a couple of other charts, give us a call. I have 2 people here. They're working today. David and Robert are working today. They're very, very good. They're very happy to look at charts with you and kind of send you information and explain everything to you if you have questions. And they do a really, really good job. So you can give us a call at 800-882-3040. You can chat live with us at metastock.com/sales chat. And you can also pick up the offer at metastock.com/summit deal. So there you go. We will say very quickly, Thank you for Stocks and Commodities Magazine for hosting us today. Appreciate it. If you haven't yet, go to metastock.com/trader summit and get a free offer. And I'm going to jump to Vince a little bit. I know we're running a little bit behind, Vince. If you need a little bit more time, that's fine. I am going to spend a little bit of time talking about how much I like you. We do have a great group of speakers today, and Vince has no exception. We've been working with Vince for at least 8 years now. I remember we were setting up stuff while I was still in California, and I've been back in Utah for 8 years now, if you can believe that. So Vince does a great job. He's one of our most prolific add-on designers. We put together a system that he's going to talk about today that is designed around the volatility and the increased volatility of the Corona markets. You want to pay attention to Vince. He does a great job, and you're not going to have any problem. It's very, very understandable. I told him this yesterday, and but I think he's one of the easiest to understand and easiest to listen to people that we bring in. So let's go ahead and bring you in here, Vince. Let's see. I'll turn your microphone on. How you doing, Vince?
I'm doing great, Jeff. How are you?
Good. Good. Did I miss anything important when I was introing you?
No, I think you more than covered it. Very kind. Thank you very much.
No
and
problem.
Thanks for having me on.
Absolutely. It's good to have you. I can't see your screen yet, but it should be asking you. I can see your screen now.
There we go.
Harish, to answer your question, yes, it will work on Indian stocks. Actually, we have a lot of Indian customers. So, Vince, I'm going to get out of your way. It's all yours.
All right. Thank you. Thanks again. And welcome, everybody. Happy Saturday. Thanks for joining us on the weekend. I'm glad to be here with you. And as Jeff said today, I really want to talk about our victory system, which I started working on last year, and mainly because of the whole pandemic situation and the differences that I saw in the market. I wanted something more responsive. I was expecting a lot of volatility, and for the most part, the market has not disappointed. And anyway, I want to share this with you today. So what I'd like to do, I'd really like today's presentation to be as interactive as possible. So I'm going to start off by describing what you're seeing on my screen here, what these arrows and circles mean, etc. We'll briefly go over a number of stocks I've selected. Just they're some of the more popular: the Apples, the Amazons, the GameStop. For those of you who took part or were thinking of taking part, we'll cover those. But I really want to cover or show you as many charts as possible. So if there's a symbol that you like to trade, or you're thinking of trading, or just curious on how the victory system would have performed on that particular symbol, by all means, please type it into your chat, and we'll go from there. I will try to keep an eye on the question panel and answer your questions along the way. Jeff, I don't have my YouTube chat up, so if you can keep an eye on the YouTube audience and interrupt me if there are questions, or we can do it at the end, that'd be great.
You got it.
Excellent, thank you. So let's talk about the victory method. Again, based solely on technical analysis, what it does very effectively is take advantage of trend and momentum. Those are the two things that I will never trade without. When you do trade with trend and momentum on your side, you've already won half the battle, and it makes trading so much easier. So that's why I put this together. It will work on anything that you can chart, meaning stocks, futures, Forex, Bitcoin. It really doesn't matter. Any time frame, whether you're a day trader and want to look at a 1 minute, a 3 minute, 5 minute, etc., or daily, weekly, monthly, whatever. So I'm going to try to show you a nice cross section of charts, different time frames, different markets. But again, enter your symbols and we'll go from there. So the indicator is on. Here's a chart of the SPYs, the SPY, which is the ETF for the S&P 500. And what you're seeing here, aside from the arrows and the circles, which I will explain in a moment, this blue line that you're seeing is just a 20-period simple moving average. average. Okay, not exponential. It is a simple moving average. I have been trading with the 20-period moving average pretty much my whole career. We'll never trade without it. I think it is the most widely watched moving average, both by retail traders as well as professionals. And it does an exceptional job on giving us an idea of the type of momentum that there is at that point in time for that particular market. So what we're looking for is to trade during periods where that 20-period moving average is either sloping higher or sloping lower. If that 20-period moving average is flat, that's usually when we want to be out of the market. Okay, most traders get chopped and lose a lot of their money when markets are going sideways. We want to avoid those periods and only trade during strong trends. And the stronger that slope on the 20, okay, the more significant that slope, the better it is for you. It's like having a wind, at your back, pushing you forward. And so that's why we use that 20. There is another way to judge momentum, and that is to draw a line along the slope of the candle. So for example, here, if I draw that line along the slope of the candles, we would say there's pretty significant momentum there to the upside, right? Buyers are really pushing this ETF higher. But as soon as we get some type of retracement like this, it's very easy to make the mistake in thinking that now we have a strong downward momentum, right? And in some cases that may be true. You'll see a follow through, but more often than not, during a sustained trend like that, these pullbacks are just temporary retracements before a continuation of that move higher. And that's why that's where the 20 really becomes effective, because throughout that time here, on those mini pullbacks, when that 20 remains sloping higher, then you know that this is merely just a retracement before a continuation of that trend. Okay, so anyway, you'll see as we go through the examples how effective that is. Now, aside from that, we have the arrows, both green and red. Those are new trade setups. Okay, and once we get into a trade, so if you see a green arrow, for example, from that point on, every candle will be painted green, okay, signifying a long trade. And we do that to help keep you disciplined. How many times have you gotten into a trade and it starts going your way and it feels good and it's easy to stay with the trade, but as soon as you get a couple of red candles that start to go against you, you immediately start to second guess yourself, right? And that forces a lot of traders to exit too early. And so one of the reasons for this design is just to help keep you calm, help you understand that the victory method is still calling, or still predicting that this trend will continue. And so you want to stick with that trade until you either get a change in color or an exit flag. So sometimes when you're in a trade, you'll see an exit flag pop up. That's just telling you to get out. Other times, it'll just go immediately from green to red. You still want to exit, okay? Now, you don't necessarily want to switch from long to short on every change in color, okay? And I'll explain that as well, because the intent here is not to take every single trade. We only want to take the trades that are highly in your favor. Okay, we only want to take the high probability trade setups, and I'll explain the difference as we go through. But I do want to make it clear that before releasing this, I tested it and traded it with my own money for many months in all different types of environments. And even if you were to take every single trade, you'd still do very well. But we don't want to do that. If you've seen any of my presentations before, you'll know that I am probably one of the most conservative traders out there. I absolutely hate risk, and I'll do anything to avoid risk. Okay, so I only want you to take the trades that are most likely to succeed, okay? Because there are going to be plenty of setups to choose from. And in most cases, on most days, you will have too many trades. In other words, you're going to have to compare one trade to the other and decide on one or two that you want to take. You don't want to jump in on everything every day, okay? So the arrows signify your, a new trade entry. Now, if you ever see a little circle like that, these are what we call re-entry dots. What it means is the same criteria that came together here to cause this green arrow has come together again here. The reason why it's not an arrow is because we're already in a trade. So if we weren't in a trade, that same criteria would pop an arrow up here. But because we're already in a trade, we're just showing it as a re-entry so that if you're in it, you can add to that trade. If you're not, and you missed this one, you can now re-enter here and take advantage of the rest of the trade. Okay, if you ever see a yellow bar, that means you shouldn't be trading there. We do not have a long setup, and we do not have a short setup at that time. Okay, now to keep it simple, all right, there are a number of things I can teach you on how to compare one trade to the other or which symbols to take compared to the others. And we have training material that goes with this, that we'll give you with this indicator that will explain all that in detail. But to keep it simple, and especially since we have a limited amount of time today, all I want you to focus on are the trade setups, both the arrows and the re-entry dots, that appear along a sloping 20-period moving average. Okay, so for example, here, the short setup here, or re-entry, you can see that the 20-period moving average was sloping significantly lower. And that's exactly what we want for a short trade, right? And along here, any of these dots here, we had the 20 sloping significantly to the upside, which is what we want for a long trade. So you only want to trade long when it's sloping higher. You only want to trade short when it's sloping lower. Plain and simple. If you do that, you are going to have a high degree of accuracy on your trades. It very rarely does it fail. And I'm not saying it's 100%. It is definitely not 100% accurate. Nothing is. But if you focus on the setups that have momentum on your side, so you have a clear trend higher, you have momentum on your side, and you're getting that entry, and price is near the 20. That's the other thing I want you to focus on. The price should be as close to the 20-period moving average as possible, because the further away it gets, the higher the chance that it will start to pull back towards that 20, okay? When it gets far away, it snaps back, okay? It gets far away, it snaps back. So you want to enter as close to the 20 as possible. So as you can see here on the S&P 500, when we started that drop back in late February, when the first coronavirus lockdown happened, you can see that this told us to exit this long trade right here, okay? But was the 20 sloping lower? No, it was not. So I would not have gone short here. The only way I would ever go short like that, if there's no slope in my favor, is if I'm breaking out of a consolidation area, okay, out of a channel, or at a minimum taking out a recent low, okay? So here you would have exited your long, and then either on a break of the low, if you felt comfortable, okay, and this is for more aggressive traders because at this point we're further away from the 20, right? Or you can enter there, or you can wait for that next snapback and the re-entry, which was here. So here's where I would be comfortable entering, and did, and that's where, still made a great return there. Similar here, right? So we pull back, we still have significant slope, we get short again. This one snap back against us, right? So small loss, break even or small loss there. But do we get long there? I personally would not. Again, you can if you're taking out that prior high. Because remember, what a trend is either higher highs and higher lows or lower highs and lower lows, right? That's what you want to see. So here we had lower highs and lower lows all the way through. But once we put in a pivot here, we now had a higher low. And then once we took out this high, we now have a higher high. So that means we're at the start of a new uptrend. So that's why we say if you're taking out that prior high, you can enter. If not, the safest thing to do is wait for that first pullback and then look at the slope on the 20. And that's easy money there and easy money there, etc. And that's what you want to do. So let's look at a few more examples, right? The NASDAQ 100, same thing, right? When you're trending strongly, you just take these re-entries one after the other. And whether it's new green arrows or those re-entries along that slope, very, very easy. And so if you look again here, how many trades would have worked out compared to would not have worked out? By far, the majority would have worked out, and that's what we want. And again, any time frame, okay? So if we look at the weekly chart here, let me just move things around my other monitor. And the weekly chart, we're still trending nicely. Look at these trades, nice and easy, and some of them are quite big. Again, this one here, would you jump in on this considering, the pretty flat 20-period moving average? Not necessarily. If you're a little more aggressive, though, once you clear that high, and especially if you're moving to an all-time high, okay, let me repeat that. When you have a market moving to an all-time high, not a 52-week high, but an all-time high, that means there is absolutely no resistance whatsoever ahead. And it can be an all-time high for longs or break into a new all-time low for shorts. Either way, that's an easy road ahead. So any break to an all-time high, associated with a long or short signal on victory, high probability trade setup. And so when you pull back like that and you're near an all-time high again and you get an entry, you have to jump on that. Those tend to work out very, very well, okay? That's the weekly, that's the monthly. And for those of you trying to figure out, is this the start of a crash or not? When we look at the weekly and the monthly charts, so far the trend is still very much intact. So we're very early on in the sell-off. So far, there's nothing to panic over just yet. But again, look at the clear signals here, right? So if you're a longer-term investor and are using only the weekly or the monthly chart, again, you just follow the same set of rules, okay? Nothing changes. If you're a day trader, let's say you like the 5-minute chart, same thing, right? You get an entry along an upsloping 20, you go long. You get an entry along a downsloping 20, you go short, right? Buy calls, buy puts, trade the stock, whatever it is that you want. And again, any time frame or any market. Let's Randall, that was the NASDAQ 100, the ETF. You can just as easily look at the futures contract, right? The NDX, same sort of thing, okay? Apple, how many of you trade Apple? Now, Apple's probably the most heavily traded stock out there. Again, do you want to trade it during these flat times? No, you do not. But when you do see that you have a consolidation area like that, and so to identify the start of a channel, what you need are, like 2 points near one price level and one in the other. So like an ABC pattern, right? And that's generally the start. Now, sometimes it tightens up where you continuously get lower highs and higher lows. So you can draw like a triangle, draw a lower trend line along the lows, a higher trend line along the highs, and wait for a break out of that range. Or you can just draw a rectangle here using a box, using the highest high and highest low, and wait for a break, right? Now, sometimes, many times, it'll be associated with that reentry or the green arrow, for example. And those are also great trades, because the longer the channel carries on, the bigger the move tends to be, okay? This one wasn't very big. We've started to roll over now. But the other thing that I want to stress here is the safety component behind this indicator. What I mean by that is when it starts going against you, it will get you out fairly quickly, okay? So it is conservative in the sense that if you get a nice run like that, very rarely will you end up giving back most or all of your profits. It may happen in a crazy case like GameStop. Let's look at GME, okay? Just curious, how many of you traded GME? What a ride. But, when you go parabolic like this, remember, the further it gets away from that 20, right, and the quicker it happens, the quicker it's going to snap back. So when something goes straight up like this, and I know this is an extreme example, okay, very few other stocks have reacted like this, but you have to expect that it's going to come right back, okay? So what you want to do along the way is scale out of your position. Now, this was an extreme move. For example, I got in on GameStop back here when we broke. We had that entry signal here, but we didn't have a slope. So what I did was I waited till we broke the highs of that range. And when we broke that high, I entered here. Now, I will say that I got out on this bar right here. Why? We had gone from like the $20 mark to 150. So do I really care that it went to 450? I'm not going to cry over that. That was an amazing trade right there. And now, what you want to do, though, is take most of your position. You want to leave a little bit on just in case you get a further pop. But, I don't think anyone was expecting this. This is kind of crazy, okay? Now, there will be the times when it can snap back against you. Let's say you're in a trade like this and there's news that comes out overnight and the thing gaps down. That happens, but it's very rare, okay? Always, when you get into a position, make sure you're aware of that next earnings date if it's an individual stock that you're trading, because that earnings announcement can cause a gap one way or the other, okay? Here is BETZ, B-E-T-Z, which is an ETF for the gaming, sports gambling stocks like DraftKings and Penn National Gaming, etc. So if rather than trading one, you can trade the ETF. Again, what matters here is who's in control. Is it buyers or is it sellers, right? And we can tell that very easily by the slope on that 20. So, we move up here, we exit this trade here. We do not go short here. Why wouldn't we go short? Well, because the 20 is sloping higher and we're not taking out a low, right? We do not have lower highs and lower lows here yet. In other words, we don't have a downtrend, so why would we short yet, right? Then it turns around, gives us a re-entry here. Would we get in here? No, we would not. Why? Because the slope is against us. Would we get in here? Not necessarily. Slope is against us. We could draw a line at these highs and say, hey, if it breaks those highs and now it's new all-time high territory and the 20 sloping in our favor, yeah, I want to be in. Or we could just wait for the re-entry along that slope and we profit there and we profit there and we profit there. And now we're sitting on the sidelines again. It's really that simple. And along with this indicator, we have a scanner that you can scan on any time frame. So very quickly, within a few minutes, you have a list of candidates to look at, okay? Let's look at a few others. Tesla, for example. How many of you have traded Tesla? And again, by all means, put Martin, yes, I will go back to the 5-minute chart on Apple. Just give me a second. So here's Tesla. Again, when it's trending, that's when you want to play it. When it's going sideways, you do not want to touch it. So here, we may have gotten in on this one, yes, because the 20 was still sloping, right? And it kind of went flat, break even or a small loss here, got us out. But now, would we have gone short here? No, we would not. No slope. Long here? No, we would not. No slope, and etc. And by this point, we realize it's trading in a channel. So what do? We mark the highs, right? And we mark the lows. And we wait for a break one way or the other, okay? And so when we get a signal like that, and then we pop out of that range, that's when you want to get in. And especially if the 20 has started to slope in your favor. Or, again, wait for these ones that are along that upsloping 20. Okay? And very easy money there. Now, we were told by the system to exit here, right? A couple weeks ago. Did we go short? Definitely not here initially. Now, if you look at the prior low, it's right here. The exit flag is sort of in the way of that little candle, but it's there. So when you see that it's breaking that low and you have that slope lower and you really have no support until you get back down here, yes, you want to enter that trade. Or if you want to be extra safe or just more conservative, you wait for that next pullback and then that red re-entry dot along that downsloping 20. So in other words, what you want to do is make trading easy on yourself. Okay, you don't want to overthink it, and you don't want to take excessive risk. In fact, you want to take the least amount of risk possible. So the only way you do that is to stack the odds in your favor. And the way you do that when you're trading is to trade with trend, with momentum, and with a money management plan that works in your favor. In other words, when you see a trade like this, that is textbook, right? High degree of slope on that 20, right along that 20, and in a very strong trend on a very popular stock, you do not want to go in and put your whole account in this trade, right? You still want to put 5% or less, right? You want to put a small amount of your account in every trade. You do not want to overexpose yourself, because you never know what can happen, okay? Never know what can happen. So, but those consistent wins, and some of these are not small. If you look at this one here, we got in just below 650. It went all the way to 850. I mean, that is not a small move, and it happened in about a 2-week time frame, right? Those are huge. So, you will hit those home runs. Just out of sheer luck, just by consistently taking these signals, you will hit the home runs as well as the base hits, okay? And that's what matters, and grow your account over time. There's no need to take that risk. Let me go back to Apple and show that 5-minute, and then I'll answer a couple more questions here. So let's go to the 5-minute chart and see how it would have performed. And here it is. So again, it depends on the volume that day or how active or, how much the stock is moving, but you are going to get the same types of setups. Do you want to trade in here? No, you do not. You don't want to get chopped around. Okay? You want to trade when there's a clear slope in your favor. Okay, so this re-entry here would have been beautiful. All right. And again, this is a 5-minute chart. And we're going from about, 124 or so, 124 and a half, down as low as 121, but even getting out back here 122. So 2.5 points in what is that, a half hour, 40 minutes? I mean, amazing. Same thing here, and we can look back, and again, it's the same thing. This is closing one day, opening another, and the gap, you're going to get that. But these are the kinds of trades you're looking for. Okay, that's the nice clean setups that happen along that slope That is all you need. All right. Now, May was saying, can you show how you can find immediate opportunity in scanner? Yeah, absolutely. I will show you. Just let me run through a few more stocks, and then in about 10 minutes, I will go through that, as well as the expert commentary, which is another great feature of this indicator. And Randall is saying, I believe you're saying, when are the dots painted? Well, there's two indicators that are part of this formula. Okay. Now I can't reveal those, but when those two indicators line up, that's when these dots or arrows are populated. Now, the one thing to keep in mind is that during the same bar, price may fluctuate. Okay. So for example, let's look at this setup here. This is a daily bar. Okay. So let's say at 10 in the morning, stock's moving up, and those two indicators line up, and we populate that dot. But at 2 in the afternoon, the market sells off, and those two indicators are no longer lining up. That dot will disappear, okay? But it will only happen while the bar is live. Once that bar closes, if there is a dot, it will be there permanently, okay? And if there's no dot, there will never be a dot there, okay? So in other words, once that bar closes, that's when you want to look for that dot or that arrow. And it works the same on a 5-minute, right? Every 5 minutes, there'll be a new bar created. So within those 5 minutes, while price is fluctuating, you may see a dot or not see a dot. But as soon as that bar closes, if there's a dot, it will be there for life, okay? So it does not repaint after the fact. It's only during the live bar. Okay.
Hey, Vince, it seems like a good time to bug you with a question from YouTube. So Photostrated on YouTube says, can you ask Vince, I see you have the volume indicator at the bottom of the screen. Mm-hmm. How do you use this with your system?
Great question. So I look for crazy volume. All right. I look for volume that is 3 times or higher the average. That gives me an indication that something is going on. And normally, you will see that on pullbacks. So one great way, let me just take a minute here and tell you how to spot where the smart money is buying. I'm sure you've heard that term, the smart money, meaning the institutions, the hedge funds and the mutual funds and the professionals on Wall Street that have a lot of money to put into the markets. What ends up happening is when you get a pullback, a sharp pullback, and they step in to buy, you'll see a huge increase in volume. And again, you only want to look at, 3 times or higher the average of volume. And so the stock will drop. You'll get a ton of volume, let's say. I know you don't see it here. I'm just drawing it as an example. Then you'll see the market trying to recover, right? You'll see price trying to move up. If it does not get above that previous high, okay, if it fails and comes back down like this, and, volume was heavy along the way down, was lighter up here, now starts to get heavy again here, okay? And this low ends up being slightly higher, either at the same level or slightly higher than this one, and then moves higher. That's how you know that smart money is buying. They're building a position. Now, as soon as price crosses the midpoint high, meaning the highest point between those two lows, that's when you have a confirmed double bottom. And that's when you know they are just going to continue to run it up. Okay. And so you want to look for that on volume. Otherwise, you want to ignore it. So if you ever see a strong trend like this and there's low volume, that is actually a good thing. Low volume means a continuation of that trend. High volume out of nowhere means a deviation from that trend. Okay. So again, if you've got steady trend, low volume along the way, then you start seeing higher volume, you're probably near the top of it. So only pay attention to the large volume, nothing else. This also works with futures contracts. Again, here's oil. I just want to show you as many examples as possible here before I run the scanner. So here's light crude. Again, it doesn't matter what the market is or what time frame you're trading. What matters is, are you trading during flat times? Because if you are, you're losing money. Or are you trading during times when that particular market is trending? That's what matters. You want to trade with trend and with momentum, nothing else. And Victory makes it very easy to spot when there's a trend and what degree of momentum you have during that trend by the slope on that 20. Okay. For those of you who trade Bitcoin, let's look at Bitcoin. We'll also look at Ethereum, right? So for the longest time, it really wasn't doing anything. Do we want to take any of these signals? No, we do not. But one thing we do want to do is mark the highs and the lows of this range, right? So draw a box around the high and the low of that range. And then once you break out, especially if you have slope on the 20, that's what you want to look for. And then from that point on, you want to jump in on these trades. Again, now this one, you can say, hey, the 20 was flat, so I'm not going to go in. But if this was the all-time high and you're breaking out to that high at the same time, then you do want to get in. Because look, when it breaks, the slope is already sloping higher. You want to get in here, okay? And so that's how you want to trade this. Very effective. Ethereum, same thing. Look at Ethereum. Went flat for the longest time. Once we broke out and we had a trend, all we had to do was wait for these dots to reappear. So no matter where you would buy along this trend, you're bound to make money, right? And the fact that the bars are all colored green along the way helps you remain calm and not get scared out of this trade, right? Until we get a change in color here. What else? Oh, how many of you trade penny stocks, right? I mean, I'm trying to cover all the full spectrum, right? Let's look at a couple of penny stocks. It works the same way. So whether it's what we call a pump and dump, or whether, you know, this company was very small and then came up with a product and the revenue started to grow and the company started to grow and the price started to go up, it doesn't matter. This is strictly based on price, right? It's all technical analysis. So you're flat the whole time. You want to box this area. When you break out, you want to pay attention to it. And if you get an entry along that sloping line, you definitely want to get in. Now, when you get in, it starts moving your way, right? You want to scale out. How do you scale out? Well, if you get in here, let's say, and there is a prior high, let's say there was a prior high along the way. I mean, the first one's a little too close here, but let's say it was a little further away up here, then you want to scale out a third of your position there, right? You go a little further and you can use the Fibonacci extension tool there as well to find that spot. You can exit again. And your final third, you want to let it ride until you get a change in color or an exit, right? Or if you're just happy with the amount of profit you have, you walk away. Because the key here is that if we got into this trade, but the market quickly turned around, it would have stopped us out quickly, right? It would have changed color quickly here, and we would have had a small loss. So it only takes one of these to eliminate dozens of those small losses, right? So over time, when you trade with trend and momentum on your side, the math is on your side, right? Because you're going to have more winners than losers, but also your winners will be bigger than your losers. With that kind of math, you cannot lose long term, right? Unless, of course, you don't follow proper money management, meaning, you know, you say put 5% in every trade for a month or two, and then suddenly you put 50% in one trade, and that happens to be the loser. Then you're going to get wiped out. So be disciplined, follow the rules, and the money will come. Again, it works on everything, any time frame, any market. You want to follow trend and momentum, you want to take those entries along that sloping line. Let me show you a couple of other great features with this indicator. And this, I have to thank Jeff and his team at Metastock for creating this. If you go to the top left here and click the View tab and click on Expert Commentary, it'll bring up this box. Now, along with this, there is a little black triangle that appears on the most recent bar. It always defaults there. Now, I like to have a black background, so you're not going to see that there. But you can move that to any bar you want by either clicking above one of the bars or by using these buttons on the top of the commentary window, right? So let's go to this bar here and right here. So it's right here where we get the green arrow. And so this commentary will explain a little bit about myself, about our company Trading Winds, and about the indicator. But it's this space here in between these paragraphs that you want to keep an eye on. Now, if there is something going on like a trade like that, like a new trade, you will see text colored with the same color of that trade, meaning if it's a long, it'll be green text. If it's a short opportunity, it'll be red text. Okay, very consistent. And so it's telling you that it's signaling a long opportunity. Now, once you get in that, if you're going to take the entry here, I always like to put my stop just below the most recent low, okay, as long as it's close by. And it's usually one or two candles behind. But then as we move forward, I'm gonna move the arrow one candle ahead. So now we're on this candle here. Now, if you go back here, you'll see that it says the victory system is currently in a long position, but traders should look to exit this position if the price of the security closes below 341.57. So in other words, it's telling you where to put your stop loss, and it is trailing it along the way. So if I move forward again, you'll see that now it's changed, right? And if I move forward again, now it's changed again. So as price moves up in your favor, it's going to give you a new stop level. So you can trail that safely. And if it turns around and goes through that level and stops you out, so be it. But if as soon as you get another reentry, you get back in, right? So it's really handy. It really helps to hold your hand throughout the whole process here and helps you keep stay disciplined. So it'll really help you navigate your way through. Now, as far as the scanner, if you go to your top left and click the power console button here, the letter P, 3 tabs down here on the left, Explore tab. You want to click there, and this top window here are all the strategies. You want to scroll to the bottom because they're in alphabetical order, and you want to look for Vora Victory and Vora Victory Reenter. So the Vora Victory, if you mark that, it's going to scan for those new arrows, green or red. If you click the Victory Reenter, it'll scan for the circles, red or green. Okay, those reentry opportunities. Or you can click them both and scan for both. Now, when you come down here, you select the markets you want to scan. So you can create your own custom list and scan those, or you can select certain markets. What I like to start with are the Dow Jones 30, the NASDAQ 100, and the S&P 500. Now, for this, just in the interest of time, I'm just going to do the 100 NASDAQ and the 30 stocks in the Dow Jones. And then if you go to the right, you select your time frame. So if you're a day trader and you want to scan every 5 minutes, you click that. I prefer the daily time frame, so I'm going to select daily. If you're more of an investor, a long-term investor, you can select the weekly or the monthly, right? And just make sure here that you have the 2 correct systems, and then click Start Exploration. And you'll quickly see how quickly it's going through those charts. Look at that. We selected 126 charts, and we're pretty much done. There we go. So that was the Vora Victory, and now the reentry. Both are complete. So now we're going to highlight Vora Victory. We're going to come down here, and there's all these columns. So if you see a number 1 under New Long, that means that is a long opportunity. If you see a 0, it means it's not a long opportunity. So you'll see the one on the short side, meaning it's short. So you can click on these tabs and sort by only longs, if that's what you want to do, or only shorts, if that's what you want. You can sort by price, the closing price, or the symbol alphabetically, whatever you want. I prefer to sort by slope. The slope is that slope on the 20-period moving average. Okay, this took a while for us to figure out how to calculate this, but we managed to get it, and it's been super helpful. So what you want to do is click on the tab here, and you want to sort in a descending format, meaning for long trades, you want to look for the highest positive number. And for short trades, you want to look for the highest negative number. Now, I prefer to do something more than 5. So like this short VRTX, that's a negative 8.7. That's in my range. That's good. Same with Charter, 5.9. But once we get below 5, I won't even look at those. Okay, that's me. I want a more significant slope. And so, you know, if we look at some of these, all we have to do is highlight it and then click Open Chart, and you'll see the chart open up here. And so you see the slope on this stock, and there's that short opportunity right there. So it's that quick to find a list of candidates. You can then click the reentry and look from there, right? So here's a long on Comcast. Is it over 5? Yes, it is. We click open, and boom, there's the reentry along that nice slope. So let me give you a couple of trade opportunities here that I see for coming up for next week. 2 are right here. CMCSA is one, Comcast, that's a long. Applied Materials is another, AMAT, right here. Look at that trend, look at that slope, there's your reentry. And the other 2 things to consider about these 2 stocks is, this past week we saw that sell-off, right? Yet these 2 were unaffected, meaning they remained above the 20, they remained green the whole time. So that shows strength. Now, if the market turns around and goes higher this week, do you think these will go with it? I think they will, or at least the odds are in our favor. That's all we're doing. We can never know for sure, but the odds are in our favor that these will go higher. There's another one as well. Let me close this, and that is DraftKings, right? Have a look at DraftKings. Same thing. For the most part, held up during the week. Look at that slope, and there's that new reentry along that upsloping 20. Now, in the training material that comes with this indicator, and we do live sessions. We did one last week. We're going to do one coming up. I think it's the following week. I will also teach you how to incorporate charting patterns here. It's kind of an odd-looking cup and handle, but it is a cup and handle, one of the strongest charting patterns out there. So when you get a cup and handle pattern along with an entry, along that slope, it's that much safer of a play, a very, very high degree of success if you take those trades. So these are the kind of things you'll look for, and we'll teach you how to look for all those. If you're looking for a couple of short plays, Molson Coors TAP is one. Look at that slope. The other thing is, you know, are we about to break a major low here and then head into an area where there's less support? Kind of looks that way, right? So again, there's an opportunity. And the other one is EIX to the short side, Edison International. Nice, consistent, lower lows, lower highs, right? And we have a new entry along that slope lower, okay? You don't want to trade when it's flat. You're going to lose your money. You want to trade when trend and momentum are on your side. I'm going to hand it back to Jeff, see if we have more questions, and let him explain how you can get a copy of this indicator for yourself. I will say one more thing. If you do take advantage of this opportunity and get this indicator today, our staff will also reach out and give you a month of free membership to our pro service, where we get together with our members 3 times a week. We have live Zoom sessions where we look for trade opportunities, and we'll also email those opportunities out to you. And during those live sessions, we spend an hour and change at a time answering all your questions, okay, and looking for trade opportunities. So, Jeff, I will hand it back to you if there's questions. I'm happy to stick around, but if not, thank you again for having me on today.
Yeah, we have one quick question I think
Sure.
we can ask you. PK Rocks out of YouTube says, I'm an option day trader. I also use the 20-day in a similar way with the Bollinger Bands.
Mm-hmm.
My question is do you use the volume weighted average price line in intraday trading?
I don't, but that's mainly because I don't do a lot of intraday trading. If I did, yes, I would. I think the VWAP is very, very helpful when day trading. I just don't anymore. There was a time where I exclusively only did day trading, but nowadays I'm presenting, and I just don't want to sit in front of the screen all day. So I use the daily and weekly timeframes for most of my trades. But yes, the VWAP is very helpful.
I like this question from Michael. He said on A applied MEL, it showed a slope of 13.07. What is that referencing?
So that's the degree of slope on the 20. So anything over 5 is what I would consider significant. So when you're seeing something to this degree in the 13 range, that is very significant. That means that the odds are even greater in your favor of this trade actually turning a profit, because for whatever reason, right, buyers are really pushing this up. So the higher the degree of slope on that 20, the stronger that reaction should be, after that retracement. Sometimes, it'll consolidate for a while before moving. That happens. But a lot of times, as you've seen through these examples, and especially when you're near an all-time high, right? Because imagine this moves just a little bit higher, moves above this high. There's no resistance there at all. And you have that kind of momentum, this should easily get to your next target.
And this comes up a lot, but you typically look for a cutoff of plus 5 for longs and minus 5 for shorts, right?
Absolutely. Yeah, absolutely. Okay. Yes.
And I want to reiterate that the slope calculation that Vince designed is not an angle degree. Just a higher number represents more slope. It doesn't mean that it's going to look like it's 13 degrees off of 100 or something like that.
Exactly.
So, okay. Walter wants to know, are you basically measuring money flow? I don't think that's in there at all.
No, it is not. I'm not measuring money flow. I mean, you can add other indicators to this if you want. You can throw a money flow indicator on your chart if you prefer trading with that, but you just don't need it. Again, I tried to simplify things. When I first started out, I had numerous indicators on my chart, but the problem with that is I had fewer and fewer opportunities, because to try to find a time when all of those indicators line up at the same time, it's rare. So you end up having fewer and fewer trade opportunities. So what I was able to do over the years is find the two most important indicators, or most effective, I should say, that when those two line up, you typically get a good response. And that's all that's programmed into here. And again, I've been using it since last year very successfully, and you've seen the examples. I wouldn't cloud my chart. Like for me, the other thing is when I put other indicators on here, I end up missing opportunities because it's just more difficult to read. The cleaner the chart, the easier to read.
Right. We have a lot of questions still coming in, and I'm going to do my best to answer them by message. I want to say thank you for everybody for your interest and your things. We could go on for another hour, but we just don't have it. I do have one more comment for you. Long says, thank you for your great presentation. I agree. Thank you again, Vince, for coming in.
Wow.
Great job today.
Thank you.
All right. And then I muted the wrong person. One of the other questions that we had coming in was, is there a standalone deal for this indicator? Again, I asked that. I'm going to go through pricing, but yes, you can absolutely buy this by yourself. So, or standalone, or you can buy it as part of the package as well. So let me go ahead and kind of turn on here. Let me make me the presenter. I'll go through kind of the pricing on that very quickly. We'll get to Barry Burns. Barry does have the advantage of being right before me, so we are running a little bit long, but he can go long too. I'm not going to be offended at all. So here's a picture of the Victory method and kind of the add-on and the way that that looks. If you are interested, and Vince does a good job of showing kind of the detailed commentary, the expert alerts, the full market scanning. You can scan for both triggers and re-interest. And it does have system tests. We had a lot of people say, well, okay, how well does it work on this or this particular instrument? And you can actually, one of the things that's advantageous about system tests is being able to know that it worked on Apple, but maybe not GE, or, being able to identify the stocks that it works best with. And very, very happy that we included system tests with it. So normally the Vora Victory method is a one-time cost of $1,997. Here at the Summit, we're going to do a money-back guarantee and a special offer of $995. So for $995, you're going to get it. It's a special offer here at the Summit. It's a one-time cost. We include that with a 30-day money-back guarantee. If you need a copy of Metastock and you order this, we'll actually give you a trial to Metastock as part of it. And you can give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat. It also is included, and I think we have some of the best, we have some great experts today. It is included, of course, as part of this full package that we're doing today, which includes candle profit systems, the trade trend, the Victory method, the Top Dog trading toolkit, the Learn Metastock subscription for 3 months, the Unleash the Power of Metastock training set and DVD. You're going to get 2 years of stocks and commodities. They're throwing that in for free. And you'll also get our white glove service, which includes questions answered anytime you need them from our on-site support department here in Utah, as well as help installing things, help with anything that you need. Normally, you could buy all this separately from our website. It's $3,739. Coming up with a special that includes everything you need. And 3 months of Metastock is $1,645. So you can call us 800-882-3040. You can get messages at metastock.com/saleschat, and you can also order it online at metastock.com/summitdeal. So very, very much recommended. These are the add-ons that most of us use in-house here. And so take a look at them. They come highly recommended, and they're some of the most popular products that we offer. So I do want to say very quickly, again, the phone number for that is 800-882-3040 or metastock.com/saleschat. And thank you for Stocks and Commodities for supporting us and for helping us with the event and for sponsoring it. They've been sponsoring it for 8 years now. They do a great job. And you, as part of the Summit package, you're going to get 2 free years. But you can also take a look at our website. If you're coming into YouTube, go to metastock.com/traders-summit. Register for today's session, and you can sign up for all kinds of really cool freebies. Like you can get a free month of Stocks and Commodities. They've been making articles since 1982. They have 1 million subscribers. You can get that. Also, Barry's giving away an e-course called the Rubber Band Trading Strategy that you can get just by signing up. And you just have to go to metastock.com/tradersummit, fill out a registration form, and it'll give you an option to get that for free for 2 weeks as well. So Vince, if you liked what he did, he has 2 courses that he's given away. It's all free. You just go to metastock.com/tradersummit. So traders-summit. So I see a lot of questions coming in. I'm going to answer those as best as I can, but we're going to kind of move along here, and we're going to get to Barry Burns. Barry Burns is a friend of mine. We have him all the time. He does a Top Dog trading, and I really like the way that he looks at and counts waves, and it's very, very clean way of doing things and kind of a clean way of looking at the trends. He's probably going to talk to you about taking stocks to court and kind of judging them and all that kind of good stuff. He does a great job. Let's bring him on here. How you doing today, Barry?
Hey there, Jeff. I'm doing great. How are you, my friend?
Good. For a minute, I didn't think we were going to be able to hear you, so I got a little nervous. But we can hear you? You're coming through?
Yep. Can you hear me? Okay. Awesome, 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 awesome. Great. Let me bring up my, let's see. Gotta bring up my slide here so you can see me. Oh, that's being funky. Okay. I'm going to remove that little window there. Let's see. Okay.
And while you're getting that going, Sam, yes, you can run Metastock with Parallels or Bootcamp. It requires one or the other and Windows. Barry, we can see your screen.
Oh, you can?
Mm-hmm.
Okay. That's great. Yeah. Oh, my windows are acting weird. Oh, okay. You see that window. Okay. So that's really strange. Okay.
Yeah,
Well, nothing like professional technology. There we go. Okay.
You've got some. Vin says it's good to see you, Barry. And I'm gonna get it out of your way. I forgot what I was gonna say. It's your turn.
Okay. Hey, Vince, how you doing? All right. Thank you for that. Okay. I'm just wrestling with my own technology here, but oh gosh, I'm seeing my video now. I forgot about doing the video, but then I saw Vince doing it and I thought, oh, that's good. I should do that too. All right, got all my water here, got who knows what in the background. All right, now I'll actually look at the camera and let me adjust that a little bit so that it looks like I know what I'm doing and that I actually have some, and then I got, there we go. There it is. Okay, little Egyptian theme going on in the background. Oh my gosh, nothing like being a professional presenter. Well, it's a good thing you don't have to be a professional presenter to be a professional trader. So that's all I can say. All right, thank you to Stocks and Commodities Magazine for sponsoring this. By the way, I have personally been a subscriber, paid subscriber to the magazine for, man, I don't even know how many years, many, many, many years. I love the magazine and highly, highly recommend it. It's, I look forward to it every month. And when it comes in, I just gobble it down. And it's just amazing. It's an amazing magazine, seriously. I mean, at least over 10 years, maybe 20, I don't know. But I can't remember a time I didn't subscribe to the magazine. So it's something I really look forward to every month. And I highly recommend it. And Metastock was actually the first charting platform, charting software I ever used. So I've been with Metastock for many, many moons as well. And again, just love it. It just keeps getting better and better and better. So want to thank everybody for putting on this event. And yeah, Jeff, you and I have known each other for a long time. And I really want to thank you for your professionalism, your generosity, and for, I know it takes a lot of time to put these events together, especially when dealing with multiple speakers. Okay, so let's get right into it. So today I'm talking about trade timing strategies for entries and exits. And let's click our little magical button there. It came up with a blank screen, which is typical of me. So there's my ugly mug. Obviously, that video or that picture was taken a couple of days ago. I'm the author of Trend Trading for Dummies. Wiley and Sons approached me, just its weirdest thing in the world. I got a call out of the blue, didn't even want to publish a book. And they called me up, they said, hi, we want you to write a book for us. I'm like, okay. All my friends who have been submitting manuscripts to big publishers like Wiley and Sons hate that story. It just fell in my lap. I guess they did their vetting beforehand, obviously. And Stocks and Commodities Magazine, I've received numerous Reader's Choice Awards year after year, so I appreciate that. And if you voted for me, I appreciate that as well. Also, I've helped some other people write books. I've done presentations, not only for retail traders like today, but also for professional traders industry traders, CME Group did a presentation for them. Metastock, obviously, York Exchange, I've done presentations for them. And let's not belabor this point. Now, this is a very important point, and I want you to understand that these legal disclaimers are not just legalese. The powers that be, the regulators, have put this together, these statements as well as others, and go to Metastock, go to topdogtrading.com, and read the full disclosures there, because they are really there for your education. They're there to protect you. These are not, again, just legalese. These statements are actually there to, well, this is where you should begin your trading. When people ask me, well, where should I, in fact, I just had this email yesterday where somebody said, where should I start my training and my education? And this is it right here. Believe it or not, this is education. This strips away all the hype, and it tells you, okay, here's the anti-hype. Here's what trading really is about. Here's what you need to know. So look at it in that light, and I actually encourage you, even if you've been trading for a long time, go back and read those legal disclaimers. They're there to protect us. Now, well, let's see. I've got my questions. Yep, I can see the questions, so that's awesomeness. So my next question for you is, who are you? So let's make this a little engaging, a little interactive here. And I'm going to actually invite you, this is not a rhetorical question, but go ahead and type into the question box, chat box, whatever it's called there. What are your most common trading problems, struggles, or frustrations? Go ahead and type those in. Let me take a look at this. Let me pull this over. Since we're here live, I mean really live, let's talk about some of this. Now, I can't see if there's anybody typing anything in, I don't know, Facebook, YouTube, or wherever. I can't see those comments, so I can only see the ones in GoToWebinar itself. So let's see, here we go. Oh, hi, Vin. Vin says, good to see you. Beard is a new thing. Yeah, this is my coronavirus beard, I guess. That sounds kind of weird. But yeah, a lot of my friends have done things for coronavirus to, I don't know, mix it up or whatever. Some people shave their heads, and I'm like, I ain't shaving my head. Other people grew beards. So I'm like, okay, I'll do that one. All right, so here we go. Oh my gosh, okay, I didn't even see these notes. Okay, so Amal says, understanding timeframes. I get that a lot, by the way. That's a very common one and a very important one, so good for you. Michael says, pulling the trigger to sell. Excellent, we'll talk about that today. That's actually right on point. Emmanuel entries, we're gonna talk about that today as well. Ralph, as a day trader and scalper, making exits. Ah, excellent. Very important. James, greed. Take greater risk than I should. Gambler mentality. Well, good. You know what? At least you're aware of it. That's step one, is to be aware of whatever the problem is. So good for you. Mike, entry of exit points, of course. LL, we hate leaving money on the table. Yep, common thing. Absolutely. Leland, identifying protective stocks to look at. Okay. Mike, good. Entry, exit, hate, leaving. Okay. I'm not sure what that even means. But Ahmed, exit plan. Okay. So a lot of the similar things. By the way, so I took a survey of tens of thousands of people, literally tens of thousands of people asking this question. And here were the most common answers that came in. They would say, well, and I grouped these together, I clustered these together, the most common answers. So a lot of people would say, well, I get into the market, then I get stopped out, and then the market goes back in the original direction of my trade after I got stopped out. All right, so entries. Basically, we can call that entries, but timing your entries. Another one, getting out of big moves too soon, so not making the huge profits. Again, something that a lot of you mentioned. Getting stopped out too soon or too often. Yep, that's a big one. not knowing the best place to exit the market, and trading a trend that doesn't follow through. So what I want to share with you is that you are not a uniquely bad trader, okay? The problems you're having that you just typed in here, and this is why I did this, is not unique. So don't feel like, oh, I'm the only one who has these problems. You know, trading can be kind of isolating. And we think that, oh, we're the only ones who make these problems. Again, tens of thousands of people surveyed, and these were, I mean, we had a lot of other answers too, but these were the top 5. That's pretty much the same that you guys were typing in here as well. I'm still going down because some more answers come in. Yeah, cutting my position too soon. There you go. That's bullet point number 2. Correct. Oh, Mike's correcting his typos. That's fine. No problem, Mike. Sal, yes, exit plan. Dean, buying at market instead of being patient for a true setup. Oh, that's a good one. That's a good one. So a lot of it has to do with entries and exits, right? And so here's what I want to do to at least hopefully encourage you that you are having the same problems everyone else is having. And really, I guess when it comes down to it, that's really what all trading is. We can summarize this thing that when to get in, when to get out. That's it. Okay, so my trading methodology is to measure the energies in the market. The energies. Now, what do I mean by energies? The energy of money. Energy of money. Supply, demand. Where is that thing moving? So I break that down into 5 things, 5 energies, uncorrelated energies. Number 1 is trend, direction of the market. We like to trade in the direction of the trend early in a new trend, right? Number 2 is momentum. How strong or weak is that trend? I remember I hired a mentor. I was doing trend trading back in the days of yore. By the way, I've been trading for over 50 years. My dad was a stock trader, so I kind of grew up with it, and he began my formal education at our dining room table in Detroit, Michigan, when I was 8 years old, knee-high to a grasshopper. So that's how I got 50 years of experience under my belt. Over 50 years, actually. I'm 62 now. I just turned 62 about a month ago, and feeling good. So the thing is trend. I was doing trend trading for a while, and I was like, yeah, 50-50, and I could not for the life of me figure out why I was having the losses. I literally print out my charts, look at them, and compare the winning trades to the losing trades, and I could not discern the difference. They looked the same to me. So I hired a mentor, guy charging me $5,000, worth every penny to solve one problem. What's the distinction? What is the difference between the winning trades and the losing trades? And he taught me the difference between strong trends and weak trends. And man, that was one of the biggest learning moments of my life. In fact, he actually had me take a Post-it note. There you go, actual Post-it note, look at that. I can't see myself now anymore. Okay, yeah, so, okay. And he had me write one question on there. And that question was this: is this a strong trend or a weak trend? That's it. I put it on my monitor as he instructed me to, so I would answer that question every time before I took a trade. Dramatic. It's one of the very few things that turned my trading around like boom, overnight. Amazing. Totally worth the $5,000. Made that many times over. Okay, so that's number 2, momentum. Number 3, so basically just to, there we go. So we're looking for early in a new trend. Why? Because the trend is your friend until the end. That means the longer the trend continues, the less likely it is to continue, just pure stats, pure probabilities. Number 2, is it a strong trend or a weak trend? So early new, strong trend, then, okay, that's awesome, but now when do we get in? And that's basically what you guys were asking, okay? And so cycles is the answer to that. And again, this is another thing that turned my trading around pretty much overnight. These were really the 2 things. I didn't know anything about timing my entries. And so I hired another mentor for that, paid him over $10,000, and he taught me about cycles, when to time your entries. And then number 4, support resistance, buying up support, shorting of resistance. And then number 5 is what I call a fractal energy. And that simply means looking at a longer term time frame to confirm the shorter term time frame. And that's it. That's my whole methodology right there, my friends. 1, 2, 3, 4, 5, 5 steps to profits. And I guess we need to go in a little more detail. So the instruments, this so far it's just kind of like theory. Okay, I get the concepts, the principles. But in order to make our trading rule-based and objective, we need to use mathematical instruments for measuring those 5 energies. So for trends, I just use a moving average, 50 SMA, pretty darn simple. And then for momentum, I use a, think of this, momentum indicator. Wow, that's shocking. Okay. And for cycles, I use an oscillator, and I'm going to share a little bit more about that one today. We're going to zero in on that. Support resistance. If you're day trading, I like to use pivot lines, floor trader pivots, as they used to be called, and previous swing highs, lows, Fibonacci, the usual suspects there. And then when I use multiple time frames, I want to make sure that that longer term time frame is 3 times the length of the shorter term time frame. You can go up to 5 times if you want to. But the further out you go, in other words, like if you were to trade a 2-minute chart and then use a 60-minute chart as your longer term time frame, there's too much disparity between those two. So 3 to 1 I like, 5 to 1's okay. And here's what we do. At each entry point, again, we're trading probabilities. There's no certainties in the market. Famous old saying is that the market can do anything at any time. And this is why when we're using technical analysis, or frankly, even fundamental analysis, we've got to be very, very careful that we always manage our risk. Managing risk is more important than finding profitable entries. Now, they're both critical, but professional traders always focus on managing risk. In fact, I say that, but I got to tell you, good professional traders. Now, there are professional traders who got really hurt with GameStop, right? Because they put out too much risk. They're too confident in their position. And were those professional traders? Well, technically, yes, but even they make mistakes because they get too aggressive and they got really, really hurt because they broke their rules is what they did. So here's how I trade. I look at a probability scenario as defined by, at each entry point, how many of those 5 energies I just shared with you are aligned, all being bullish or bearish. So I give it a score of 1 to 5. Pretty simple. The higher the score, the higher the probability. I take each trade to court, meaning that I want 5 independent witnesses to establish a preponderance of the evidence. So these 5 energies of money flow, each one is uncorrelated to the other 4. That's why we say independent witnesses. And that's a preponderance of the evidence. I like to take 5 out of 5 trades where all 5 of those energies of money flow align. And then I look at, okay, 5 out of 5, I will take that trade every day of the week. And I still put my risk management on my stops. And not only protective stops, and by the way, I use hard stops, not mental stops. So hard stops, meaning they're in the execution platform. And even then, I still add a hedge. I still add a hedge. And I learned that the hard way. Most of the stuff I've learned in trading is from losing money. So, that's the thing. Learn from someone else who's already made a lot of losses so that they've paid for that part of the education for you. And then leverage their losses for your benefit. So speaking of hedges, I remember one time right before Christmas, literally 2 weeks before Christmas, I was down visiting my mom and dad in Clearwater, Florida. Had a really great trade on. Everything looked beautiful, except the next day, that stock opened down 50% lower. Lost half my money on that particular trade. And I made it my New Year's resolution, even though I had a hard stop in right in the execution platform, the stock just gapped down 50%. So it never traded at the price of my protective stop. So if you had a limit order, well, you just wouldn't be filled, but on paper, you'd still lose half your money. And by the way, that's real. I know they say that's not realized losses, but to the broker, that's pretty darn real, because they may change your margin by doing that. So, because they're going to manage their risk as well. Now, I had a market stop. So that means wherever the market traded the next day, boom, that's where I got filled. And so I would get filled. And so I lost half my money on that trade. And I decided my New Year's resolution was going to be to learn how to hedge with options. And I do that now. And so even if the market goes beyond my stop, never trades my stop, I'm hedged with that. So as the market goes down, I actually make money on the options. And you can put together what your maximum loss will be that. And so now I do that all the time. And since I've done that, I've never had that kind of disaster before. Okay, so we talked about these 5 energies, just looking at our clock here, okay. So here's how they look on charts. All right, so energy number 1 is starting a new trend. So I've got my own wave counting. This is not Elliott wave, by the way. This is, well, for lack of a better term, they're Berry waves. And they're very objective. So they're not like Elliott wave where they're imposing. And Elliott wave's great, by the way. I traded it for years. I have a friend who traded it, and he actually taught me. And I'm not saying anything bad against it, but for me, just wasn't objective enough, because he'd keep, have to keep recounting the waves, because they impose this concept that every trend has 5 waves. And now my friend did very well trading. So again, I'm not in any way, shape, or form disparaging Elliott wave. But I just decided, for me, the way my mind works, which is kind of scary, but I wanted a very objective way. And so Berry waves can be more than 5 waves. We're just measuring what the market is doing. So we want to really get in a first retrace in the trend. So trend is up. There's your 50 SMA. Wave 1. And then we come down to wave 2. That's the first cycle low after the 50 MA starts turning up. That's a very high probability trade because you're getting early in a new trend. So that's number 1. Number 2 out of the 5 is momentum. Now, this is our momentum indicator here, the top dog trading momentum indicator. And it's angling up. So that's good. That indicates we're early in a new trend, and that trend is strong. Now, here's the real secret sauce. And this one, I don't know, I came up with it independently on my own, but I hate to say that I'm the only one who uses it, because every time I say, here's something I created, then somebody says, oh no, Billy Bob Barron of Trading created that in 1643 or whatever. Anyway, cycle low. Okay, we're going to talk more about this. Cycle low. That's your timing. Timing, so that we know, or have at least a high probability that this retrace in the trend, that's it. That's the time to get in. In fact, I got trained at the Chicago Mercantile Exchange, so real trading education. And when I moved to Chicago, got an apartment out there, and the guy who trained me was the #1 trader of the firm. And he said to me, retail traders, that's how he said it, retail traders are often right, but at the wrong time. And he really didn't do a great job of teaching me how to time my entries. I learned that from someone else, but the concept is absolutely true. And so if you've ever taken a trade, gotten stopped out, and then the market moved in your direction after that, one of the answers in the survey, then that's exactly what he was talking about. If you can nail that cycle low, then, oh my gosh, again, that turned my trading around overnight. And I thank God for the gentleman who taught me that. Okay, so early in a new trend, strength. So early in a new strong trend. Cycle low with a mini divergence. We'll talk about these mini divergence patterns, but that's the key. It's this pattern on K here that is the key. Support, 50 MA, momentum, and here's our next target time frame, 10 minute, 30 minute, there's your 1-to-3 ratio. And again, the key here, all I'm really looking for is momentum in cycles. Again, we get concurrent cycle lows, Momentum here is angling up, and that's what I want. Okay, because I don't want to trade against momentum on the higher time frame. Do not want to trade against momentum on the higher time frame. Trend, I'm not that concerned about on the higher time frame. Momentum, I am. Strength. So because otherwise, if let's say that momentum was down on the higher time frame, I could simply be trading an ABC complex retrace, and the market goes down that on the short-term time frame. Very important. Very important. Okay, so let's focus on cycles. My favorite trading technique for pinpointing market highs and lows for entries and exits. We need a good cycle indicator. Use the right indicator, the right inputs or parameters, and here we go. So in Metastock, what I use is what's called the stochastic oscillator. And again, this is not a proprietary indicator. And so if you got Metastock, you got it. You don't have to buy it. All right. So what we do though is we change the parameters. So we do in all my trading, I don't use the defaults of any indicators. Now, I don't use any proprietary indicators. Now, if you get the Metastock add-on for top dog trading, we do give you a lot of extra stuff there that automatically plots on your chart for you. And we'll show you that at the end, how powerful and amazing that is. But this is what I change the stochastic oscillator to. So %K, time period, 5. So think of that as time period. Well, how many time periods? 5. 5 bars, essentially. Slowing, 2. And %D, 3. Method of the moving average, simple. And then this is, you can customize this any way you want. That's just for visual purposes. So I might want to write these down. Okay, for %K, period is 5, slowing is 2, D is 3. Now, having said that, there you go. Okay, again, this is recorded for you, so you can look at this later if you need to, but there it is, very clear. And for using the stochastic as a timing indicator, it was not originally designed to be a timing indicator by George Lane. He created it as a momentum indicator. We're still using that, but just on a different time frame. And then I also like to put some horizontal lines on this puppy dog, 20, 50, and 80. All right, and those help me out as well. And there you go. Ta-da. All righty, so we got to use the right indicator and the right inputs to create our cycle indicator. And yeah, cycle indicator means nailing cycle lows to go long, nailing cycle highs to go short, or sometimes it will just be used to take exits as a trailing stop. So by itself, this one indicator, pretty meaningless. Like any indicator out there, just looking at my time here to make sure that I'm cool, okay? So any one indicator and a $20 bill will get you a homeopathic amount of coffee at Starbucks. So that's why we don't choose any one indicator. Remember, we got 5 uncorrelated pieces of evidence, each measuring a different energy of money flow in the market, supply demand. So when you put those 5 together, and again, the key here is that they're uncorrelated. That's when we establish a probability scenario. So the others are trading cycles in the direction of the trend, early in the trend, only trade cycles that have momentum, only trade when the fractal energy is aligned, the longer term time frame, and only trade what I call second chance indicator patterns. So what are these second chance indicator patterns? Well, they indicate a momentum shift. Remember, George Lane created the stochastic indicator originally as a momentum indicator. So what we want to do is trade momentum shifts where it's shifting from, well, supply demand is shifting, or the money's moving from the strong hands to the weak hands, or the weak hands to the strong hands. So I call this indicator pattern. By the way, there's 6 of them, but today we're going to just cover the mini divergence. So there's 5 others for a total of 6, but today we're going to focus on 1. So here's the how to do it. So you notice here's our good old-fashioned stochastic oscillator. Comes up to the top of the range. KD crosses down. Going short would not be not so good. No bueno. No bueno. Didn't go down very far. Went down a little bit, but not very far. So what we want to do comes back up, and then see, this is what actually my mentor in Chicago meant by retailers are often right, but at the wrong time. So you're right, it's a downtrend. To go short here is in the right direction, but this is the wrong time to take the trade. And if you took it, then the market goes up above this cycle high and you get stopped out. And then, sure, it goes back in the direction of the trend. So you're right on direction, you're wrong on timing. So how do we resolve this issue of timing? Again, it's not just K crossing D. It's not just getting overbought or getting oversold. The dollars are in the details. And with professional trading, there's so many things like that where the dollars are in the details. By the way, that's an ancient Chinese saying that I just made up. Okay, so here's what we want to do. We're going to look for these momentum shift patterns. All right, so we're in an uptrend as defined by the 50 MA. We're early in the bullish direction. And here's the deal. See how K makes a higher low. Price makes a little bit of a lower low. Mini divergence. How many bars does that happen? 1, 2, 3, 4, 5. Wait a minute, what did we change the value of K to? 5. See how mathematical that is? How exacting that is? That's why we changed it to 5. I'm not looking for divergences between swing highs or between swing lows. I'm looking for it within a single swing low. Just 5. Whoops, that was brilliant, Perry. Good job. 5 bars. That's it. So that's how mathematical it is. And, you know, that's why I like indicators because, well, they're math functions. And math is usually pretty right. So that's, if you think of indicators as that, which is literally what they are, math functions, and then learn how to trade these patterns, which ones are significant, which ones aren't, that's the purpose of this puppy dog. 5-bar shift of momentum, and then we're off to the races. And that's your final cycle low. Okay, works good for trend reversals. So we talked about trend trades. We want to trade early in a new trend. Well, that doesn't mean we just trade with the trend. No, we can do counter trend trades late in an old trend because now it's about to end. So we've been going down, 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 down for a long time. And then, of course, the tricky question is, well, when will this thing reverse? And we look again, mini divergence pattern, lower low on price, higher low on K. Mini momentum shift, boom, and off she goes to the races. You can even do it with contracting patterns, by the way. So the market's pretty flat here, 50 MA is flat, contracting, and then again, higher high on price, lower high on K. And that's your momentum shift and kablambo. By the way, that is a professional technical analysis term that all the professional traders use, is kablambo. So that's one you probably haven't seen in the books. So higher, hope you don't mind. I'd like to make, you know, something serious, throw in a few jokes there. I'm not saying they're good jokes. In fact, I'll actually say they're dumb dad jokes, but I am the father of 2, and therefore I am a card-carrying dad, and I'm officially certified to use dumb dad jokes. So I'm not afraid to use that certification. All right, so enough silliness. Summary of high probability trading. We wait for the alignment of the 5 energies to put the odds on your side. And here's my entire trading methodology in one slide, or in one sentence, actually. We're looking to get early in a new trend, number 1. Number 2, that is strong, has momentum behind it. Number 3, at the right time, looking for those little momentum shifts, those little mini momentum shifts within 5 bars. Number 4, support at your back or resistance if you're going short. And then number 5, confirmed by the higher time frame. Again, looking at momentum, strength on the higher time frame. So think about that. We've got strength on the short term, strength on the long term. That's money flow. That's supply demand. We want them on both time frames. And that gives you a very high probability of trading. You put all 5 of those together. Then we still put in our protective stops. We still hedge our position. And it's just crazy ridiculous. So robust and adaptable. What I mean by that is this 5 energy methodology works for any market. I have traded this with stocks, commodities, options, currencies, futures. And why is that? Oh, by the way, also somebody typed in earlier, what's the best time frame? Well, you can use any time frame you want. You could do this exact same methodology for investing, swing trading, and day trading. I would only say that as far as that goes, make sure that whatever market you're trading has enough liquidity. That's very important, average daily volume. And so that you get good fills, good bid-ask spread, and that sort of thing. It's simple. It's objective. I mean, basically, we're counting to 5. Okay, so everything I learned about trading, I learned in kindergarten. Well, at least enough to count to 5. Then I had to add the dollars in the details with those 5 things. So this is not complicated. This is very, very simple and robust. Like I said, any market, as long as it has good liquidity. In other words, I wouldn't use this with pink sheets. I don't even trade pink sheets or penny stocks. They're just too unpredictable. There's a lot of games played with them, pump and dump schemes and so forth. I don't want to be part of that. I want to be in a market where there's professional traders because they're like freighters in the ocean. In other words, we have an advantage over big like banks, hedge funds, any big institutional trading. We have some advantages. Now they have some advantages too, but our advantage is we can be like the little speedboat running around them. They're the freighter in the ocean. It takes them a long time to shift that direction and move all that money. It's a very different thing to trade with huge amounts of money than it is for you and me who can get in and out real quick and not have to take all their money and all their clients' money and try to make that shift. So yeah, it's actually a great advantage. By the way, here's how it looks on Metastock. And let me just check my time again. Yeah, I'm pretty much done, so I better finish up here. So in Metastock, it's super awesome because we have the top dog trading plugin. So here's your stochastic oscillator. By the way, it's modified, but it's already modified when you get the top dog trading plugin. You get the wave counts automatically plotted. Look, there's a wave 9. Wave 9. So we're not limited to Elliott waves, which is only 5. So average is 5. When we get to 9, then we're looking to go short. We're actually looking to do a trend reversal trade. Here it shows you this little ribbon down here, green and red, green and red. That defines the trend for you. And what's super awesome and available nowhere else, this is only available on Metastock, is where you can get my plugin and you can get this commentary over here. And that actually just goes down and tells you we're at a wave 9 reversal short. Okay, and that's referring to this time right here, by the way. It's where I set up the time for this commentary. Okay, and this tells you the rules. And then here's commentary. So it actually explains the trade to you. Confirmation down here. Here's your entry, your initial stop, and your targets. I mean, seriously, it just lays it all out for you there. So what I love about this is, there's certain charting platforms that will give you arrows or dots and things like that where to get in and out. And that's cool, that's awesome. But this actually helps educate you while you're trading. So it gives you not only where to get in and where to get out, but why. So you get that education as well, which I think is very important because you want to eventually become a self-empowered trader where you have that skill that no one can ever take from you. Let's face it, in today's crazy world, that's the only security. I don't know about you, but I'm not going to depend on the government for my retirement. We're a Fortune 500 company. The only security in today's crazy world is to be self-empowered with a skill. And this is what's so awesome about trading. It's a business, but it's a very, very, very simple business. So you get educated as you go through the trades. You can scan for these trades. You can go through them and do back testing and everything. But today, I just want to give you some free stuff. Okay, I'll turn it over to Jeff here in just a minute, but I got a special offer here that's absolutely 100% free. Number one, you're going to get, well, you got now my direct email access, Barry@TopDogTrading.com. If you have any questions, comments, feedback, whatever, feel free to send me an email directly to me. I'm also going to give you one of my free trade strategies. It's actually one of my very favorite that I still trade to this day. It's called the rubber band trade. You get the complete rules of exactly where to enter and exit. So I'm giving you a trade strategy without even buying my course. I want you to make money with that trade strategy. And this is part of one of my mini courses, how to trade or how pros trade different than amateurs. There's 5 videos in this little mini course, about 20, 30 minutes each. And then as part of this also, you'll get a more in-depth review of the cycle indicator I shared with you, which is the modified stochastic. And that's in a recorded webinar. So you can watch that one anytime you want, wherever you live on the planet or any other planet for that matter. And it's recorded, so you get access to that as well. And we do a deeper dive into that modified stochastic. And you get that by simply going to, you get all of this actually, get all of it one place, topdogtrading.com/free. So go there, get all my freebies, and I'm going to bring Jeff on now, or invite Jeff to come back on, and he'll share with you a little bit more about the Top Dog Trading plugin for Metastock. Okay. Jeff,
sorry,
you there,
Barry.
my brother? Oh, okay.
Yeah, I am. I went to turn on my microphone and I turned off my monitor, so it made it a little bit more difficult. Do you have time for a question or two?
Yes, a question or two. I do have an appointment in 9 minutes, but
we'll get you out of there in
5 minutes. So yeah.
Yeah. Kelvin says, what is the settings for the momentum indicator?
That's the secret sauce, my friend. Yeah, I don't have time to go into all of that. That actually would take more time than we have here.
Okay.
So, but again, it's in the plugin and it's all preset for you. But yeah, I appreciate the question. It's an important question. Unfortunately, I just don't have time to really explain it in detail, which again, the dollars are in the details. So yeah.
Okay. Sal wants to know, I'm also from Canada and would like to trade futures in the E-mini. I can't find a company in Canada. Do you know of anybody? I don't. I figured I'd ask and see if you had any recommendations, or maybe if you're in the audience and are from Canada and trade futures, maybe you could kind of chime in as well. But Barry, do you know anybody?
Let's see. I love Canada, by the way. I was raised in Detroit, and back in the days of yore, we used to just go to lunch in Canada and then come back to Detroit. Back then, there was not much security, so you could just drive over the bridge or go through the tunnel.
What's not to love about Canada?
I know, right? People are so nice and friendly. It's a great place. I don't know. You might want to look into, I'm not overstepping my bounds here, but maybe Interactive Brokers.
Okay.
They're very international, and so I would think that they do. I don't know for sure, but check out Interactive Brokers. You know, they're a good brokerage firm. Their charting is nowhere near as sophisticated, not even close to Metastock. Their charting is very basic, but you could use Metastock, you know, to do your analysis and then place your orders through Interactive Brokers. But
yeah, their trading is way better than ours, which we don't do trading. So
yeah, well, yeah.
All right. Barry, thank you for your time. I appreciate your coming in. I'm going to go ahead and show a little bit of this add-on, but what a great job you did today. I appreciate it. And thank you for all the help over the years. Appreciate that too.
Oh, thank you. Well, I've cherished our relationship. I mean, yours and mine personally, and also with the Metastock generally. So you guys have been awesome. So yeah, since I have another appointment coming up, I don't want to like close down the webinar. So yeah, Jeff, if you could
pull the chute.
Me. Yeah,
all right.
Exactly.
Thanks, Barry. Good to see you.
Okay.
All right. Let me go ahead. All right. And they do have a little bit of a more relaxing time right now. Let me go ahead and change the presenter to me because I'm next. And so I can kind of go in and we can talk about this. Lero says, AMP, GFF brokers for futures in Canada. So Lyral gives that as a recommendation. Mehe says, how can you scan for finding immediate opportunities? Well, let's go ahead and show that. So let me go ahead and I have actually applied the top indicator system to it. You'll notice that it's automatically going to do kind of like his simplified wave count. He does the berry count. I'm gonna start calling it the berry count, and we'll see if that sticks. But you'll notice that when you get a buy or a sell recommendation, you're going to get a bit of an arrow on the chart. And I can actually go into the expert commentary like we've been doing all day. We can go view expert commentary, and it'll give you a little bit of a cycle count. If I click on one of these arrow days, like I think we're looking, Costco. If we look back here just a little bit, and we click on this little sell arrow right here, it's going to say right now, this is the first cycle high after dad turns down short. So this is a short suggestion, let's say. It's going to give you an entry of 373. It's going to give you an initial stop of 373.25. It's also going to give you some targets here. And one of the things that we put into this add-on, we actually put in so much information we couldn't fit it all into the commentary. And so what I've got here, hopefully that'll connect back to Metastock and not give us some issue. I might need to restart Metastock. That's okay if we do, but it does look like we got a connection back. But one of the things is we wanted to put a lot of commentary in here. Barry had such good information about the actual stuff that we could include. And in this particular thing, every time you get a signal, you actually can click on it, and it's going to load an internet browser right here, and it's going to give you information about the setup, the confirmation, the entry, the initial stop, how it's calculated, increasing the probability of success, recommendations, just a whole lot of information about what that setup is, how it's calculated, why you're getting it, and how to take advantage of that on the chart. Barry did such a great job with this thing. In scanning, to get back to your question, let's go ahead and just show you how that works. It's very, very easy. I'm going to go ahead and open up the Power Console. We're going to go to the scanner. I've added the exploration for the long setups and the short setups to the thing here. So if I'm looking for like a long setup, that basically would be something that's giving us oh, this is trade trend. I'm sorry. Let's go up to I was like, this doesn't make sense. We can look at different setups here, though. There's some confirmations. If we wanted to look at dad setups, we could do a scan for dad setups. If you want to do the rubber band trade, you could kind of do a scan for rubber bands, and for 10 trains and triangles. So I have 7 reversals, different counts. So there's a number of different scans you can run. I'm just going to go ahead and let's look for the dad setups. And I'm going to go ahead and kind of click on this one here. And what I'm going to do is just then select the instruments that we want to follow. Now, we had a question earlier about kind of like what markets we cover. And now, since I'm kind of not feeling quite the pressure of time, I get to talk for an hour. I will say I can kind of spend a little bit more time talking about this thing, but due to our relationship with Refinitiv and kind of their institutional quality data service, we actually have information and power data for like 200 plus exchanges globally. So right now I could scan against 288,777 different instruments. And that's important because we've had people that have been here from India. We had a guy earlier from India, quite a few of them actually. It's a big market for us. We get a lot of customers from Australia, Singapore, Asia, London. And so a lot of people are interested in kind of like maybe applying these methodologies, but not necessarily applying them to the US market. Maybe they want to trade them with their Saudi Arabian markets or whatever the fact of the matter might be. The thing is I could scan any of 288,777 instruments. So that's a huge number. But let's say that just for the purpose of kind of keeping this a little bit concise, let's just say I wanted to do a scan of all of the optional stocks. I have a list of data stored on my hard drive of all the local data of all of the optional stocks. I'm just going to scan that. So I'm just go ahead and click on the Start Exploration button. It's going to go through 4,324 stocks right here. And you'll notice it's chunking through them pretty quickly. The other thing I like that is looking at all of these charts for me. So this is a lot of charts that I don't have to look at. In fact, it's rejecting almost 5. It's only accepting 5 right now out of every 1,000 charts. It looks like it's rejecting 99.6 of them. And it's just going to come up with a list of all of those particular trades that I might be interested in. So for me, as somebody that wants to be able to, run a scan in the morning and see what's available and not kind of have it take my whole workday of me looking at the S&P 500 and all the 500 stocks, this is perfect because it allows me to make a short list of just the stocks that I'm interested in, or the stocks that have an opportunity, the ones that I want to look at, and ignore all the other stuff. I don't want to focus on a bunch of stocks that just have no opportunity today and are going sideways. I want to be able to focus on the ones that have an opportunity. And so if I'm looking for a long dad trade or a short dad trade, right here, I have out of those 4,300, I have 17, right? Everything else I don't have to look at. If I want to look at longs, I can sort this column. Everything that has a long or a 1 in this long column is going to have a long. So right now, if I'm looking for long dad trades, there's Hawaiian, there's Shutterstock, there's Cena, there's Tribune Publishing, and those are the only ones that have a long. The rest are short. And so very, very easily and very, very simply, we're going to be able to kind of just focus on what makes sense. And that's one of the things I love about Metastock. So Sal says, sorry, I did not hear the company for Canadian futures. Here you go. Let's see. There's a couple recommendations. Lyral said you should look at AMP, GFF brokers for futures. So there you go. I'll copy that on there for you. And that's a recommendation. Thank you for your recommendation, Lyral. I hope that helps. I hope I'm not slaughtering your name either, but I hope that helps you with kind of understanding how the scanning works. It's pretty easy to kind of accomplish in Metastock. Ajay says, thanks for this. Had a question on using leverage. Big leverage makes my trades hit stop losses. Do you suggest using less leverage? Well, I wish we would have seen that and had Barry answer that. I personally don't like a lot of leverage. I don't like to trade heavy leveraged. I kind of follow, let's say, Vince, and a lot of the advice, don't trade with money that you can't afford to lose. I think that's really, really important because, even if your batting average is 9 out of 10 and you're getting like 90% of your stocks right, that 10%, if you're betting everything every time, will wipe out your account. So I'm a big fan of not trading with leverage, just personally. So there you go. All right, let me go ahead and close down this exploration. And let's kind of go back into the slides here. Here's a picture of Barry. I do like Barry's 5 energy, taking him to court method. He does a really good job of talking through it and showing it. It is a really, really good implementation into Metastock. And it does do all the wave counts and automates a lot of the work and does a lot of the finding of the trends for you. It's normally a one-time cost to get the Barry Burns Top Dog Trading Toolkit into your Metastock program. Normally it's $4.99. Here at the event today, it's only $3.99. We'll throw in a free trial to Metastock if you haven't tried it yet. To take advantage of that, give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat and chat with one of our reps, and they can help you with that as well. Sal says, thank you very much. You're welcome. I'm glad I didn't have a recommendation for you, but I figured somebody might. So thank you, Lyra, for helping Sal out there. Lyra says, the first time you had it right, it rhymes with Cyro. Okay, cool. All right. And then, of course, that kind of covers everybody that we're going to talk about that's part of that Summit Traders Action Pack. You get candle profit systems, the trade trend, 3 months of that. Vince Vora is a one-time cost, so it's included. Barry Burns is a one-time cost, it's included. You'll get 3 months of learnmetastock.com. Kevin's going to come in at the end of the day and talk about finding breakouts with Metastock, and he does a great job too. I really like Kevin. He hired me for my Metastock job, so he'll be here at the end of the day. He runs a learnmetastock.com now. We're going to give you 2 years of stocks and commodities. We're going to to give you our white glove installation service. We're going to allow you to talk to anybody anytime you have a question. You can call them up or you can chat online with them and they'll answer your question. And they do a really good job. It's not uncommon for us to get 100% on our surveys for the whole week from the people that have talked to our customer support. So normally all of this would cost about $3,739 if separately. Here at the show, we're going to do $1,645. And you can give us a call, 800-882-3040. You can chat live with us at metastock.com/sales chat. And you can also talk to us or order online at metastock.com/summit deal. So let's take a little bit of a breather. Let me catch my breath. Okay. How are we doing today? 800-882-3040, metastock.com/sales chat. I really like being able to kind of take a little bit of a breather. Seems like we get going a little bit quick and, we get through a lot of stuff in an hour. I'm going to take off my headphones. I'm going to cough just real quickly, so let me mute you. Don't worry, it's not the corona. All right. Before we kind of get on to my part of it, I do want to say thanks again to Stocks and Commodities Magazine for sponsoring the event. They've sponsored us. I've been getting basically stocks and commodities since I started in the 80s. It's a great magazine. And I think it's helpful for traders. I kind of look at trading as very much the way I look at kind of most things that we're at life. Like you're either getting better or you're kind of going in the wrong direction. And I just love the fact that you can get a magazine delivered to you that talks about new ideas in trading and makes you think of things in a different way. And Stocks and Commodities is a great magazine. So they have a 17,000 article trading archive. They've got 1.3 million subscribers rounded. They've been publishing the magazine since 1982, and they've done a great job of sponsoring us. They're based up in Seattle. If you don't get the summit package, make sure you go to metastock.com/trader summit, sign up to get a free issue, and they'll send it over to you and you can take a look at it. And they do a great job. I recommend the magazine. So been getting them since I started it here at Metastock. So I'm next. So I'm going to read another legal disclaimer just, to kind of cover the bases here. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Also, I'm going to do my best not to talk about stocks that I'm in. I might talk about some stocks that I'm currently in. I do have a lot of stocks that I'm currently in. I'm going to do my best not to talk about stocks that I'm in, but we are going to do a lot of hypothetical simulated system trade testing today. And you should be aware, there's a CFTC rule here. The system testing is not the same as actual trading. When you're actually trading, you might have to deal with things that are not accounted for when you system test, like slippage or losses or those type of things. So we are going to, simulated trading is what we're going to be dealing a lot with today. It isn't exactly the same thing as trading with real money, and you should be aware of that, and the CFTC thinks you should be aware of it. So we have a little bit of a disclaimer there as well. So I do have a question for the audience. I hope everybody's doing well. Oh, I guess Greg wanted to introduce me. I'm sorry, Greg. I just wanted to get the headset off for a minute. I want to know how we're doing though. So for those of you that are here, that have been here for a while, how are you liking today? How's this session going? These things are a bit of work, but for my opinion, from where I'm seeing at the operating helm, I guess, I think we're doing a great job. I think it's been a good class. I think the speakers have been great. Do you agree? Do you disagree? Let me know in the comments. And then I'm going to tell you a little bit about my history. Not too much. We're not going to kind of dwell there, but I do want you to know that I've been working here at Metastock for 24 years, maybe 25 years. I have to look at my LinkedIn, honestly. I mean, it's been a while. I started in inside sales, so like if you had questions about Metastock, a lot of the times what I would do is I'd answer those questions. You call me up, we talk about what you were doing, maybe where you needed to improve in your trading, and that was a lot of fun. I did that for a decade, and Kevin Nelson is going to come in a little bit later. He hired me, and he can tell you if that was a mistake or not, but it's been a very enjoyable journey. After about 10 years, I moved over I worked in our business development team. I was in charge of all of our new business development. That was a great opportunity. That's where I met everybody we're speaking with today, like Steve Bigalow and, basically everybody. And that's a great opportunity. I've been able to learn a lot about kind of trading and see how really people that are at the top of their game do it. And that's been great. And for the last 3 or 4 years, I've been actually in charge of the sales team and in charge of the North American business. And a couple of things I'll say about Metastock. Number one, it's a great company to work for. I genuinely like almost everybody except for sometimes Greg. No, I'm just kidding, Greg. I love Greg. Greg is awesome, but we work in a little bit of a tight team. We're all friends, and it's a good company to work for, and it's a good company and a good product to represent. And you probably had a chance to kind of read the company history here. I won't belabor anything on here. The one thing I do kind of like to talk about is like for the last 27 years in a row, Metastock has been rated #1 by the readers of Stocks and Commodities magazine. So every year they actually go out and they ask, what's the best software that you use? And for 27 years in a row, we've been rated #1. And I'm going to try and kind of just give you an overview of kind of some of the more popular tools in Metastock today, why people, in my opinion, rate it #1. But for those of you that have been using Metastock for decades, there's tons of you here in the audience. And I appreciate it. Thank you for supporting us and the business. And I hope it's as valuable of a tool to help you with your trading as it is for me. So that's all I'm going to say a little bit about Metastock. Kind of the structure of today's class, I think discipline is important in trading. This is a quote that I like. But what I'm going to do is I'm going to talk a little bit about kind of the basic mechanics of the technical system. We're going to use MACD, how it works, how you get buy and sell signals from it. And then we'll kind of discuss how to figure out the best trading strategy that you'll be using. So Richard Dennis says, I always say you could publish rules in a newspaper and no one would follow them. The key to trading is consistency and discipline. I think it's a great quote. And let's kind of jump into a little bit more of the copy of what I want to talk about today. If Julia says, nicely done. Thank you, Julia. Mike says, great job. Very informative. Very much appreciated. Thank you. I'm glad you enjoyed it. James says, good presentations. Glad to be here. Sal says, today is great. Thank you very much for this. And there you go. Joseph Chandra says, do you include data with all of the, we're including data in all of the packages we offer. Thank you for that questions. Joseph says, the sessions are great. I'm still learning something new, and it's 3 a.m. in Kuala Lumpur. I've been to KL. I love KL. Bless you, Greg. All right. If you couldn't hear that, he was sneezing in the background. All right. Let's talk about MACD. Let's talk about Metastock a little bit. Thanks for coming today, guys. This is Gerald Appel. You might recognize him. If not, you definitely know an indicator he created. It's called the MACD indicator, and we're going to be working a little bit with it today. The MACD is both a trend and a momentum indicator. So a lot of times you'll hear like the trend is your friend, or befriend the trend, or a rising tide lifts all boat. It's a bit of a cliche in the market, but when we're talking about MACD, we're looking to measure trend and momentum. And the goal for me is to actually kind of tell you exactly how that works. And the reason I chose MACD is not because it's my favorite system, but it's one of our most popular. Everybody uses MACD. The other thing I thought was kind of surprising is how many people didn't really understand MACD, like either how it was calculated or how you should read it. It was just an indicator that they throw on charts, and they really didn't kind of understand what they were doing with it. I'm going to use MACD as a vehicle today. In other words, I want you to understand that when you're dealing with technical analysis, things are usually pretty objective. We're usually looking to measure something very, very specific and identify, trend or momentum or overbought, oversold conditions and that kind of stuff. This is designed to be a little bit of a basic webinar. And so this is where we get into Metastock, and we'll start to kind of deal with kind of how MACD is calculated. And we'll use that as kind of a vehicle also to show you kind of how Metastock can help you learn these techniques as well. So I will ask you guys, yes, we do have more to come. TLTL. We have, after me, there's Steve Primo, Kevin Nelson, and Oscar Carboni, and not necessarily in that order. So thanks for the question. All right. What stocks do you guys want to look at? Does anybody have a symbol that they would particularly care to look at? Because I don't necessarily come. I can pick any symbol that I want, and some of them will look good and some of them won't. What are you guys interested in looking at today? Is there a recommendation? I'm going to take the first one. So type faster. NEO, you got it. Okay, let's take a look at NEO. Okay. All right. So introduction to Metastock. Here's the power console. I'm going to do charting. We've talked a lot about scanning. Quote Center's a quote window. It does a really good job at showing you quotes. You've got system testing, which we'll work with in a minute here. We've also got our patented forecaster. I won't have time to show that today, but it is very cool. There's lessons up on our YouTube channel, which is youtube.com/Metastock, and then also an option scope. Today, we're going to kind of, one of the things I always say when we start to talk about Metastock is, we've been working on Metastock since 1987 or so. It's been a while. We've been developing software and designing software. And when I kind of go show things, I have to pick and choose what I'm going to show. One of the things I love most about Metastock is it's not a software you're going to outgrow very quickly. As you get better at using Metastock, or as you learn more about different indicators and techniques, it's going to work better for you. So with that being said, let's go ahead and start with a chart of NIO. And I love all of the symbols, AML, RAJ, and Abaton. When we go and do system test, I'll actually throw all of those in a system test. For now, let's just go ahead and we're going to work on a clean chart. Okay. And a clean just means it's not going to throw any particular indicators on there for me. It's just going to be a clean chart. And okay, NIO, there we go, open chart. Okay. What I'm going to do here right now is I'm just going to actually close this commentary window because we won't be working with the expert commentary for a minute. And this is NEO. Okay, I'm actually going to apply a few indicators to the chart. By default, this clean chart is going to be a bar chart. One of the things I want you to remember with Metastock is anytime you want to change something, it's pretty much click and pick and drag and drop. So I'm going to change this to a candlesticks immediately. I'm going to go ahead and double click on the line. That's going to bring up the indicator or the properties dialog box for whatever I'm clicking on. And what I'm going to do is I'm just going to change it to candlesticks. You'll notice that there's point and figure and line and Kagi and Renko and 3-line break. Let's just do candlesticks, and I'll just leave them black and black. So there we go. We've got a candlestick chart. Okay. The next thing I'm going to do is going to add a couple of indicators. So these are going to help me to explain to you how a MACD is calculated. So the first thing I'm going to actually apply, and of course I'm going to get hiccups right now. The first thing I'm going to apply is actually the MACD indicator. So let's go ahead and drag that onto the chart, and it is just a drag and drop. This is our indicator quick list. I need to slow down a little bit. All of the indicators that are kind of housed in Metastock are going to be in here, and there are a few hundred of them. I can kind of go through, I can show you all of the indicators on the list, but one of the things I've liked with some of the recent changes that they've made is the ones that you use most often, so you can see which ones get used most often in the webinar room here, or the studio, or whatever we call it these days, are going to be listed at the top. So if I want to throw MACD on a chart, I just find it in this list. I'm going to go ahead and drag it. I'm going to drop it onto the screen. And since I do want this a little bit overlaid in its own window, I'm going to drop it at the very top. If you look really closely, you probably can't see it, or you maybe can. There's a little bit of a window under my cursor. That just means when I drop this MACD, it's going to drop that MACD right in its own window. It automatically opens up a new window for me. I'm going to resize this just a little bit. Okay, and I do want to make some changes. Usually I do this when I actually apply the indicator, but again, if I double click on here, like if I want to look at this as a histogram, I can. So I'm going to change it to a histogram. I'm going to change it to a black histogram, and then the signal line I'm going to make a little bit thicker. Just mostly, my goal is so that you can see it a little bit better in the internet. So let me go ahead and apply this. My changes are then made, and hopefully that just makes it a little bit more visible. Okay. One of the things that I like also about Metastock is all of the indicators are actually kind of well defined in here. So anytime you have a question about something, if I want to kind of learn more about it, I can right click. I can go down to help. There's actually a more than 700-page manual that's built into Metastock, and it's going to tell you a little bit about the MACD. So I'm not going to kind of dwell in here, but you'll notice that the MACD is calculated by subtracting the value of a 26-period exponential moving average from a 12-period. Okay, and so let's go ahead and just plot that on the chart. The reason I did that a little bit out of order is I was forgetting whether it was 13 or 12. I wanted to kind of check, but let's go ahead and throw a couple moving averages on the chart. So again, I just find them in this indicator quick list. I drag them off onto the chart, and what I'm going to do is I'm going to put in a 12 exponential. Okay, so 12 exponential. Okay, I'm going to go ahead and make it blue, and I'm going to make it a little bit thicker. Okay, we'll go ahead and click on OK. And then I'm going to also repeat the process, and I'm going to do a 26 period. So we'll leave that as red. I'm going to make it a little bit thicker. And there we go, 26 period exponential based on the close. Okay. And then I'm going to merge that with the scale over here that already exists. And then we'll talk a little bit about how this is calculated. So when they basically, it's as simple as it was set in the help file. If I take the value of this shorter 12-period exponential moving average and subtract it from the 26-period exponential moving average, the difference between, well, basically my shorter-term blue moving average and my longer-term red moving average is going to be this number here, 1.854. I'm sorry, 1.5. I'm blind. In this eye, I can't see out of this eye. 1.85844. Okay, basically that's all we're getting is we're getting this histogram line, the black, to be specific, the black histogram line is just the difference between a shorter term moving average and a longer term moving average. And that's it. Okay. This blue line is just an average of that difference. So, and I believe, and I'm just going to double click on it, it is a 9 exponential difference. So whenever you're looking at a MACD, you're just looking at the difference between a long-term and a short-term moving average, or I'm sorry, a short-term and a long-term moving average, and then you're looking at the average of that difference over 9 days exponential. That's all. Don't overcomplicate it. It's easy. Okay. Now what you'll notice is if you're in a Neo, okay, and it's trending up, then as long as it's trending up, and as long as that, well, then what you're going to see is that your blue line is going to be above your red line, which means that when you subtract the blue line from the red line, you're going to have a positive number. Your MACD is going to be up above 0. Okay. The more dramatic that trend is, and this is the way it measures momentum as well, the more dramatic that trend is, the bigger the difference between the blue line and the red line is, and the bigger the peak in MACD is going to be. Okay, if you're in more of a sideways area, the shorter term moving average is going to catch up with the longer term moving average, and you're going to have a much more shallow value. So it's an easy way for us to look at momentum just by looking at the difference between the two moving averages. Okay, it's also a good way for us to look at trend, because as long as we're trending up, you're going to have a positive value, and it's going to give you a positive MACD. Once that starts trending down, then you're going to notice that it's going to, the shorter term moving average is going to cross down below the longer term moving average, and you're going to have a negative MACD value. Okay, that's it. Okay, that's basically MACD in a nutshell. Now, the 9 exponential moving average, Gerald calls that the signal line. Okay, and the reason that he calls it the signal line is when it crosses down below its moving average, then it's going to say that the MACD has entered a bearish zone. So if I'm looking right here at NEO's had a nice grow up, as you can see right here, but just recently, if we look at the chart right here, it went from being above its signal line to down below its signal line, and this is where the MACD changed from being in a bullish zone to being in a bearish zone. In other words, if we're trading based on the MACD, at this particular point right here, that's when we would basically switch our opinion from being bullish to bearish on NEO, okay, using just the MACD, okay? Right here, when it crossed, right here, we can look at some of the other crosses. Right here, it crossed from up to, from down below to up above. We would have been bullish here, bearish here. Okay, if we go back and we can kind of keep duplicating this, we went from being above to being below. This is where we first went bearish on MACD. Before that, we were bullish from right here to about here. So hopefully I've explained it well enough that you can kind of understand it. Hopefully it's not too simple that all of you guys are kind of asleep by now, right? Okay, but one of the things that I can do here is I can go into Metastock. There's a tool that's called the Expert Advisor. I'm going to go ahead and open up that tool by clicking up this guy, clicking on this icon with the guy of the bolo hat. That'll open up our Expert Advisors. You know, all experts wear bolo hats. But what I'm going to do is you'll be able to see that there's all kinds of different experts that we have on a chart. And there's things that'll kind of help you understand candlesticks or Bollinger Bands or MACD. And there's about, I think last time I counted them, there's about 40 different methods that are available in here. When I go to the MACD by Metastock one, which is going to be here under M, what I'm going to see, I'm going to go ahead and click that. I'm going to attach it to the chart. We'll go ahead and click on close, and you'll notice that when that crossover happens, you're going to get a sell signal on the chart. When the crossover happens above the bullish area, you're going to get that buy signal. You'll get a sell signal. You'll get a buy signal. So it's already starting to kind of help us kind of keep track of where the crosses are. Right here, we went from being bullish MACD. You see right here, it says bullish, to being bearish MACD, and you see there's a indication of that both on the chart and with this trend ribbon down at the bottom. So that's the very easiest way. I'm going to actually teach you 3 ways to look at MACD, but that's the easiest way to read MACD. Is it in a bullish phase or is it in a bearish phase? Okay. If it's trading up above its signal line, it's bullish. Otherwise, it's bearish. Okay. If you're all of a sudden more bullish on NEO, let's say we're looking at NEO right here and we got a buy signal. Okay. Well, then our obvious play, if we wanted to kind of take advantage of that as a trade, is we would look to take a long position, or we'd look to buy a put. I'm sorry, a call. Okay. If we got a sell signal, we'd look to exit that position. So it's very, very easy to read. The point I like to make about this is it's objective. It's not subjective. So I'm not, all of you, assuming that I've done a decent job in terms of explaining things to you, should be able to see whether that cross happened. Okay. Since it's objective, we can scan for it. We can test for it, which we're going to do in just a second. But I promise to talk about the other ways you can look at MACD. Okay, the other way that we can look at, another way we can look at MACD is as an over, is it too much momentum? Is it in an overbought and oversold state? Okay, if you look right here, there's a whole bunch of red on the chart. All of these bars are highlighted red. If I look right here, all of these bars right here, or these candles right here, they're highlighted red, and right here they're highlighted red, and right here they're highlighted red. Okay, and right now it's highlighted green. So if I want to see what that means, I just open up that commentary that I closed up a minute ago. Okay, and right now, okay, it's going to give us a little bit of a breakdown on the crossover. It's bearish since it crossed below its trading signal line. Okay, the MACD crossed below its signal line 22 bars ago. Since then, it's gone down 24%. Okay, and it has ranged from this high to this low. Okay, the thing that it's telling you with the green is right now the MACD is in an oversold range. Okay, so they're saying, okay, it's gone down pretty dramatically and pretty quickly. enough so that the Metastock is warning you that it's in an oversold range. It'll also, when the red comes in, it'll warn you that it's in an overbought range. Now, the thing is that we tried to be really careful when we worded this, because prices may continue to move lower for some time. Wait for a confirmation before considering any type of trades. Just be aware of it. Maybe tighten your stop. Maybe take a closer look at this. Right now, we're seeing that it's overbought, oversold. But if you play with those indicators a lot, prices that are in a trend have a tendency to stay in a trend. And so don't use this by itself. We're just warning you, hey, maybe kind of keep an eye on it. Okay. The other thing that we'll look for automatically in the third way that you can look at. So the first way is, are you in a buy and sell signal with MACD? The second way is that you can analyze MACD as an overbought, oversold indicator. The third way is somebody, one of the people I respect a lot. We do a lot of seminars with him. We do a lot of classes with him. He wrote Come Into My Trading Room, and it's a great book. It's a guy by the name of Dr. Alexander Elder. What he calls MACD divergence. He calls MACD divergence one of the most powerful, well, he calls it the most powerful rule in all of technical analysis. Okay. And I actually see a really good divergence on this chart. So I'm going to show it to you right here. But just randomly. Usually I say, I don't see a divergence, but this is how you would look for it. If we look at this price peak and this price peak right here, right? If I drew a line between those peaks, that is very obviously pointing up. I think everybody will agree, as long as they can see the chart and the line that I just drew, that this peak is pointing up. Okay. If I look at MACD and the peaks of MACD for a corresponding price movement right here, what I'm seeing is MACD is not confirming that added high. This is what we would consider a bearish divergence in MACD. This is one of what Dr. Alexander Elder says is the most powerful signals of all of technical analysis. Now, I will add a caveat here. Dr. Elder prefers that the MACD cross down below 0 in this trough, so he may disregard this. But regardless, it's giving us a bearish divergence right here, and then the price fell off rather substantially. So that's the way you would measure divergence on a chart. And if we do see divergence happening on the chart, we will tell you. We have not seen any divergence happening within the last 5 days. So let's see. If there is time after this, can you go over the DPO 20? Thank you very much. Carlos, I don't even know what that is, so probably not. But we could probably find some information on it, but I am not prepared to talk about it today. So Nyla says, Jeff Gibby's presentation will be very interesting. So I hope I'm living up to the praise. Thank you, Nyla. I appreciate that. Bob says, what is your settings on the MACD? So how far in the woods do I want to get this? When in this, let me actually just I'll go all the way into the woods on this. When Gerald developed the MACD, he didn't use whole number settings. So if I go into the help here, it's actually going to say that the MACD is calculated by subtracting the value of a 0.075 exponential moving average from a 0.15 exponential moving average. So that's not exactly the same thing as a 2612 period exponential moving average, but that's the settings that we're using. They are closest to the 12 and 26, but it's not exactly the same the way the calculation is good. That is as far as I can go into the woods on that, because I can't explain to you, I would not be able to explain to you how you calculate a 0.075 exponential moving average. It doesn't. Somebody tried to explain it to me and it just doesn't make sense. So, but I'm using the easier answer to your question, what I probably should have just said, Bob, is I'm using a 12.26.9. It's not exactly a 12.26 though. So, well, it says, Jeff, you being one of the most experienced people in Metastock on the planet, and I'm not bluffing. I adore your present. Thank you, Waleed. That's such a nice. I'm gonna hang that on my wall. Thank you. I appreciate that. All right. So we talked a lot about MACD. You know, I spent 30 or so minutes on kind of like what the MACD is, kind of how it works, and that kind of stuff. The one thing that I like to talk about with this is the fact that this is objective. So I'm looking at what trend is doing for NEO. I'm looking at momentum and what momentum is doing, and I'm looking at it in a way that's very, very objective. I'm not looking at kind of like what we think the change of presidencies is going to do for this stock or a particular stock. I'm not going to be looking at what the the new stimulus checks passing last night is going to do for the stock. I have some opinions on that, but they could very, very well be wrong. And most of the time when I'm trying to make guesses about what something does, it does the opposite. I'm not looking at earnings. I'm not looking at those kind of things. I'm looking at stuff that's very, very objective. And I think when you use stuff that's extremely objective, it is stuff that allows you to stay disciplined. Because if I wanted to say, oh, well, they just passed a 1.3 trillion stimulus last night, and now it's going to go through and everybody's going to get more money, that would make me very, very bullish, right? But the market might not respond to that, or they could have already baked that in. We'll find out. What I'm looking at, I can measure, okay? I can go in and say, okay, well, right now trend is kind of fading and we just had a signal line cross and we went bearish. It's objective. It's not subjective. And as a result, it's testable, okay? A question I would get as a much younger sales guy with more hair was like, well, okay, there's 200 indicators. There's 9 different charting styles. There's, 50 different systems or so, about 40 or 50 different systems. How do I know where to start? If I'm brand new to trading, how do I understand, is this the right indicator to use with NEO? Is something more effective? Where should I start my education? And that's, I think, a really good tool system testing has. I don't think it should bypass your education, but if I'm looking at a bunch of different indicators, I want to see which one is the most effective for trading with NEO. Since everything's objective, I can go in there and say, okay, well, tell me what's the most successful, and I'll waste time learning about, I'll spend time, I'll invest time, waste is the wrong word. I'll work on learning about that instead of spending my time on all of this other crap and all this other noise. Because when it comes down to it, there's more than 200 indicators in Metastock. I could probably, after 20 years, explain 50 of them to you without looking at the help files. But you're never gonna, why do you want to kind of care if it's not something that's going to be really helpful for you in terms of understanding what you're trading? And so for that, we can use system testing to kind of narrow down the results and that kind of stuff. So I'm going to go back into the Power Console here and go to our System Tester tab. And we're going to go ahead and type in NEO up here. I am going to go back up here a little bit and to where people were putting in symbols. There was Beam, which I'm pretty sure is Beam.O, but let's just look up for sure. BEEM. I'm not finding that. AML. Let's look for Docu. Okay, we'll do DocuSign. Okay, I'm gonna add that here. Okay, VET. I haven't looked at VET. What is VET? Let's find out. VET is Vermilion Energy Corporation. Okay, we'll go ahead and throw that in here. And let's see, we'll also do AAPL.O. Let's throw in Tesla for good measure too. I think Tesla's .K. Okay, so I'm defining right now just a list of stocks that I want to test. One of the things I like about Metastock is I could go in and test all of the optional stocks if I wanted to. Metastock would do that. It does take a little bit of time to run through that, and so I could go in and test the S&P 100 and all the systems or all the methods that we've got against the S&P 100. That's something we could do. But what I'm doing here is I'm just defining a universe. You're helping me, but I'm defining a universe of stocks I'm going to test. Okay, and what I'm going to do is I've actually made in this Metastock a list of all of the systems that come included with Metastock that don't use optimized variables. There's a couple reasons I don't want to use optimized variables, but the biggest is it saves me from talking about what optimized variables are. If you know what they are, we can do optimized variables. It also speeds up the test quite a bit. So we have 55 non-optimized systems, including in Metastock that you can test right out of the box. I've got all 5 of these instruments loaded. We're going to go back around, I'm going to shorten this down to about 250 days, which is about a year. And what I'm going to do is I'm going to take all the long trades and all the short trades, so we're going to do both. Okay, I'm going to come into the trade options here, and I'm going to go in and I'm going to start set up some rules for the system test. So what this is going to do is it's going to run through all those systems against those 5 stocks, and it's going to tell us which ones work best. Okay, I'm going to have it start with $10,000 of imaginary money. I'm going to basically go in and say, well, you can trade with 50 units at a time. I could say that if I wanted to. You can trade based on a transaction cost. So if we wanted to trade 5,000 every time, we could. Or what I'm going to actually do is trade based on the percentage of available equity. So I'm going to say, okay, Metastock, go back, take these 55 systems and these 5 stocks, go back a year of time. Every time you get a buy signal, whether it's on MACD or one of the other systems, trade half. So your first trade, if you start with $10,000, is going to be 5,000, and then if your account grows, it'll leverage in more money. If it shrinks, it'll leverage in less money. But it'll that's the way it'll trade, and you can do it any way that you want. For broker, I've got commissions at 0 because that's what most of us are paying. That's crazy compared to a few decades ago, right? For trade execution, what I'm going to do is I'm going to leave realistic market prices checked. What realistic market prices does is, like, who was it who was talking about that? Vince was talking about how it's important to trade towards the end of the bar on his system because the signals might change. With MACD, the signals might change during the bar depending on what happens during that bar. You know, sometimes you have wide swings and you might get a buy signal, but then, you know, people come back from lunch and sell it off, and then you didn't have that buy signal at the end of the bar. So what realistic market prices does is it just waits till the end of the bar. Since it's waiting till the end of the bar, it can't execute on that bar. It just executes on the open of the next day. You can change that. Like if you're going to check the bar right before it closes, maybe like you're looking at a daily and you want to check 15 minutes before it closes, you can actually have it execute on that close, but you want to make it realistic for you. What we decided was realistic for most people was what we called realistic market prices. So there we go. I'll go ahead and click OK. I'm going to go ahead and start the system test. So just to summarize real quick, we're going about 1 year back. We're going to take every long trade and every short trade. So we're going to do both. And we're going to take these 5 stocks. That's simple. I'm going to go ahead and start that as a system test. It's going to go ahead and run 275 systems. Well, I see if there's a question here. Carlos says it's the dependent price oscillator. I won't have time to talk a lot about that, and I'm not prepared either. So, but we do have it in Metastock, and we could send you some more information if you want to get us get in touch with us. So, all right, we're done in that time. We've tested all 55 systems against all 5 stocks, and we have them all kind of listed up here in terms of what works best. I'm going to go ahead and make this full screen so you can see it a little bit better. And what we did, since we did a basket of stocks and a basket of systems, what we have first is the systems, okay? And so green bars are good. That means we made money. Red bars are bad. That means we lost money, okay? And what I'm going to do is I'm going to sort based on the average net profit. I want to focus my education on learning about stuff that worked. We only tested a year back, and we did that mostly for time, but you could go back 5 years or 10 years. With the Refinitiv data that we offer, you go back to the 1980s on most US stocks, as long as they've been around that long. If you're testing futures, you can go back to the 70s. Some of the indices, they have a really long-term Dow index you can pull up from Reuters that goes back to the 30s. So there's a ton of data you can test. You can test as long or as short as you want. I picked a year mostly so we could kind of get through it in a somewhat timely manner. So if I'm looking at this, our best performing system based on those 55s and the stocks that you and I picked out, our best performing system was this PS fractal trading system, okay? The next performing was Turtle Trader. I actually kind of wish I would have spent a little bit of time on my normal Turtle Trader lesson or stock. The next was Mama Fama, which was developed by John Ehlers. This is the adaptive cycle toolkit. John Ehlers is very, very smart, but that was our next best performing. Here you have average net profits. So out of those 5 stocks, or we did 5 stocks. If we did 1,000, this would be out of the 1,000 stocks. This is how on average how much we made. You guys probably understand what average means. This was our average percent gain with the PS fractal system. It was 149%. Our best profit was 44.2860, and our worst profit was $0. So there was probably a stock that we didn't make a trade on. It didn't actually have any losing trades in that basket, which is unusual. Okay, mostly you'll have some negative numbers like you see down here. Maybe it was just a small basket that we picked. Okay, our average trade, so out of every instrument we tested, on average we traded 3 times. Our average profit versus our average lot was 2.6 to 1. Okay, which gave us an average profit of average loss of $5.19. Okay, if I want to take I do like, there's a few things that we are running a little bit low on time, but there are a few things I'd like to kind of talk about here, because from here I can see kind of about how active something is. On average, 3 trades over a year is nothing. That's like 1 trade every 4 months. So it's not a hyperactive system. This is right up my alley. And so the fact that it's the biggest percent gainer is actually just a bonus. If we were looking at something down here where adaptive momentum was a winner, it traded 30 times. So here in Utah, we have 12 months in a year. So it's about 3 times a year. That's a little bit more active if you're trading more than 1 time a year. So what I'm going to do is we'll just kind of focus on the fractal trading system number 2 for now. I'm going to go ahead and highlight it, and we'll go ahead and click on view. And now we're going to have that entire basket. So you've got Neo was the best. Neo worked great last year. Then you've got DocuSign, Vermilion, Apple, and then I put in the wrong symbol for Tesla, so I didn't even test Tesla. Okay, if I go into Neo, I'm going to go ahead and click into that. It's going to give me a full report. I'm not going to go into the details of the report. You can click on help. Again, that you have all kinds of help that's available, but it does go through all these calculations and how they're read. Some of the things I'd like to pay attention to is how many profitable trades we had. In the case of Neo, we had 3 winning trades and 1 losing trade. On average, we made about $15.73 on our winning trades, with our average 1 loser being 3,300. Okay, it does give you win-loss ratios. You can look at your buy-hold index. If you had just bought and held Neo for a year, you'd still be better off than trading it, which is unusual, but it does happen with stocks that kind of move exponentially. Our profit-loss index, though, on Neo is 93%. That goes from 100 to minus 100. It measures closed, if I remember this right, closed position profit versus closed position loss. And so 93 is actually really good. Risk reward is open position and closed position. Our total reward versus our total risk. I might have those 2 metrics backwards, but they both go from minus 100 to plus 100, or plus 100 to minus 100, with 100 being best. This is pretty good. So now I can also go in and I can see what my equity looked like over time. I can kind of say, okay, well, this looked really good. It's pretty consistent. I could feel for it. Okay. If this is something that overall I kind of spend some time looking at and I like, well, then I can go in and learn about the rules, and I can do that just by plotting it on the chart here. So we'll go ahead and open up Neo. It's going to go ahead and open for us. Okay. Here I've had that same equity curve we were just looking at. Okay, and what I'm going to do is I'm just going to real quickly go to that fractal trading system. It was actually the PS fractal trading system number 2. I'm going to attach it to the chart, and what it's going to do is it's going to give me the same advice Bollinger Bands, or not, MACD gave us, but more around what it is. I can see where we bought. We would have got our buy signal here. We were long this whole green period. I'm going to go ahead and kind of minimize this. So now I get a chance to look at it again and see if I'm still pretty comfortable with it. If I am, I can kind of go into the commentary. There's no trading signals today. We would have been out of this position since about right here. But if I click on one of the buy signals, if I can get to it, I can get to where it's going to give us some advice. I'm going to make this a little bit bigger so you can read it with me. Enter long today with a market on close order or at the market price on tomorrow's open. Okay, so it's giving us some information about what we should be doing. Okay, and then it's going to tell us a little bit about where this is. So if you don't know what a fractal is, there are many different definitions for fractals and securities trading. The definition used in these systems is a minor version of the type defined by Bill Williams, PhD, and his chaos-based trading methods. According to Bill Williams, an up fractal is defined by a middle bar with 2 lower highs on it. Some people call that a pivot. I call it a pivot. It's an up fractal as well. A down fractal would be the reverse with a middle bar with 2 higher lows on each side of it. This system enters a long position when the price crosses above the most recent up fractal. The position would be exited upon the crossing of the low of the second most recent fractal back. So it's telling you what it is, telling you how to get the signals, telling you what they mean. And if we wanted to learn more, but this one is very simple. It's just you're looking at price activity, basically because you're looking for that break of that fractal. You're just looking for a break of support and resistance, right? So if you're looking for a breakout, once that breakout happens, you buy long and you place a trade, and we can kind of figure out what it's talking about just by reading the commentary. So if we wanted a really effective way to trade NEO, well, this worked last year. Now, it's important to mention, last year was great for NEO. This fractal trading system only takes long positions. So does it mean that NEO is going to go straight up next year? Not necessarily. Does it mean it's going to continue to work next year? No, not necessarily either. But what we want to do is we want to kind of put the odds in our favor. And this does allow us to kind of focus around the technical analysis methodologies that does work. And it's a great tool of Metastock, the ability to test ideas and see how well they've worked. And, you can take this same type of testing and test it against thousands of stocks and get a really good feel for how well they work over when they work and how well they don't work when they don't work, and really get a feel for kind of more than a bigger picture than what you would see if you were just looking at, just this one system test for just this one stock, which is what a lot of the system testing platforms that might be a little bit inferior to Metastock do, is they won't do quite the kind of broad array of, they won't give you as big of a picture, in my opinion, as Metastock does. If we like this, well, of course, and obviously we're not going to be buying NEO now. We don't have a setup. We might correct and get a setup, and if so, we'd buy it. But right now we don't have a setup. So if I like this fractal trading system, I like the idea of kind of buying that breakout and putting a stop loss in place, I can actually run a scan. So I just come in here, I go to the scanner, there's going to be a matching scanner, I run the scan, it's going to show me out of all the S&P 500 stocks exactly what stocks I could be looking at. And so, I think that's a pretty good way to look at kind of our power tools. We talked about the expert advisor and how it can give you buy and sell signals. We talked a lot about the system tester and how it can test those trading ideas and give you a good idea of, what works. And then of course the scanner, and I run scans every day unless I'm like really, really busy at work. But I try and basically, even then, I'll just run a scan for a pattern for something, and I'd be just looking at the top 3 or 4 stocks as I get a chance. So the tools in Metastock, are one of the reasons I think that it's been so well loved by our customers for so many decades, and the reason that they've voted it time and time again the number one in its software price category. I've been doing this a long time, decades now. And we've seen software companies come, we've seen software companies go. There's been software programs that are a lot more expensive than Metastock that, were maybe based on derivative moving averages and very limited in terms of what they can do. And I would talk to a lot of traders that would have invested in a software program that was no longer fitting their needs. One of the things I love about Metastock is I just think, as we said at the outset, that it's one of those programs that's going to grow with you as a trader. It's not a one-trick pony. As the markets evolve, you can use different methods. It's got a lot of different built-in methods, and everything we've talked about today, if you can go in and create your own system tests, you can create your own scans, you can go, Metastock is like any other tool. It's like a toolbox. If you understand how the tools work, they're actually pretty easy to use, and they're very, very helpful when you're going to build a house. So, and they have the tools that you need, All right. Got a little bit more into that than I usually do. But again, we are proud that the fact that we're we've won 27 years in a row. It's such a great company to represent. I really like the people. We work hard, but we all get along, and it's great. It's a good company to work for. It's a company that I've been proud to represent for 2 decades plus. So we do have a couple of different versions. I'm going to go through cost real quick, and I'm actually doing pretty good on time, which is unusual. But we do have a real-time version, and we do have an end-of-day version. Our real-time version of Metastock does actually include a package that we call Metastock Zenith. Metastock Zenith, just to give you some information, is a white-labeled institutional quality news and fundamental research product. It was developed by Thomson Reuters. They spent more than $1 billion developing it. It's now owned by Refinitiv, and I think in a year or two it'll be owned by London Stock Exchange. But it is an institutional quality product, very similar to what you'd get with Bloomberg. If you like news, if you like information, stupid hiccups. It's supports hundreds of exchanges, hundreds of thousands of stocks and futures. There's 2,000 plus reporters in over 200 different news bureaus that feed news into it. So that's included, as well as everything that we showed you today, the Metastock real time. So normally it's about $250 per month, and worth every penny. Wouldn't trade without it. Okay. We also offer an end-of-day version of Metastock, $69 per month. That includes Metastock, as well as like the data for a region. And that's basically everything I showed you today you can do in Metastock end of day. It's only $69 per month. Okay. The special that we're going to do, if you just want to try Metastock, I'm going to say thank you. We're going to give you the ability to get what we call an extended trial. So if you pay for a month, we're going to give you the second and third month for free. And that's basically the way that it works. So even if you're just looking at the end of day version of Metastock, you'll be trying the software that's been rated #1 for 27 years in a row. And you'll be paying, let's see, $69 divided by 3, about 20. I should be able to do that math by talking. I'm suck at talking and doing anything else at the same time. About $25 a month or so to try it for 3 months. Okay. That'll include Metastock. It'll include the data for the region of your choice. It'll include our white glove installation support and unlimited access to our support team if you have questions. It's going to include the Unleash the Power of Metastock as well, $99 value. So if you just want to try Metastock, because we've been talking about how good it is today and how well liked it is, give us a call, 800-882-3040. You can also visit us at metastock.com/saleskchat, and we can kind of help you get set up with that. If you want to send me any messages, feel free, jeffrey.gibby@metastock.com, and I will be happy to reply and respond. And I do like to hear your feedback, anything you need. If there's something I can help you with, let me know. I do want to mention that the 3 months of Metastock is included as part of our Traders Action Pack today. So you'll get Steve Bigelow's Candle Profit System 2.0. You'll get Jeff Tompkins' Trade Trend, 3 months of that. You'll get Vince Vora's Victory Method, which is normally like $2,000 by itself. You'll get Barry Burns' Top Dog Trading Toolkit. You'll get our Unleash the Power of Metastock, which is the $99 DVD. Well, it's not a DVD. It's online, and it comes with a little workbook that's a PDF that you can look at. It's just a course to help you get started. You're going to get 2 years of Stocks and Commodities magazine with that. And then one of the things I hear all the time is how good our support is and how well of a good of a job they're going to do of taking care of you. So normally everything separately would be $3,000. I'm checking to see how much time I have for questions when we get there. $3,739. Here at the event, we're going to kind of give you kind of a blowout basement bargain price of $1,645. Most of this is available on a money-back guarantee. Everything but the subscription components of it is. Give us a call, 800-882-3040. You can chat with us live at metastock.com/saleskchat. You can also purchase it online at metastock.com/submitdeal. So I didn't give myself too much time for questions. So Well, it says, please answer my previous question. I think you missed it. Well, if it was embedded underneath all of these glowing reviews, I kind of just got a little bashful. Well, it says, okay, so what are your top 3 Metastock third-party add-ons that you use when trading? Very interested to know your answer. Please don't give me a general answer. I would appreciate it. I will tell you, let's see. So you're asking for my favorite add-ons, and I think that's a very, very dangerous question to ask somebody. I will say that I use quite a few of the ones that we've shown today, but I think it also depends on what you're actually interested in and how often you want to trade and how much expertise you have. One of my favorite ones is, if I just had to pick, they're all good. I added them to the catalog. It's like, well, he wants me to pick my favorite child. I do like Candle Profit Systems a lot. I like the Doji Best Friend scan particularly. It's a scan that I run every day. So there you go. If it's something that we offer and we include it in our catalog, I thought it provided value. And all of them have different values. And like, the victory method has been very popular. People love Trade Trend, the Top Dog Toolkit. I really like the Fulgent chart pattern engine. So I can tell you I like all of them, Waleed, but I don't think I can tell you which one's my favorite. But hopefully that's helpful. I know that's a little bit of a dodge. There's some really good add-ons in this package. People love Victory, Top Dog we've been working with for a number of years, Trade Trend, Candle Profit Systems. They're all great. If it wasn't a good product, I wouldn't have added it to the catalog. So Sal says, when I sign up for broker GFF or AMP, will I be able to get these deal for Metastock and your Bigalow and such? Okay, so you definitely need a different broker, Sal. You can pick whoever you want. It doesn't matter. We don't recommend a broker, but I would recommend this. Thank you for your interest in the product. Give it a go. So there you go. All right. Let's look. RL says Bigalow. Okay. I don't know in what context that is. 27 years. That's an incredible record. Yeah, we're proud of that. So that's great. I think we did great. We're in perfect time. Wow. Look at that. I guess I could just stop talking at any time, right? Anyway, to take advantage of that offer, give us a call, 800-882-3040, metastock.com/saleschat, or metastock.com/summit deal. Thanks for coming. I hope you enjoyed the class. I hope you're learning a lot. We got more presenters, and the next one is another great presenter that we have. I do want to say very quickly, thank you for Stocks and Commodities for sponsoring the events that we do. You can get a free issue at metastock.com/traders-summit. So, and our next presenter is Stephen Primo. Steve does a great job with this. I'm laughing because I'm gonna say a lot of the things I've said about some of the other presenters today, but that doesn't mean I don't mean it. Steve does a really, really good job of kind of taking some more complex concepts and making them very understandable. I do really like his presentation style. I do think you'll enjoy it as well. And I'm not teasing when I say I think we have a super lineup today. And I think Steve is no exception to that. I love how methodically Steve goes through charts and talks about concepts. I just love it when a speaker speaks and you can understand what they're conveying in a way that you can kind of digest and start to use. So Steve's been a partner of us for a number of years. How are you doing today, Steve?
Hi, Jeff. Doing great. Thanks for the kind words.
Yeah, I mean them all. So I'm going to go ahead and change the presenter over.
Okay.
So you should get to share your screen. Okay. I can see it.
Great.
And I'll let you go. Thanks for coming.
Okay.
And,
thank you very much.
You
thanks
bet.
for inviting me to speak once again, and thanks for everyone showing up today. I really appreciate it. It's been a great online trader summit for February this year, 2021. But it's going to get even better. We have some great speakers, and I'm actually going to reveal and share with you a strategy that I've been trading for over 40 years now, going on roughly about 44 years. Believe it or not, I've been actually trading that long, and I want to start out, though, by really talking about why most traders fail, because a lot of the stuff that we're taught to focus on, myself included when I first started trading, really doesn't have a high level of consistency. I was always trained and taught that the more complicated something was, the more valid it would be. But I'm going to share with you today just a couple of rules that make up this strategy that really are simple, and you'll see how powerful they are. For example, if I look at this chart here, this older chart in KLAC, this is going back to December of last year, about 3 months. Most traders, once again, myself included, would have looked at this and said, well, there's really no clear-cut idea of what this is doing. It's just kind of basically in a range. It's a range market. And this is where you're always taught to stay away from these markets, because this is where you get whipsawed. You usually buy at the top of that range, right? And then you get scared when it doesn't go up, so you sell, and then it goes right back up again. So we're always taught to stay away from these, or these are the most dangerous types of markets. Well, with what I'm going to be sharing with you today, the strategy that I'm going to be talking about actually generated buy signals here, here, and here, even in that range market, because this strategy saw that we were in an overall uptrend and it was giving us signs that it wanted to go higher. And then in January and February, the stock gained 85 points. Now, the beauty of this strategy is that if you happen to miss a signal, it has a propensity to generate a lot of signals, provided that all the requirements are met. So if you had missed those first 3 in December, well, guess what? Just about 3 weeks ago, another buy signal was generated right here, where you could have captured roughly 40 or 50 points. So this promises to be a great educational presentation. Thanks once again for Jeff and the Online Trader Summit inviting me to speak. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading for roughly 44 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those I was a specialist. So that's where we get the name Specialist Trading. I know a lot of people don't know what a specialist is. If you ever Google those pictures of the trading floors back in the 50s and 60s with the guys screaming and making all these weird hand signals, that's usually what a specialist was. In the old days, if you wanted to buy or sell a stock, you would call up your broker like E.F. Hutton or Merrill Lynch. You give him the order, let's say, to buy 100 shares of IBM. He, in turn, would contact the floor broker. He would call them or send them a teletype in those days, and the floor broker would take the order to buy 100 shares of IBM. The floor broker would walk up to the trader who specialized in making a market in that, and that's what I did. I was a specialist. In fact, IBM was one of the stocks I made a market in, and that's how you bought and sold. Now, I was a specialist. I made markets during the crash of 1987 and the bull market that followed. I've traded straight up markets, straight down markets, sideways markets, any strategy, any system, any technique or method that's new on the market. It's probably been around before, just rebranded or edited and altered a little bit. So I've traded and seen just about everything there is imaginable. So what we do at Specialist Trading is simply to educate and filter out all the things that I have personally found that have no levels of consistency, and teach our students really high probability techniques and strategies that have high probability for consistency. That's what it's all about. We are first and foremost an educational company. We're not here to tell you what to buy or what to sell. We're here mainly just to teach you so that you can be in charge of your own trading destiny. So that's what we are, an educational company. And you'll see that real determination to educating you today in today's presentation. But before we begin, once again, as always, we're required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this method that I'm going to share with you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, a lot of students always say, Steve, can I get education on a daily basis? Sure. I invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down, because every day I post different educational information. Sometimes we post signals that have just been generated using some of our methods, little bits of financial wisdom, and lots of education that kind of goes behind the scenes that explains why a signal may have been generated or not. So lots of great free information. Please feel free to follow us on Twitter. So as I just stated in the opening statements, we are a little bit different from other presenters in that our only goal is simply to educate you. We are first and foremost an educational company, because it's our philosophy that the reason why most traders fail is not because they don't have enough experience, or not because they have trading a method that doesn't work. It's really about educating yourself. You don't have enough sound fundamental education. So what's the first thing you do as a trader myself included when I first started out. So I don't want you to think I'm above this. I did the same thing 44 years ago. But the first thing you do is you rely on someone or something else to tell you how to trade, right? You go to a chat room or you buy some $10,000 system that just spits out the buy and sell. But ultimately, you're really taking yourself out of the game, because when you do that, you're basically saying, I don't know how to trade. I don't have enough experience or knowledge, so I'll let you make the decisions for me. And that would be comparable to an airline pilot, you know, in the middle of the flight saying on the intercom, you know what, I don't know how to land this thing. I don't have experience or knowledge. So why don't you guys, the passengers, why don't you tell me how to do that? Or a brain surgeon in the middle of an operation saying, listen, I don't have enough knowledge or experience to know how to operate here. Why don't you guys tell me how to do this? But traders do this on a daily basis. We're constantly asking ourselves, what do you think of the market? We go on TV to find out what someone thinks so that we can mirror what they're doing. We go to chat rooms to find out what they're doing so we can mirror what they're doing. Or we go to webinars to find out what they like or don't like. So we don't believe in that. Our goal as educators is to teach you how to trade with the specialist edge. You see, a good mentor does not trade for you. He teaches you how to trade. This is the way I was taught some 44 years ago, and what I really believe is a cornerstone for sustaining me that amount of time. And this is what we teach our students around the world, the specialist edge. So I'm going to teach you actually the first two rules to this great method that I continue to use today. But before we begin, remember, I think this is being recorded. So if you happen to have a question, please wait till the end of the class. Okay, I have a lot of slides to share with you, and I don't want to cut off the other presenters' time. So if you have questions, let's wait till the end. Okay, I promise I'll get to each and every one of them if we have time. But once again, this is being recorded, so if you're having difficulty understanding, I'm sure Jeff and the good people at the Trader Summit will send you a link and you can watch this over and over again, okay? Now, I'd like to start out with some financial wisdom. These are things that my mentors taught me, and you're going to see how prevalent they are in the methods I'm teaching today. Because I remember one of the first things they said to me was, Steve, it is the easiest thing in the world to overcomplicate your trading. I mean, think of that. Anyone can do that. It basically doesn't matter if you've been trading 40 years or 40 minutes. You can pile on more and more things onto your trading plan. But it's the most difficult thing in the world to simplify your trading, because that takes a lot of character and courage, because you've got to let go of all this conventional wisdom that we were told is supposed to work. But trust me, I've already tried it. I tried it 40 years ago, and it really doesn't have a high level of consistency. So you've got to learn to let go and only focus on the things that really work, that have high levels of consistency. Once you do that, you see how simple trading can be, and you'll finally get onto that road to consistency. Now, that's what the theme is going to be today. Simplicity equals consistency. So let's begin today's presentation, and we're going to be talking about the 2 steps I want you to take. These 2 steps make up the first 2 rules of this method that I'm going to be sharing with you, okay? Now, step 1, apply the buy-sell line. I know all of you are probably rolling your eyes right now and saying, oh, okay, I knew there was a catch. I've got to buy some $5,000 indicator to find out what to do. No, in fact, you already have access to the buy-sell line already, because the buy-sell line is just another name we give for the 50-period simple moving average. But we call it our buy-sell line because it tells us whether we're going to be a buyer or a seller. But in order to use it properly, here's what you have to do. You have to ask yourself a question before each trade. Before you pull the trigger, ask yourself, where is price in relation to the buy-sell line? Now, I tell my students to write that down and to put it on a Post-it on their computer screen, because students tend to forget, especially the beginning students, and they forget and they go, gosh, how come this trade didn't work out? And I said, well, did you ask yourself that question? And then they'll say, oh, I forgot, that's why. Remember, always ask yourself before you pull the trigger. I don't care what strategy you're trading. It could be one of mine, could be someone else. It could be based on fundamental news. It could be based on the full moon. I don't care what it's based on, but ask yourself, where is the current price of whatever you're trading, whatever time frame, whatever market, where is it in relation to the buy-sell line or the 50-period simple moving average? Because you'll only come up with 2 possible scenarios. If price is above, then you will only have a buyer's bias. In other words, you should only be looking for buy setups, buy signals, whatever strategy you're trading. And if price is below, then you'll only have a seller's bias. I remember I told you it's really simple, but the simple things are the consistent things. All right, let's look at this chart here, this older chart in Zoom. Someone looking at this, myself a long time ago, also would say, hey, well, this is a downtrend, right? Look at this. This is going straight down. And Steve says you want to be in sync with the trend. So I guess I should stay away from this, or even better, I guess I should short it, right? What's the first thing we teach our students? The first thing is to add the buy-sell line, the 50-period moving average, which I'm sure all of you have access to on the platform, the Metastock platform. And now, once you've applied it, then you ask yourself that question. Where is price in relation to that buy-sell line? As you can see, it's above. So rather than looking at that sell-off as something you should avoid or to short, this is actually a buying opportunity. And look what happened in the next 2 or 3 weeks. Because the overall trend was up, the stock took off. You see how you would have done and fared much better looking for a buying opportunity as opposed to going short. This is why most traders fail. We're listening to something else tell us what to do, when in all actuality, the market is telling us what it wants to do right in front of our faces. Now, same thing happens in this scenario. Here's an older chart of CHK, Chesapeake Energy. Someone looking at this obviously would say, hey, this is in an uptrend. You got to buy this, right? Let's say there's some tremendous news the way that was happening this past month, and most traders would see something like this and say, hey, I've got to jump on this. I don't want to be the last one to buy, right? There's like this buying fever. Maybe everyone was talking about it in Wall Street. You got to take advantage of the little guys, got to buy this. So you jump in and buy on this day, on the opening, and by the end of the day, you feel real good about yourself because you've got a nice profit. And you're reading all the posts and you're listening to all the TV, and you're thinking, boy, I'm going to retire by next week. This is going to go straight up, okay? But what is the first thing you're supposed to do? Regardless of what someone's saying on TV, regardless of what some indicators flashing, you always apply the buy-sell line. And what's it telling you? Remember, it's not what some guy in a webinar is telling you. What is the market telling you? It's below the 50-period moving average. Where is price in relation to the buy-sell line? Remember, you have to ask yourself that question. So if price is below, you should not be buying. You should be looking at this from a seller's point of view. This is a selling advantage right here. Take advantage of this as an opportunity. Why? Because look what happened. If the overall trend is down, you'll have a higher level of consistency in that direction. Now, does this work 100% of the time? No, nothing works 100% of the time. But remember, it's about consistency. That's what we're trying to instill in you. 2 steps forward, 1 step back. Every once in a while, it won't work. That's okay. But consistency is what will sustain you, not for just a good week or a good month, but for maybe a decade, maybe 2 or 3 decades. That's what we're trying to instill in all our students. Okay, so the buy-sell line tells us the overall trend. All right. Now, how do we find the short-term trend? We go to step number 2. We want to look for bars that close in the top or bottom 25% of their range. Okay, so what does this mean? Well, let's say price is above the buy-sell line, the 50-period moving average. We want to look for bars that look like this, and it doesn't matter if this is a 5-minute bar, a monthly bar, a tick chart, makes no difference. But if you close in that top quarter, that top 25%, once again, what is the market telling you? Not some guy in a webinar, not some guy on TV. What is the market telling you? It's telling you it wants to go higher on the short term. So now you have the short term in sync with the overall trend. So as we see here in this chart of Netflix, we're above the 50, so the overall trend is up, and we look for bars that close in the top quarter. And look how many bars close in the top 25%, how they're all signaling to us that we want to go higher, okay? This same concept will work to the downside. If you see a bar like this, if you're below the buy-sell line and you see a bar that closes in the bottom 25%, what is the market? Not some, convoluted support resistance line. What is the market telling you? It's telling you it wants to go short, or should say, wants to go lower on the short term. So now you have the short term in sync with the overall trend. Obviously, we are below the buy-sell line here in this older chart of UAL, United Airlines. And let's see all the bars that closed in the bottom quarter of their range, how they were telling us what the short-term trend wanted to do. See how powerful these tools are? And they're all readily available right on your platform right now. You can just look at a chart and just see these things. And the market, for the first time, you'll be able to see for yourself without having to rely on someone or something else tell you what the market's doing and what it wants to do. See, we're always trained and taught, once again, to have somebody tell us what to do. But what we try to do at Specialist Trading is teach you so that you'll never have to rely on anyone. That's how you become a consistent trader. All the traders I know that are still trading that I work with on the floor, some 30, 40 years, don't listen to news. They don't have tons of indicators. Most of their strategies have 3 or 4 rules. They don't watch TV or read the blogs. They simply have a very simple, easy plan, and they follow it. And that's all they do, and that's how they have that consistency, okay? Now, one of the other things I want to mention also, I know a lot of traders, a lot of students of mine always say, well, Steve, so what do we do? Do we take like a daily chart and then we apply the same process to a weekly chart? Because we want to make sure that the weekly and the daily are in sync. Or if we're trading a 5-minute bar chart, let's say we want to make sure the hourly chart and the 5-minute chart are in sync. Well, listen, once again, remember, I've been trading for 44 years. You can use that if you'd like. But we don't teach that because I personally have found no consistency in that method at all. If you're looking for 2 overall and a short-term time frame, it's right here. In other words, you don't have to apply a higher time frame. The overall trend is determined by the buy-sell line. The short-term trend is determined by bars that close either in the top or bottom quarter. So that's all you have to look at. There's no reason to overcomplicate things. Remember, as I said, it is the easiest thing in the world to overcomplicate your trading. You can look at tons of different time frames. But it is very difficult to simplify it, to say, you know what, I'm only going to look at the chart. That's all. I don't care about other time frames and other markets. I'm just looking at the chart I'm trading. All right. When I'm trading something, I only look at the time frame I'm trading. I don't need to look at a higher time frame. But once again, it's up to you. Okay. So now the 2 edges I just shared with you are actually making up the first 2 rules of the strategy I'm talking about. This is strategy number 4. You actually just got the first 2 rules of a strategy that only has 4 rules. So you have 50% of it already. So let me give you some of the highlights of this particular method that, once again, I was taught some 4 decades ago. It's designed for traders looking to catch momentum. When we first started trading this on the floor of the exchange, we were basically getting in and out of trades in 1 to 3 minutes, okay? But we've constructed it and developed it in ways so that you can stay in trades if you like, days, weeks, months if you like, okay? The beauty of it is that many times it will signal a buy or sell signal prior to any type of display of momentum. So it'll look like a sideways range market the way we showed you earlier in KLAC. And it will already be identifying that there is momentum almost coiling up, getting ready to explode in one direction. So this is really a great, great strategy. It's based on a pattern that occurs over and over and over again in any market, in any time frame, and in any direction. That's the beautiful thing about strategy number 4. It's so versatile and you can transfer it over onto anything. So I know a lot of strategies and systems say this is perfect for the E-mini, or this is perfect for swing trading for stocks only, or this is perfect only for Bitcoin. Strategy number 4 can be applied to any market. We have Bitcoin traders using it. We have currency pairs trading strategy 4. We have investors trading. So it makes no difference what market or what time frame, okay? And it only uses 1 indicator. Talk about simplicity. And guess what? You already know what that is. It's the 50-period moving average. You see, the rules are based on, once again, the 50-period moving average, the top bottom 25% of the bar closing, and then the last 2 rules are searching for that pattern and confirming that pattern. Now, I'm sorry, I know a lot of you, when I show you examples, are going to say, gosh, this is great, Steve. So what are the last 2 rules? Well, I can't give you the last 2 rules. It wouldn't be fair to the students around the world who have purchased this strategy, but you've already got the first 2, and I'm going to share with you how simple it is actually to apply these rules in themselves. All right, so let me share with you that Netflix example. Remember we talked about this earlier where we saw the top 25% bars above the 50-period moving average? The beauty of strategy number 4 is that it looks for this pattern, and when it discovers and identifies this pattern, it weeds out all the other setups, and many times will buy right at the bottom before the momentum surges, and then again. And it does this also to the downside. Remember this chart in United Airlines, all right? Strategy 4 looks for this pattern along with the 50-period and the top or bottom 25%, and then it weeds out according to the pattern requirements. And so rather than having to sell on each and every one of these, it gives you a high probability sell signal right there, okay? All right, so let's share with you some recent strategy 4 examples. Some of these are going to be a couple of months old. Some will be just a couple of days old, all right? But just sharing with you, if you are already a strategy 4 student of mine, some of the trades you could have taken advantage of since the beginning of this year. All right, let's look at Walgreen here. All right, once again, here's the way most traders would view these markets, myself included. When I first started trading, I did the same thing. I would look at a chart like this and say, well, wait a minute, I'm only looking at 7 or 8 bars here. There's absolutely no direction. I can't get a feel for this. I'm going to have to wait for the earnings to come out, or maybe I'm going to have to wait and see if there's some change in the market. Remember, that's relying on an outside source. What we teach is to rely on the chart in front of you. And what is the chart telling me? Well, if I apply the buy-sell line, it's telling me that even though we've been going sideways, the overall trend is up. Why? Because price is above the 50-period moving average. So I shouldn't look at this from a selling point of view. I don't care how bad the earnings are. I don't care how bad some guy in the blog talks bad about this stock. I should be looking for setups. Now, I want to next look for bars that close in the top 25% of the range. So looking at this, I don't really find any until I get to this one right here. Now, that wouldn't make it a buy signal. That would just meet the first 2 requirements of this strategy. Now we have to look for the pattern, and without divulging the rules, the requirements were met. So a strategy number 4 buy signal was generated, and the stock went up 15 points coming into the end of January into February. Once again, like I said, the beauty of strategy 4 is if it has enough momentum, it will continue to generate buy signals. So don't ever feel as if you missed something, because 2 or 3 weeks later, you could have gotten back in right here. Okay. Or as we look at this example in WEC Energy. All right. I used to look at stocks like this and say, hey, this is in an uptrend, right? That's the perfect definition of an uptrend. Higher highs, higher lows, right? Until my mentors taught me that that's not the way you define an uptrend. In fact, I remember they said, it's amazing how many things there are that aren't. Meaning that we rely on outdated, unconventional wisdom, which really doesn't have any type of consistency to it. It's so simple. Apply the 50-period moving average. Ask yourself, where is price in relationship to that? Price is below. So you should only have a seller's bias. Now, you just can't sell because price is below the 50. You have to add some structure now in the form of looking for bars that close in the bottom quarter of their range. Now, we have one right here, but it didn't meet the requirements. And we have another one. And this one met the requirements of strategy number 4. And coming into February, the stock dropped 9 points. Look at every day was a down closing day. All right. How did we know? That's what students are always flabbergasted. They always say, well, how did you know? Were you studying the inner workings of the company? Did you do a lot of fundamental research? No, I mean, you can if you want to, but we only look at price and this pattern that occurs over and over and over again. Let's look at Lululemon, okay? As we look here, we're in a solid uptrend, right? Well, yes, we are in a short-term uptrend. But remember, is this a full-fledged uptrend or just a bounce? Well, we had the 50-period moving average. Well, before we do that, look at this. We went down. So this is where people are saying, Steve, I always get caught. I buy at the top and then I sell and then, it goes right back up. Well, here's how to alleviate that. Not guaranteed, but how to help you. We had the 50-period moving average. So actually, this was a full-fledged uptrend because we're above. But look at this sell-off. Should we have sold here in this downtrend? No, this was a buying opportunity. And what do we have here? We have a bar that closes in the top 25%, plus it met the rules of the strategy pattern, and the stock generated a buy signal. 30 points in 3 days. Okay. This just happened in December coming into January. All right, the next stock, let's look at OSTK. All right, I would look at this some 4 decades ago and say, well, I had that newsletter because we didn't have chat rooms back then, but we had newsletters. And the guy, that trading guru who I follow, he loves this. And he says there is really major support. In fact, this is a double bottom. So I've got to buy this. And it's going to go and make new highs and everything, right? Once again, what was I doing? I was letting somebody else make my decisions for me. Why don't I just listen to the market and just jump on board whatever it's doing? So I had the 50-period moving average and see that price is below. So there's no way in the world I should have a buyer's bias. I should have a seller's point of view. But now I need to look for a bar that closed in the bottom 25% of its range. None of these do except for this one. Now I need to see if it meets the requirements of the strategy. And lo and behold, it did. So I have a valid sell signal. Where everyone else was thinking that was a double bottom, this is a valid sell signal, and the stock fell a quick 9 points. Now, after that happened, we had a nice little bounce. So you say, okay, so now the sell-off's over. I'm going to jump back in. Well, maybe, but let's look at what the market's telling us. We have one bar that closes above the buy-sell line. Not really enough. We need anywhere from 2 to 5 bars closing to tell us the overall uptrend. But it did close in the top 25%, so someone could say, well, hey, wasn't this a buy signal? No, because remember, it has to meet the requirements of the pattern, and it didn't, so it wasn't generating a buy signal. But now price jumped back down below the buy-sell line, closed in the bottom 25%, and met the requirements of the pattern, so a sell signal was generated. So this entire little bounce was actually a selling opportunity, time to get back in if you didn't take advantage of these 9 points and take advantage of the next 15 points to the downside. Now, I know a lot of you are saying, well, Steve, where do I get out? I mean, what if I had taken the first setup and not gotten out yet? In the course, remember, we teach upwards of 6 or 7 different exit points. We teach upwards of 6 or 7 different ways to enter. We also teach upwards of 6 or 7 different stop placement and money management. So that's all included in our course. I just can't give away all that information right now, but those are all part of the rules, the exiting and different entry points, but they're very, very simple. All right, here's an example right here in Workday. All right, as we look at this, let's say you go to that chat room and the guy says, I really don't like this, or maybe you bought that $5,000 indicator and it says it's tremendously overbought. So you sell, you buy the puts. And for 3 or 4 days, you're feeling really good about yourself. You're saying, wow, I'm doing really great. Boy, that indicator really works like crazy. It's amazing. I'll never have to do anything. I just follow whatever it does and tells me what to do, right? I've been there before. And you know what? Those things work until they don't work. And then you usually get everything back that you made, right? You've been there. I know you've all been there. It's like the slot machines in Las Vegas. They're designed to give you wins every once in a while, to give you this false sense of security that you're doing well. But ultimately, if you stay there long enough, you're not going to have anything to show for it. You're going to give all your little winnings back. It's the same way with using, drawn out conventional wisdom, things that don't have any levels of consistency. Because we don't teach our students to ever, go against what the overall trend is. So what is the overall trend? Well, we apply the buy-sell line, and we see that the overall trend is actually up. So we're not going to short anything. We don't care how some indicator is telling us to go short, how something is overbought. We don't care. We only had one close below, and then we immediately popped back up again. So that's not enough for us to say the overall trend is down. Now, on top of that, we had a buy signal generated. So we would rather have taken advantage of what the market is telling us, that it wants to go higher, and taken advantage of 52 points in the next 2 weeks, okay? This is why we say it is really important to learn how to listen to the market and not an outside source. This is the opening example I shared with you in KLIC. Remember, once again, we thought that there was a range market. Remember, I used to say myself, I was taught to stay away from markets like this. But where was price in relation to that range market? Well, the buy-sell line, I should say. Price was above. So even though we're in a range market, we're going sideways, obviously, the overall trend is still up. And there may be some buying opportunities. In fact, there were a total of 1, 2, 3 buying opportunities right here coming into January before the stock shot up 85 points. And if you missed that, well, it gave you another chance right here in the first week of February, where you could have potentially captured anywhere 40 to 50 points. Let's look at this example in Costco. This is coming into last week, all right? I heard one of my students said, well, Steve, there's big talk around that this is major support right here. This is some Fibonacci support. And so it's hard for me to go against that. And I said, well, listen, as an educator, we're not telling you what you can or what you cannot do. We're just sharing with you things that have high levels of consistency. If you want to trade so-called support resistance points, feel free to do that. But, one trader's support is another trader's resistance. They're just too subjective. So therefore, we just rely on what the market's telling us. The market is below the 50-period moving average. So therefore, I don't care if there's support. I'm not going to buy anything. I'm going to look at this from a seller's point of view. So I'm looking for bars that close in the bottom 25% of the range. And then once I find them, I'm looking to see if they meet the remaining 2 requirements. And we had 3 that did. And look what happened this past week, 25 points to the downside. So what happened to the so-called support? Okay. This is why we don't rely on those things, because they don't have a lot of levels of consistency. We only want to be focusing on things that have high levels, because we know not everything will work, but we have to give ourselves an edge. And these things give you an edge. Let's look at LRCX, all right? We had a really strong sell-off here. This was coming into February, but price was above the 50-period moving average line the entire time, except for one day here at the end of January. But then we shot right back up. A buy signal was generated February 1st, and look what happened, 100 points. You could have bought the calls and made a nice 100 points in a couple of weeks. This is what we mean by using things that have high levels of consistency. See, unfortunately, most traders do the opposite. They go, well, look at this support. We broke it, so I'm going to short it. And for 2 or 3 days, they feel really good about themselves. And all of a sudden, when it starts to bounce, well, what do? You short more, right? Because now you really want to make a ton. And now, after a week or so, you're actually losing money. And now you've just turned to a long-term investor hoping it's going to go in your direction. All right, here's another example here in VRSK. Looks like an uptrend, right? It looks like we're making higher highs, higher lows, but price is below the 50. So I don't care what an old, outdated way of viewing the trend is. If we're below the 50, keep it simple. The overall trend is down. Now we want to look for the short-term trend, bars that close in the bottom 25%. And then once we find those, we want to find the pattern. And we only found one right here. But that was a pretty good one because look what happened. Coming into this week, we fell 25 points. Now let me share with you how you can apply this to ETFs like the QQQs. This is going back to November. This is the oldest example I have for you here. But this is the way a lot of traders, trade out of sync with the buy-sell line. For example, what do we have here in November? We have a bearish engulfing pattern. Extremely bearish, right? You candlestick traders know that that's one of the most prominent sell signals around. You never want to go against that. Here's the only trouble. Even though you think you're going to make a killing and it should go all the way down, a lot of times they don't work. What happened to that really bearish signal? Okay. The point is you were out of sync with the overall trend because that bearish engulfing pattern was generated above. And you see how it really didn't work? It went down for one day and then right back up. Remember, we're trying to instill consistency. And if you're trying to be consistent, you would only be looking at the QQQs from a buyer's perspective. Look for bars that close in the top 25%, and then look for that requirement to be made for the pattern. And if you had just simply done that, kept it simple, didn't have to worry about earnings, didn't have to look at support and resistance, didn't have to look at what the institutions are doing, didn't have to look at volume, didn't have to watch all the pundits on TV, but just kept it simple, stripped away what my mentors called noise, and focused on one thing, the chart in front of you. Well, look at all the buy signals that the market was generating and letting you take advantage of. This is all coming into February, okay? Remember, as my mentors taught me some 4 decades ago, it is the easiest thing in the world to overcomplicate your trading. It really doesn't take a lot of character to do that. Anyone can just pile on indicators, studies, different diagrams, different time frames, and it doesn't matter. It doesn't take a lot of character to do that. But it takes a lot of character because it is the most difficult thing in the world to simplify your trading. Why? Because you have to take a leap of faith. You have to let go of all these things that we've been taught that are supposed to work that really don't have a high level of consistency. But once you do, then you're on for the ride of your life because then you'll become a consistent trader, okay? In fact, let me share with you what happened yesterday. Here's an example right here in ENV, all right? Once again, someone looking at this would say, well, Steve, I follow the institutions. And I took that $10,000 class where the institutions, you find out where they're buyers and sellers, and they're never wrong, right? They're the big money. So if they're buying here, I've got to be a buyer. Why would I go against the big money, right? Okay, just let me tell you, this is my own personal thought. I traded with the institutions. When I was a specialist on the floor, they used to enter their orders in my book. And I can just tell you personally, they didn't have a really high level of success. I used to see them lose tremendous amounts of money. So I would never really back anything institutionally because I personally seen how much they lost. So remember, what is the market telling you? Not some institution, not some worn out way of looking at things. Well, it's oscillating above and below the 50-period moving average. So it's telling us that there's some indecision here. Now we have a number of bars that close in the top 25% of the range, and they all closed above. So most of my beginning students say, well, Steve, shouldn't we just buy? That's a buy signal, right? Not exactly, because remember, you have to find that pattern. And none of these, I'm happy to say, met the requirements of that pattern. But guess what? At the same time, we had a number of bars that closed below that did meet all the requirements. In fact, there were a total of 1, 2, 3, and 4. The last one was generated on Thursday. Now, nothing much happened. Sometimes strategy number 4 will generate signals and you'll have to wait. But this is like that coil I'm telling you, where it's waiting to bust out, because look what happened yesterday. The stock fell 20 points in one day. Obviously, some news caused it to gap down. Maybe something was downgraded. I don't know. I stopped looking at fundamental news some 40 years ago. So I don't know. We don't look at that. The only thing I look at is price. And the price told me weeks ago that this should be shorted. And as you can see, yesterday, prior to the big sell-off in the market, this was already generating sell signals, okay? So this just happened yesterday. All right, so let's recap before we go into questions and answers. The first thing we tell our students is to apply the buy-sell line. Remember, you have access to that right now on your platform. It's the 50-period simple moving average. Just plot that. I don't care if you trade 5-minute charts. I don't care if you trade weekly bars. You should always have a 50-period moving average plotted. And then ask yourself, before you buy, I don't care what strategy you use either. It can be anyone's. Where is price in relation to that buy-sell line? If price is above, you should only take buy signals. If price is below, only take sell signals. In fact, if you don't believe how powerful this simple tool is, go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason you had losses was because you were out of sync with this rule. In other words, you were selling below the 50, or I should say selling above the 50 and buying below the 50. You were out of sync. You were doing the opposite. Once you learn how to apply this, you're already halfway there. But then if you want to find out and see what the short term is doing, then use that top bottom 25% rule. In other words, if bars are above the 50-period moving average, if the overall trend is up, then look for bars that close in the top 25% of their range. They are telling you what the short term is doing as well. If you see that price is above the 50, but there are hardly any bars closing in the top 25% of their range, that's a warning signal. It's telling you that the overall trend and the short term are not really in sync. So you want to see them both in sync. You see how the market is telling you what it wants to do? And the same works for the downside. Now, these two rules, these two edges, make up the beginning rules to strategy number 4. There's only 4 rules in strategy number 4. You've already got 2 of them, okay? So they make up the beginning of what is a strategy that I've been applying for over 4 decades. It's one of our most consistent and popular methods of specialist trading. And it really, as you've seen, and examples that are just going back a couple of months to even just a couple of days, how powerful it really is and how I really truly believe it can help you. Now ask yourself, before you ask me questions, do you think this simple process can help your trading for the remainder of 2021? Okay, just by applying these 2 edges, do you think you can increase your odds for consistency? What about if you were able to learn that strategy and able to trade it on your own? Well, I think the answer is yes to both of those questions. So we have a great discount for all of you attending today at the Online Trader Summit in February here. We're going to actually offer you our Trader Summit special. This is strategy number 4. You're going to get instant course access, detailed instruction. Now, remember I said there are upwards of 6 or 7 different entries, exits, and stop placements. You're going to learn all of them in the course, all right? You're going to get the complete course rules, also a conservative as well as aggressive version ways to trade, because we know that everyone trades differently. In fact, we encourage that. We don't want everyone to trade the same. This is not a system. So 2 traders getting the same buy signal based on the basic format can get entirely different results. Some traders may decide to use a certain exit, which gets them in and out quickly, and they have a nice, quick, short little profit. Or someone else could say, you know what, I'm going to use this exit and go for the long haul, try and make maybe 3 or 4 to 1 risk-reward ratio. It's up to you. Remember, you're in charge. We're not here to tell you how to trade. We're here to teach you so that you can make your own trading decisions. On top of this, all of our students get educational correspondence. You get my personal email address. You can contact me whenever you'd like to ask any questions. In fact, prior to presenting today, I was answering emails from our students around the world who had questions on different methods and strategies. So you get access to that. But this is a great, great offer and promotion today, but we're not going to stop there. We're actually going to throw in some extra bonuses on top of that because of our affiliation with the Trader Summit. We're going to give you 4 Online Trader Summit bonuses, and these are worth their weight in gold. Bonus number 1, you're going to get the add-on for Metastock. So in other words, you'll get the add-on that will automatically generate those up and down arrows. So you'll know exactly where they are. Now remember, we're an educational company. Our goal is for you ultimately to be able to spot them. You don't have to really have an arrow if you don't want to, but these arrows are great for teaching you what to look for and to know if you're actually doing it correctly and identifying the pattern correctly. So you're going to get those. This is usually a $1,000 value. You're going to get bonus number 2. This is our full Secrets of a Stock Specialist course. This is a 3-hour video seminar. Some years ago, I was asked to be the head speaker at a conference in Colorado, and it was recorded. And I talked about many more edges, many different techniques, ways for determining the trend. And this is a 3-hour video seminar. We're going to throw that in as well. So you're going to get a lot more information on ways in which to help you trade. This itself is close to $1,000 worth of value. Bonus number 3 is great. I'm sure you're all going to love this. This is a PDF version of my book. I wrote a book about my experience on the floor. And in fact, it goes into a detailed description of what it was like to trade during the crash of 1987. I kind of take you through a trade by trade memo of everything I had done and show you exactly how I traded on the floor and the orders that were coming in and what I was doing. And so it's a great reflection of the way trading used to be and what I was doing in my own experience. That's a $100 value. That's also going to be deeply discounted. And then finally, we're going to take it up a notch with our Secrets 2.0 course. All right, these are more advanced edges, more ways to trade, a lot more different techniques and methods, another nearly $1,000 value, okay? So let's break this all down. Now, if you purchased all these separately along with the bonus, okay, it would roughly be close to about $5,000. But don't worry, we're not going to charge you that. What we usually do when I give my seminars and my weekly webinars, if we have this, we'll discount this down $2,000, roughly down to $3,000. So you still would be saving $2,000. But we're not going to do that today. We're going to deeply discount it from that. We're going to, for a limited time only, give you all this same information, all these same techniques and methods that I've accumulated in my 40 years for only $297, less than $300, okay? That's a discounted savings of roughly $2,800. So this is a great, great way to get acquainted with us, to see that we're really trying to educate you. You can get information that I've accumulated in the last 4 decades, things that I personally use myself, and they're really there. And also, you can contact me via email anytime you have a question or you want me to check your work or to see if you're learning. And this also comes included with the Strategy Number 4 course. This is really a great opportunity, once again, to take your trading to the next level. In fact, a year from today, you will have wished you became a member of this course. You see, you don't want to be where you are right now a year from now. You want to always be progressing. You always want to be advancing. And that's what you'll do with all this information. The Secrets course, the Secrets 2.0 course, my book, along with the add-ons, along with the strategy, you really get information that you won't find anywhere else other than what we teach and what we promote at Specialist Trading. So here's how to take advantage of this, okay? You can contact my sister site, Pro Trader Strategies. They help me develop all the courses. They're in charge of all the discounts. They have trading consultants manning the phones right now. I would suggest calling them up directly at area code 310-598-6677. They would be happy to discuss things with you if you perhaps already have Strategy 4. Maybe you want to purchase another strategy. But if you haven't, Strategy 4, I believe, is the best course to start out with. If you're new to my teaching and you're new to my webinars, we always say that Strategy 4 is a great place to start. And on top of that, this discount, I can't think of a better way to start. I mean, think of it, for $300 or less than $300, you're getting all this information. I can almost guarantee that many of you lost more than $300 this past week, right? It was a tough week in the market with it really having a roller coaster up and then down. For that same amount of money that perhaps you lost, you could have actually gotten over 4 decades of information and things that I've accumulated right there at your doorstep. So this is a great, great offer. Take advantage of it. That link you see at the very bottom is the link that will take you up to the information page and the sign-up page if you'd like to sign up online. So you can, I think you'd have to copy and paste that. I don't know if they're going to post that on the chat box, but this is something that you can copy and paste. Or, once again, to be a lot simpler, you can contact Pro Trader Strategies at 310-598-6677. Okay, I think I have about 5 or 10 minutes left for questions. I hope I do. If not, I don't want to step on anyone's time. But let me open up the question and answer box. Let's see here. I am always confused, the daily in the buy, but small TF in the sell zone. Remember, the small time frame in the sell zone. Remember, as I said, the subject of today was to keep things simple, right? Remember, it's the easiest thing in the world to overcomplicate. Well, if there's one thing I found, the best way to overcomplicate your trading is by looking at two different time frames. I mean, that has never served me any purpose. The only thing it's done for me is to keep me out of a lot of good trades while I'm waiting for them to be in sync. So your question here is you have trouble because the overall trend will be the overall time frame or higher time frame is in an uptrend, and the short-term time frame is in a downtrend. Well, that's because you're looking at two different time frames. And our philosophy is to only look at the time frame you're trading. So if you want to trade on an hourly chart, then that's the only thing you look at. There's no reason to look at a daily chart, in my opinion. And we don't teach that. So it's up to you. Remember, once again, if you'd like to, but by the very fact that you're having a tough time shows that this really isn't compatible. It's not that really consistent of a method. So we don't really apply that at all. Can you apply for that less than a week trading? I'm not sure what you mean when you say less than a week trading. You mean when you're in and out less than a week? Sure. If that's what you mean by being in and out in less than a week, sure. Remember, I was taught this method and I was in and out in 5 minutes because I was on the trading floor and I was buying and selling really quickly. But you can keep this according to however long you'd like. So if you'd like to get in and out, some of our students are in and out in a day. Others stay for weeks, others stay for months. Remember, you are in charge, but we provide you with the information to help you make that decision, okay? Let's see, thanks for reinforcing the 50-period simple moving average. I have found this to be a powerful moving average in my day trading too, not just daily trading. You're right. I make no qualms about this. Most of my trading is intraday trading. I was trained that way on the floor. So I like to stick to intraday trading. I mainly trade the E-mini futures, and I apply a 50-period moving average. So, if I'm looking at a 5-minute chart of the E-mini futures, I still have a 50-period moving average. And someone would say, once again, well, Steve, do you look at the hourly chart? No, I only look at the 50-minute, or I should say 50-period moving average of a 5-minute bar. I don't really care what the hourly is doing. I never do that. If I did, I would probably miss a lot of trades waiting for the two to line up. So it's up to you, okay? So even as a day trader, yes, I'm using the 50-period simple moving average. And remember, that's the 50-period simple moving average of the chart I'm looking at, okay? It's not of a different time frame. So it's 50 periods of, let's say, a tick chart. It's 50 periods of a 5-minute chart. It's 50 periods of a daily chart. It's 50 periods of a weekly chart. It's never 50 periods of another time frame, okay? I use the 50-minute, the 1-minute and 5-minute for the ES and NQ. Very good. That's good. It can really help you. I'm sure it has helped you tremendously. Are you able to search for buys that meet criteria, or given a day, will it give you multiple results? Does this work only with Metastock? Well, sure. You have Metastock. You can find it. You can scan for it, and it's simple. But remember, once again, in the beginning, we want you to be able to identify. I don't just want students to say, well, hey, this is great. Let me just scan for the signals, and all I have to do is take the buy and sell signal. Because that, once again, goes against everything we preach. We don't want you just to blindly take a signal. We want you to understand what it's based off of, and in the beginning, learn how to identify them yourselves. Then go to the scanning process. But in the beginning, as an educator, we want you to be able to figure that out, okay? Please clarify the top bottom 25%. Okay, well, basically, think of a bar, a generic bar, okay? What you want to do, it doesn't matter what time frame that bar is, what you want to do is measure the top to the bottom of that bar. And when I say top to bottom, I'm not talking about the open to close like on the candlestick body. I'm talking about the extreme high to the extreme low. Let's say the top of the wick to the bottom of the wick if you're looking at candlesticks. And let's say the high to the low is 4 points, okay? So you divide that by 4 separate but equal parts. So obviously it would be 1 point above 1 point above another point. And so you'd have 4 separate but equal separations of a point. Now, if you close in that top 25%, in that top quarter, and you're above the buy-sell line, that's a high probability setup getting ready for strategy number 4. And remember, all this is explained in detail. I just didn't have enough time to go over this, but we have a number of videos that you can look at that explains exactly what this process is on our course. And so you just reverse that for going short. Now, the main reason is people say, well, what's the good of it? Why does it matter where it closes? Because remember, that's the chart. That's the actual bar telling you what it wants to do. If it closes near the high in the top 25%, the odds are it's going to continue. It's telling you most likely we're going to keep going higher on the short term. But if you combine that with the overall trend, well, now you don't have to look at 2 time frames. You have all that information readily available right in front of you, okay? It's really, go back and do this due diligence on your own. Do the research, and you'll see how powerful these 2 simple and easy methods are to apply. And then once you do, take advantage of this great offer because before it goes back up to 3,000. I think this offer is good for the weekend, maybe going into Monday, and then it goes back up to the 3,000 usually, okay? So it's something that you really want to take advantage of. You know, if we were charging you $2,000 or $3,000, it wouldn't be, we'd give you a little bit more time, but this is a very inexpensive price. Like I said, if you purchase these separately, it's going to cost you close to $5,000. We usually discount it down to $3,000. And now for the Online Traders Summit, we've discounted it down to $297. So that's a really great offer, okay? I think I have time for maybe 1 or 2 more. I don't want to take anyone else's. Let's see. The screen is not changing. Oh, I hope that wasn't me. That looked like a while ago, so hopefully that wasn't me. I think that's about it. So what time frame am I looking at? Well, remember, it doesn't matter what time frame I'm looking at. You can apply it to any time frame. So if you like to trade daily bars, apply this to daily bars, strategy 4. If you like to trade 5-minute bars, you'll get strategy 4 buy signals on 5-minute bars. I do. I trade that all the time. If you like to trade weekly bars, you'll get strategy 4 buy signals on week. It's just a pattern that you're really looking for. And I already explained to you 2 rules of that pattern, okay? You know what? I'm not sure about Thinkorswim. I think there may be some alterations. I would contact Pro Trader Strategies if similar, but it does work perfectly on Metastock. So, you know, you got it going for you right there. It's a great offer, and you'll get the add-on right there, okay? So it's right here for you with Metastock, and you've seen the examples. All the examples you saw were generated on the platform, the Metastock platform. So there's no reason not to take advantage of it, okay? I think we're right about at the end. I really appreciate being offered the time slot to speak and to teach you. I hope you got a little bit more about our philosophy and that we really want to educate you and put you in charge of our own trading. We never want to make you buy or sell based on what we think. It's your decision. That's the only way I found in 4 decades how somebody can become a consistent trader. They don't listen to anyone else. They've learned what works, and then they just stick with it, and they make their own decisions, okay? Hopefully, we'll be able to get you to that place with this great offer, okay? Thank you so much. I wish you the best of luck. Some great speakers coming up, and thanks to Jeff and everyone at the Online Traders Summit, okay? I'll hand it back to you, Jeff.
All right. Thank you very much, Steve. We appreciate it.
Thank you.
Okay. All right. Very good. Very good. Let me go ahead and kind of get things resorted over here. I hope everybody's doing well and enjoying the presentation today. Let me go ahead and kind of change it over here. Just push a couple buttons and we'll get everything kind of sorted and working well. All right. So I thank you, Steve. What a great day it's been. Let's go ahead and kind of talk a little bit about the summit offer. Again, thank you for everybody that's purchased so far today. If you have questions, give us a call. I know we've been a little bit busy, but you can get the Trader's Action Pack, which includes Steve Bigelow's Candle Profit Systems, Trade Trend, the Vora Victory Method, the Barry Burns Top Dog Trading Toolkit, a premium subscription to learnmetastock.com, Unleash the Power of Metastock, for as well as 2 years of stocks and commodities, and of course our white glove installation and support service. So normally everything separately would be $3,739. Here at the event today, it's $1,645. You can give us a call to get that. It's 800-882-3040. You can also chat live with us at metastock.com/saleschat, or you can order online at metastock.com/summitdeal. So a lot of people saying that they enjoyed that presentation. I told you, it's good. We also have a very good speaker coming right up. So let's go ahead. I do want to say thank you to Stocks and Commodities Magazine for sponsoring today's event and every event that we've run in the last 8 years. They do a great job. And, you know, 17,000 articles in their archive. 1.3 million subscribers. They've been publishing it since 1982. You can go in, you can get a free issue. You can get a lot of different bonus offers, including access to a lot of some of the rooms, access to Oscar's room for a week or two. All of that stuff's available. If you just go to metastock.com/traders-summit, fill out traders-summit, fill out the registration form, and it'll give you the option to get any of those offers that you want. So if you're on YouTube, definitely do that. You want to do that either today, Saturday, or tomorrow, Sunday, because on Monday the page will expire, and I'll be sending all of the names to stocks and commodities anyway. So anyway, and of course, Metastock. We talked a little bit about Metastock already. Our next speaker is fantastic. He does a great job. I love the way that he likes to look at kind of classic technical analysis and patterns and kind of support and resistance levers. He's very colorful. Greg Lewis likes to call Oscar Carboni a force of nature. He is a very, very good speaker. He's been a friend of Metastock since forever. And he does livewithoscar.com. You should join his room. You can join to be a part of his room for actually free. He'll probably talk a little bit about that. He also does a very, very good class that I've had the pleasure of going to down in Las Vegas. He runs several times a year, and he'll talk about, he calls it OmniCamp. I'm sure he'll talk about that as well. But Oscar is one of a very, very good speaker. I think you're really going to enjoy him. So with that being said, Oscar, how are you today?
Uh-huh.
Oh, there you go.
Jeff, can you hear me?
Yeah, I
well.
can.
Thank you so much. Jeff, before we get started, and thank you for inviting me to this wonderful summit. Before we
You're
get
welcome.
started, mind if we check the camera and make sure that we are, I want to turn on my webcam.
Yeah, let me see. Let me go ahead and let me see if I can find mine. Let's see. Where did I hide it? Okay, I don't see your camera yet.
I didn't click mine on. I'm clicking it on now.
Jeff's there, but
And I hope it grabs the right camera. Okay,
There you
then
are.
we're good to go. Grab the correct camera.
looking good.
All right, and I
We
can
should
see. Welcome. ESH1, welcome to short-term trading live with Oscar. So we can see your chart. Emmanuel says, I agree with Jeff. This guy is awesome.
Thank you.
PK Rock says,
I'm looking forward
Yeah.
to having some fun today.
it's Oscar time. Everybody, we're excited. I'm going to get out of your way. Let's go.
All right, so I'm just going to move this out. Okay, I can do that. Traders, thank you so much for tuning in. Metastock, thank you so much for having me. I love doing these presentations. I've been working with Metastock literally since 1982. And although I've tried and worked with so many software companies on the street since the 80s, I've found myself with Metastock, loving it my entire career. And I'll show you how I use it, mostly in its simplest form here. But we've got a theme today, traders. Firstly, I've got nothing to sell you. So at the end of this theme, I'm just inviting you to my free live trading room at the end of our webinar here. So there's no add-ons. I can't really teach what I would like to show you here in an add-on. I teach it live in Las Vegas to 3 people every 4 months. So I have a very exclusive seminar I hold here in Las Vegas for 3 hand-picked students. I do that 4 times a year where I can actually show you my Omni analysis. The brand of analysis I'm about to put on display for you, I kid you not, it might seem slightly complicated. It would be considered my 101 pre-K analysis on display here. We could get much more intricate. And, I can show you the Omni in many ways. But what I'm going to show you today is a fantastic illustration from my point of view of 2 things, the 2 themes I have on the screen. I think we have reached equilibrium in dollar printing for the system. I think the Fed and the Treasury has printed enough since 2009. The economy has been fixed. The system's fixed. We're overdoing it. I'll show that to you in charts. Second part of this is, as I did my analysis Friday night for this webinar, I realized that the stock market is literally at a do-or-die juncture. And that do-or-die juncture, I can illustrate to you on these charts right now. So we are going to look at analysis today and figure out how to use this information next week. And that's what I will present to you. I hope you find this interesting and useful. So, out of the way, you are looking at the E-mini S&P. And just let me reiterate something. I'm sure you've heard about risk. If you don't realize it, this is an extremely risky endeavor. Stocks, futures, ETFs, commodities, if you trade it, it is risky. You can lose a ton of money. And if you trade without stops and you're short options or short futures, it can do more damage than you've ever dreamed of. So please know this. Never trade these markets without a plan and without a stop, which is put in before you trade. Now that I've said that, let's take a look at what's going on out there. The current flavor of the week, technically, in my opinion, is that we are at a do or die level in the market. So what does that mean? We're looking at the E-mini S&P on a daily bar chart. See this wonderful green channel that we've been in from the top to the bottom, and it just stays inside the channel, right? Gets near the top, breaks down, near the top, hits the bottom, back to the top, goes to the bottom. That is a valid channel, no question about it. At the same time, you've got a very strong, valid trend line coming up from the lows you can fit on this chart, connected to the next low, extend that out, bingo, right to the low of Friday. At the same time, you can see that this 50-bar moving average has been held. When it hits, it holds. If it gets through, it becomes dramatic, and they push it down a huge amount. So the 50-bar moving average, very important to the street on many markets, especially the E-mini S&P. In my opinion, we're looking at a do or die level right here. If on Monday we come down, we break these channels, continue lower, that will absolutely augur for a much lower drop coming this week. If in fact we can hold above this, and put a bar in on Monday like this that sends us straight up, well then maybe we're saved, right? And we're not at that do or die spot and it doesn't break. But the theme that you will see in a few charts is we are absolutely at a do or die spot right now. So you're looking at E-mini S&P daily bar. Let's look at a few charts and see where this goes. In your NASDAQ, we sort of met that do or die spot on Wednesday and Thursday and started to plow through it. Once again, a fantastic channel, the blue one. There's another channel in here, the red one, which is equally as strong. And well, let's make those both lines dark for you. All right, so if you look, we dropped through the blue channel. We dropped through the red channel. There's an even a longer trend line right here. It goes way back on the chart where I can't even fit. We broke through that as well on Friday. And I looked at that and said, uh-oh, that does not look good. Compared to the E-mini S&P, which is at the do or die level, the NASDAQ, which if you ask me is a bit more of a leader than is the S&P, has broken through its do or die levels. And you can absolutely call this some unorthodox but still visible flag right here. I would think this is some kind of a bear flag forming. Something like that's happening here. Let's see if we could just make that look a little bit more like a flag to you. That's where the problem was. Okay, let's straighten out this line and we'll create another. And so it's not exactly an orthodox flag that you'd read about in books, but something is going on right here, in my opinion. So, for whatever reason, it's not letting me grab my little line here. Okay, so I think you got some kind of a flag building as well. So S&P at the do or die level, NASDAQ seems to maybe be getting through that do or die level. But of course, we're going to look at a lot of charts before we make a determination. Now we come to the Russell 2000. And again, two themes today, right? The do or die level and are we printing too many dollars? They're both intertwined. Once again, you've got the Russell 2000, two fantastic channels. You can't deny this channel, how well it's worked, right? From top to bottom. So you can see it moves bottom to top, runs all along the top of this channel for a long time. Breaks to the bottom, back to the top, breaks to the bottom, strong channel, right? Well, there's also a red support line, which is equally as strong. And let's make that a little darker for you as well. And we're sitting right at that spot at the moment. So again, we've got a third indice looking at some weird do or die level, meaning if you fail here, downside ensues. So, all right, so we see that we've got them ones breaking through a little, two are holding the line, but we're uncertain. Let's continue down. Let's continue to look at others. You look at the transportation average, and I would have to say not too shabby compared to the look of the others. Transportation average is actually above the channel, nowhere near this infamous 50-day moving average, which will come into play shortly. Nowhere near the bottom of this red channel. So unlike the other indices we just looked at, believe it or not, this is the only one that I follow that is not at the do or die level yet. Found that interesting. Thought I'd show it to you in the mix of the others. However, the main indices that we trade, S&P, NASDAQ, Russell, do not look very good right now. We'll see what the transportation average wants to do. Remember, the transportation average is 20 stocks. The S&P is 500. NASDAQ, 100. So when you're looking at markets like that, and of course 2000 and the Russell, they may be stronger than this transportation average. They may be telling us what's coming next. So we need to keep an eye on all of this so that we know what to do next week. But you'll see this start to form as we look at more charts. Now, I have mentioned that we're starting to print too many dollars. And in fact, back in 2008, I was doing YouTube videos night after night, pleading with the Fed, pleading with the Treasury, please print dollars. The system is broken. We need dollars. Please print them. And eventually, the Fed started printing those dollars, and the system immediately started to correct. Now, we had many other reasons why 2008 was a big problem for the markets and the economy, but not having enough money in the system was absolutely a big factor, and I became a proponent, please print. Now, leading up to 2008, when I started to ask the Fed to print, I was raised in an environment where I was trained by every pro I've ever worked with. Printing is the worst thing a country can do. Never, ever print. Printing's inflationary. Printing makes nothing but headaches. Never print U.S. dollars. Anyone my age or anyone's ever traded through the 80s, 90s, through today would remember we do not print. It used to be a sin. Well, after 2008, I decided that is wrong now. Times have changed. We need to print. And we started printing. So once we started printing, the economy started to get better. And we never knew exactly how much we needed to print, but we certainly did need to print. Thank you for the tea, young lady. Cup of tea delivered in the middle of my session here. I gotta love it. So U.S. bonds are now starting to drop. When bonds drop, interest rates move higher. I don't know if you recognize what that means, but when bonds go down, whether the Fed says something or not, Jerome Powell says something, it does not matter. Interest rates inherently go up all by themselves. Now, we have been dropping for quite some time in bonds. Interest rates are now starting to move higher. And in fact, look at this chart. This is a weekly bond chart. For years, the bond market went up. And if you look at this little teeter-totter or seesaw, it will show you that when bonds go up, interest rates go down. It is absolutely what happens. Bonds up, interest rates down, whether the Fed does anything to them or not. Well, bonds have been going up for years, and wonderful. Interest rates went down, and everything looks rosy. But we had our capitulation in bonds right here. We had our blow-off top or our capitulation. Since then, we've had over a year now of the bond market moving lower in a bear market. Now, as bonds move down, guess what? Interest rates move up. We are in the exact opposite climate that we were in for years since 2009. Things are changing now. We're also at the infamous do or die spot with the 30-year bond market. Why? because it's about to possibly penetrate this 200 bar moving average, which would make interest rates continue to move higher. And bonds rarely spend time below the 200 bar moving average in the last 2 years. If they're below, they stay below. If they're above, they stay above. Well, we're finding out right now if bonds are going to continue. If that continues, interest rates continue higher as they print money, detrimental to our marketplace. And you'll see why. So the bond market on the weekly looked terrible, if you ask me. This is the daily. And now let's take a look at something else. Those dollars they're printing too many of. Look at this insane drop we have been in dollars for a long time now. So dollars have literally just been dropping and dropping and dropping. Little bit of a rally and boom, back into the drop. Tries to get out of trouble, back into the drop. It has respected this red line for quite some time. And bonds have certainly been in the bear market for quite some time. Excuse me. Dollars have been in the bear market for quite some time. As dollars move down, as you see on this little teeter-totter, commodities, real estate, inflation moves higher. So what does that mean? Why would I think we've printed too many dollars? I'm the guy who was cheering, let's print dollars, right? Even though prior to 2008, I would have cheered the opposite. 2008 forward, let's print dollars. Now I'm back to saying, please stop printing dollars, please. Well, why would that have any meaning? I say, let's go find out. Copper. Copper is in everything from the cell phones you are looking at the moment to the screen you may be watching this webinar on, the car you drive. Copper is in everything. It's in your electricity. It's in everything. It's in car tires. It's in everything. Copper, look at the way it's run up since they've been printing dollars. Almost as long as they've been printing dollars aggressively, this copper has been exploding. So we know Dr. Copper absolutely has a bearing on inflation. If everything that we build, a product that is inside of it called copper, is getting this expensive, that is inflation. We've seen too many dollars printed. Watch, it just keeps going. Next. Lumber. You've got lumber in every building, everywhere. There's wood everywhere. The price of our real estate has been rising. Well, if the price of copper and lumber, two major components to real estate, are going up, that is inflationary. Either the price of the house has to go up, or they have to sell it for cheaper, or people have to get a bigger mortgage, which they may not be able to afford. That is inflationary. Let's move along. What are we looking at? Another do or die. So Tesla, because Tesla, like every other company, has debt, interest rates are starting to move up. Look at what's starting to happen to something like Tesla. It's laden in debt, and it has to sell bonds in order to bring in more money, just like every other company, to keep their company running. Well, if the interest rate is moving higher because bonds are moving lower, you're going to feel it in our stock market, major companies in the stock market like Tesla. Now, Tesla, if you ask me, back to the do or die theme, that is about to break the 77 bar moving average, which does not happen in Tesla. Look, it just doesn't happen. We don't break this. Let me go back. It just doesn't happen. You know what I mean? All the way back there, you stay above that 77. Well, we're about to break through. We've already settled through on Friday. Another do or die theme. Are we getting the picture here, kids? Let's keep looking. Let's see what else we can look at. That will bring Tesla back at the end of this as well. Let's go here. Bean oil. Bean oil is used in plastics, car wraps, cars themselves, tires, you name it. It's used in more things than you would ever imagine. I know people don't realize that about soybeans and bean oil, but it's used in production. Look at the massive inflationary rally that has taken place in something like bean oil. Again, if the products that we use or the commodities that we use to create product is going higher, well then the product has to go up That's inflationary. Or the company absorbs the extra cost, and what happens? They make less money. Their stock goes down. It's all interrelated, but we can't just continue printing dollars and watching interest rates move without seeing some sort of what I'd like to call a retracement or a readjustment in the markets, which is what I expect to happen here. So is the camera and microphone still on? I just want to be sure. And let's move to another nice chart here.
Everything's looking good.
Beautiful. Thank you so much.
Greg and I rushed to see who could find the mute button first.
Thank you, sir.
I just wanted the opportunity to tell Oscar how handsome he was today.
Well, thank you. Just try not to let the mirror break if you put it in front of me, okay? It's 7 years bad luck. Crude oil. Now here we are talking inflation. If you didn't know anything else about the market, you didn't know about bean oil, you didn't realize it was used in plastic, if you don't realize copper and lumber is used in anything, well then how about this? Look at crude oil. What is not using gasoline or some form of energy? Everything is. So what happens here? Price of crude goes up. If the price of crude goes up, it costs more money to bring a commodity to a factory, right? The price of moving it, transportation, crude oil has gone up. Then if you bring the raw material to the factory, you got to build the product, you got to ship that product out to be sold. More trouble, right? Why? Because you have to move it again. You're going to pay even more now because of the price of energy. Then the consumer either has to order it on the internet and it gets delivered via truck, train, or you name it, plane, or you've got to go drive, fly, or you name it, and go get it. All of that is being affected. Every single thing gets affected when the price of crude goes higher. This is extremely inflationary. Printing more dollars is not going to help even slightly get the price of crude back down. We have reached a point, if you look at these charts, printing dollars for the last 6, 7, 8 years didn't really mean much to the markets, which means we needed to print more. We've reached a point now where printing dollars is making every asset explode. We have printed enough dollars. Let's look at another chart. This is crude oil, right? Let's see what comes after crude. Chart number 10. Let's see what this has for us. Cotton. Are you wearing clothes at the moment? Take a look at your label right now. You'll see there's cotton in what you're wearing. There's cotton in everything. It's in furniture, it's in clothing, it's all over the place. Look at the rally cotton has had. So it's come off for 2 days. Big deal. Look at the massive rally. Printed dollars is making our markets become inflationary. Our commodities are starting to run. Now, printing dollars makes weird things happen to many markets. While interest rates are starting to go up, other things will happen. The price of gold will crack, things like that, and I'll show you why. It's really getting detrimental to our markets that they keep printing these dollars. It was great for a while, but we're no longer there. So cotton is number 10. We need chart 11. Who doesn't drink coffee in the morning? You know, it's worldwide, and if you're one of the kids today, you don't mind a $7 Starbucks cup of coffee. But it's been, people drink it every day all over the planet. Look at the way coffee has moved higher. Much, much higher. It just keeps on going. And you probably have a bull flag forming right here to take it even higher. Flag pole right here, right? This ball would be your flag pole. And then you've got the flag. Well, let's see. You get the point, right? I don't want to waste time on this. That's not the theme here. Inflationary markets is the theme here. And we'll go through more. There's more to show you. So we just did number 11. That brings us to number 12. Well, if you're going to have coffee, you got to put sugar in that coffee, don't you think? You see what I'm saying? There is inflation starting to trickle in everywhere due to the Fed printing these dollars. Look at this rally. So sugar is starting to go berserk. We are approaching that point of too many dollars in the system level. No more printing, Fed. Look what's happening to these markets. There's more proof, though. Let's see where we're at. Now, here's where things start to go the opposite way. Look at gold. Interest rates. Do you know that when interest rates go up, bonds go down, interest rates go up, the carrying charge for gold, the price it costs you to hold gold in vaults and banks, starts to go up very quickly. And you start to look at that asset and say, wait a minute, hold on. This is like an option now. It's starting to lose money daily just sitting there, even if the price doesn't move, and people are starting to sell gold for that reason. Interest rates make carrying charges move higher, and we've had the infamous death cross, where the 200 ball moving average gets above the 50 ball moving average, and that's what you're seeing here. 200's green or teal, the 50's black. You had a death cross. Look at the drop since the death cross. Now we are at another do or die area. What makes this a do or die area? Well, what happens if you break the bottom of this channel, which we hope doesn't happen, because when it hits it, you get a rally out of it, right? Hits it, rallies, almost hits it, rallies, hits it, rallies. Well, what's going to happen here? Another do or die level. So there is a theme here, kids. I've noticed it in many of the charts I'm looking at. It's a do or die spot for our markets in many of our markets that we trade daily. So that's your gold. And let's take a look at what else we can look at. I'd say we go right here. This is starting to take gold's place. There's no carrying charge for Bitcoin, but there is a charge if you want to move it around. However, it's been going up rapidly. The more they print dollars, the more terrified the world starts to become, especially the young kids that don't understand printing dollars isn't so bad. If you print too many like now, it could be bad, but the Fed can mop that right back up. So it's not dramatic unless they continue to print like crazy people and irresponsibly continue to print over the top. If they control the printing here, we're okay. But Bitcoin has been absolutely rallying very smartly in value over gold. If you're going to buy an asset right now, Bitcoin seems to be a smarter asset. It also seems to love to bounce off this 20 ball moving average for whatever reason. I don't care. I don't try to reinvent the wheel. We are at it now. As you can see, it also likes to pull back from the top of this channel to the bottom, and then it makes another run. Top of the channel to the bottom, new run. When we hit the top of the channel, we're kind of close to the bottom. Maybe we hit the bottom, we get a new run. I've actually got a target on the downside of 41,000 for Bitcoin. It's not quite here. It's a little bit lower than the green line, but I've got a 41,000 target for Bitcoin where I would like to get back in and buy more, which is what I actually have planned to do if I get the opportunity. So if it pulls back a little further, I think you go in and buy Bitcoin. As you can see, it's holding very smartly in that abstract channel, and it's got that characteristic of when it has the pullback to the bottom of the channel, it finds its legs. Fine, if that's how Bitcoin wants to behave, I know how to trade. You know how to trade. Make sure that you hang out with me in my live trading room, and I'll show you what I will be doing when Bitcoin reaches my magic level. What else is out there? Now we're going to start to look at stocks. Back to do or die. Amazon. Would you agree it's a huge piece of our stock market? Everyone would agree with that, right? Well, Amazon has just broken down through a massive wedge or a pennant through the bottom of the pennant at the 200 ball moving average right now. That, my friends, is do or die. The street and the 200 ball moving average are married to one another. I kid you not. I can prove it to you 1,000 times over. They are seeing this just like we're seeing it because you can't miss it. So what's happening here is you're starting to break down, and the channel that was moving higher is now becoming a channel more like this. It's starting to look more like a channel that is dropping faster, right? That's certainly more steep than the stuff that we've seen coming across here. So now we're starting to steepen as we drop out of this channel. We need to hold the 200 ball moving average. It is do or die this week, kids, in Amazon. Let's see what else is out there. I need chart 16, Mr. Apple. Now, I'm just going to sit back for a moment and stare at this chart like I did earlier today. And the things that I'm showing you jumped right out at me. I said, whoa, what is Apple doing below the 50 ball moving average? It doesn't do that. It never does that. Why is Apple below? And then I realized we had a baby. We had quite a baby. We had a head and shoulders here, which is bearish because it's rather large. And then the market started to drop. And now we're breaking the 50 ball moving average, which the street loves about as much as the 200 ball moving average. And easily, you can force a flag out of what you see here. I can easily force some kind of a flag out of this if I just wanted to say flagpole. Are these lines jetting down right here? This is our flag forming. Of course, you can make the flagpole go as high as you please. And this is your weird looking flag. But again, that's not the theme for today. The theme for today is we are at a do or die juncture in our markets. I showed you the indices. I showed you a few markets that surround the indices. Now I'm showing you the big booming stocks that comprise our indices. And they are having trouble at the moment or at a do or die level. I would be more than happy to be long all week if we can hold this do or die level in our stock market. But I don't know, because you've just seen a couple of big hitters. Let's look at others. Look at Netflix. Now let's see what's going on with Netflix. Once again, there are certain averages that the street seems to love. I don't fight it. I just use them because they do. They love this 50 ball moving average. You get under it, they trash it. You hold it, they rally it. Hold, right? Beautiful. Hold, beautiful. They continue to hold it. If it settles for 2 days under that 50, they come in and crack it. If it does not settle under the 50, they rally it right out. Street loves it. 2 days under the 50, crack comes. Gets back under, doesn't stay under, the rally, right? Stays under for 1 day only, the rally comes. What do we got to do here? Not only are we at the 50, we are at this big booming green trend line. This is another one of those do or die levels. You see it? Let's make this a little bigger for you. It's another one. We're at the 50 ball moving average. It's right there. We are breaking down through a tremendous trend line. Algorithms, whether you know it or not on the street, they are following exactly what I'm showing you. They are looking at how high this market went, how low, how high, how low. They calculate exactly the way we do, except for I look at it. I like the visual, and they turn it into tabula. Everything's a number. It doesn't make a difference. It's the same things we're looking at here. They see what's going on here. The algorithms have calculated that we're at a spot where something has to happen. And that's why all this analysis comes together right here. But I prefer the visual. There's no need to scare people with these crazy algorithms and the jargon that comes out of Wall Street. I kid you not. They're just calculating the same things your eyes are looking at here. Wall Street keys off the 50 ball moving average on Netflix, as you can see. And right now, we are making a do or die judgment at that 50 ball moving average at support. Let's see what's going to happen. Let's see what else we have to look at here. Should be a chart 18 in here somewhere. There we go. Facebook. Once again, do or die. It's every chart I pulled up, I scratched my head and went, wow, another one. At that spot of me having to scratch my chin and go, something going on here? Yes, there is. We are now below the 50 ball moving average, so we know the street pays attention to that. But if you ask me on this chart, the 50 doesn't work so well. And we'll just remove that. This is the granddaddy, the 200 ball moving average. We are at it right now. We actually settled below it on Friday. And if we fall below the 200 and below this support line, once again, the theme is we're at a do or die level. Many stocks that make up the stock market, plus the indices themselves, are having grave difficulty right here. If they hold, we're saved. Hooray. If we fail, I'm showing you that next week going forward, you've got good information on what to do. If we break these spots, down we will go. If we hold these spots, nice fat rally coming next week. Generally, I'm here to tell you exactly what we're going to do next week. It's going up or down, but we're at a do or die level. I can't make that judgment call. The market has to tell me and you what's going to happen next. Then we can make the judgment call. So until the market speaks to us Sunday, Monday, Tuesday, we have to A, hope it's a bull market, it doesn't sting and goes right back up. B, be prepared in case it wants to go down, get short and ride the wave. So we're going to keep a close eye on this. And again, let me just show you where you can find me. If you want to join me, I have a free live trading room. You simply go to livewithoscar.com. If you do not have a membership, you will click register. We ask for nothing, no credit cards, no nonsense. You're going to create a username, email address, and log yourself in. You will, once you do that and you log in, you're going to click Omni Chat. You'll see it. It's very simple. You'll end up in a chat room live right here with me. Sorry for not muting my phones, kids. Did not realize that it could do not disturb. If you call me back again, I will choke you, whoever that is on the phone. So you will find me here in my live trading room. And it's really easy to get to. Now, I do hold live seminars out in Vegas for 3 people at a time. If you're really a serious trader and you'd like to qualify to sit with me in my home office for a 5-day seminar, you come to omnibootcamp.com. Just scroll on down, start your application. I will see your application, call you, and possibly qualify you for one of my seats. So that's about all I offer. Is the free trading room to you cats. Let's just keep doing analysis together. This is what I do. I live and breathe this stuff. So if you're going to hang out with me, we basically just get through the markets every day in my live trading room. So what else can we look at? We looked at Facebook. I know there was a Tesla chart that popped up earlier. I want to revisit that because it's part of our theme. Once again, we are at that do or die level. Once again, we are at that do or die level. In Tesla, another big component of the stock market, sitting here about to break an average, which it never breaks. I assure you the street's watching. I assure you the algorithms are watching. And I'll bet you Elon is too. But I use the chart to tell me what to do, not the news, not Twitter, not nonsense. I don't read the articles that people who own these companies post. I let the chart tell me what's coming next. I don't care what the CEO has to say. I don't even care what the companies make. If I can find the right formation or the right omni combination on the chart, that is the real news, not the reports being released. So what I would like to do is now open up this to questions and answers. And of course, any chart that you would like for me to analyze with you and see if it's also at that do or die spot, I'd be more than happy to spend the next 30 minutes doing that with the traders watching. Jeff, do we have any questions? I'm not following along that I can certainly answer. And then if we have some stocks or commodities we'd like to analyze, let's put me to work.
Yeah, we actually have quite a few questions. Sherry wanted to know, what is a beal and how do you get oil from it?
What is bean oil?
B-E-E-L. B-E-A-L. Oh, is it bean oil?
Well, let's go back to the chart.
All right.
Let's go take a look at that. I'm sorry about that. Bean oil.
You guys, I think she's asked that back when Oscar was talking about how soybeans and petroleum goes into everything. I think she's just talking about how soybean oil.
So let's pull that bean oil chart. Now, so this is soybean oil. They take soybeans and they do a crush. They crush the soybean. They get soy meal, soybean oil out of the crush. Soybean oil is literally used in cooking, in manufacturing, in plastics. It's used in everything. I kid you not. When I first found out about that, I was younger, 20, 21, new to trading, was trading bean oil, didn't understand it, thought it was strictly food. Did some research and realized it's in everything. I went, wow, who knew bean oil was in all this great stuff? So it is part of manufacturing as well as what we ingest. So it's food stuff and manufacturing stuff. Pretty important commodity.
Cool. Thank you for, I was curious. I hadn't seen that it was bean oil. I just saw beal oil. So I was curious too.
Oh, but it says beal, no wonder why. Now I never even bothered looking up, kids. What is beal oil anyway?
I was actually Googling, what is beal oil? And I couldn't
I
find
would
it.
have to, be honest with you. What's this guy talking about?
Okay. Let's see. Blues Boy wants to know if you have an impression on how low you think gold will go.
So, all right, let's go back to the gold chart. So, on this chart, okay, one thing has already happened. There's a flag here that took place, right? So, and you know, I'll try to be quick and just define it for you. There's like a flag. If you draw a line here, and you take another line and you draw it here, you had what I like to call an F flag, and this is hold on, let me just loosen up that line so I can draw it for you. All right, so this is what I like to call some sort of an F flag. Right? It's when the market should put in a bear flag, but it puts in something wrong. A bear flag jets up towards the upside, then cracks again. This one is a flag pole with a flag, but it goes down instead of up. And let me just get the average out of the way. And we'll put that line back for you so you can see it. So it's sort of a flag. Instead of moving up like your average traditional bear flag would look more like this. Right? Just a quick illustration. So a bear flag kind of looks more like that formation. Well, this is not a bear flag, right? It's got the bear flag pole, but then it goes wrong. That I have dubbed an F flag. This is my F flag. And an F flag doesn't give you an exact projection. What it tells you is you'll be in that F flag for quite some time. Then when it breaks, it will become brutal. But here's what I think you can do. You can just do a simple measurement of the height of this channel and expect gold, if it breaks this channel, to maybe break that far. And that would bring you all the way down to somewhere around the 1540, 1550. It could work its way down that low if it wants to create a new channel below this channel. Where I think gold could get to overall, you know, gold's having a little bit of trouble here, kids. I'd say, look back here. If you have gold below this blue line, you're going to get a big drop from it. And as you can see back here, it's exactly what sort of happened last time gold got below that sort of shelf. So below 1700, gold seems to get ugly. You're at 1728 now. I would think you can break the 1728 level and end up in the 1600s very easily. I haven't given exact projection in gold yet, and the reason why is because we're at the do or die level. If we break that level, I will give an exact projection of where I think gold will go. I'm not someone that tells a market where it has to go. I wait for it to go there, and then I tell you what it's telling us. Gold hasn't gone there yet. It's sitting at the do or die level. But that calculation I showed you, just using simple analysis off of the channel, you should double the size of the channel and break down that far. That's simple analysis. For me to come up with an omni projection, in 2 days, if we're below that red line, I'll come up with an omni projection for you. And simply come to my website in my live room, and I will give you that gold projection. I don't want to overstate myself. I want to see gold make its move first, and then we'll figure it out.
John wants to know if you'd be willing to look at silver for him.
Sure. Let's just pull it up. May, I guess, is the most active now, right? But March will have a better chart. So we'll go with March, even though May is most active. And it's not showing up here. Let me try it through the Power Console. And let's drop a template on there. So this crazy 50-ball moving average theme that it seems to be in so many of the stocks that we've looked at today, so many more that I looked at before the ones I showed you in this webinar, we're still playing with this 50-ball moving average. You see that? Silver's there now. The black one is the 50. Silver seems to either respect it or break under it. It's one or the other with silver. You're either under it or above it. You see that? Doesn't usually ride through it much. So once again, that theme that I keep telling you. It's almost everything we're going to look at today, no matter what you guys ask me to pull up, you will find out we're in some weird do or die level. So that's why I made that my theme. It's what's happening here. This is do or die.
We were seeing that last night. Yeah.
Yeah, absolutely.
Sal wants you to look at Apple when you have a chance.
Apple? I think we had that up already. Let's pull that chart. Let me just label this as silver. There's more on the silver chart, though, we could do, but maybe
you feel free.
There's so much more. Anytime you look at a chart, there's just so much on it. It's insane. But that's okay. We'll move. What are we going back to Apple?
I don't mean to push you somewhere.
This is what I do, my friend. This isn't work. This is oxygen for me. All right. So we're back at Apple. What was your question? Someone had a question on Apple? I'm drinking out of one of Dano's theme cups. Thank you, Dano. I'm muted.
No, I was. It might have been a question from before you actually looked at Apple too. Did you look at AMD?
Which one?
AMD.
Sure. Most likely. There we go. Ooh, that's interesting. So that one broke the 50 a long time ago, heading towards that 200. Let's see if it's got any major trend lines that it's breaking, because that's what I've noticed. There's some weird theme of major trend lines being broken everywhere lately. Boy, oh boy, same thing's starting to happen here, huh? Let's see what kind of a trend line that is. I'm just defining what I'm looking at. All right, so we certainly had a very nice channel moving up for quite some time. But as you might notice, you can easily see that it's starting to bend, right? Because look up here. It's not the same sort of channel building anymore. Now it's starting to bend the other way. And you did drop below that 50-ball moving average, and I assure you, algorithm started ringing like crazy when you did that. So once again, remember when I mentioned almost any stock you bring up, we're going to be at a do or die level? Once again, you see that we're at a spot where it's got to hold right here. Not holding here, first we'll bring you to the 200-ball moving average, and if you break that, obviously disaster comes, because we don't usually break the 200-ball moving average in AMD. So for some reason, we are at a spot where it's sort of like we're at a race, and there's the guy with the gun, and he's about to pull the trigger, but we don't know if they're going to run up or down right here. We're at that do or die spot in many of our markets. AMD just being another. You have another market we can look at, another stock?
Yeah, here's one. I don't think it'll be at a do or die. Let's
good.
Let's see. Where did it go? NCLH, I think .K for that one. Norwegian Cruise Line. And that comes from...
that's probably straight up, huh? Well, let's
Emmanuel.
Let's put a template on there. It certainly looks better than the other stuff we've been looking at, huh? Undoubtedly. This almost looks opposite of everything else we've been looking at. So, simply we just define what it is. Is it bullish or bearish? And right off the bat, lines going up, not down, right? That should make us happy. That looks more bullish than bearish. And we'll drop this up there. So we're moving up. We are above this infamous 200-ball moving average. And look what happened when you had the death cross last time. Yo, that got ugly, huh? So now we're back. You had the opposite. You had the golden cross take place here, right? So death cross, boom, golden cross, rally ensuing. And of course, if you zoom in on it a little more, the rally's getting even smarter. So I like this. I think you can buy the dips in this Norwegian cruise line, but sort of makes sense fundamentally that cruise lines are starting to pick up because COVID's starting to go away. So, I like what I see here. If we were going to look for a trade, then you'd really look at, are the channels steepening even more? And sure they are, right? And steepening even more than that, because now you can take the bottom of this and go, wow, this channel is getting nice and steep towards the upside. So simple kindergarten pre-K analysis shows us that this is more of a buy of dips than anything else we've looked at so far today. I wouldn't mind at all buying the dips in this stock if I had to find the stock to buy. Now, it doesn't look like it moves all that much, and I don't generally trade a stock that doesn't move at least $10 a day in movement on average, but that's got nice structure to it from what I can see. I like the stock. Buy dips.
All right. Slick Pete wants you to look at one Nancy Pelosi's buying.
Aha.
AB. Alliance Bernstein.
Uh-huh. Well, if she's buying it, you know there's inside info. You might as well just buy it. Don't ask me. Is it AB.O?
Let's see. I don't.
No, AB didn't bring it up.
Click on starts with up there. See where it says contain starts with or ends with. Starts
Got
with
it.
will help, and then yeah, just AB, the very top one.
Beautiful. Oh wow, Nancy, what do you know?
Yeah.
This probably has something to do with a hair cutting joint. All right. Dawn, look at that. See, remember what I was telling you? You know, they make it seem tricky. It's such simple stuff that Wall Street uses. I don't know how it could be so simplistic. You see that 50-ball moving average? I mean, is that not just trade after trade after trade when you hit that? If you get below, it stays below. If you get above, it stays above. So you see that they do work on this average like crazy and the 200, which is why you'll see them on all my charts. But analyzing this, you've got almost the opposite going on, right? There's no do or die juncture happening here. Go, Nancy, nice call. Well, maybe there is. Maybe there is one. I didn't see that trend line until we put it in. So, all right, let's look at this like everything else. That's interesting. That's a bear flag. I'll show you what that looks like. And you're sitting up right at the 50-ball moving average and a trend line. So, yeah, once again, this fits in that do or die scenario. So I would think this is an unorthodox, but still some sort of a flag type thing happening right here. And you got the 50-ball moving average, and you've got the major trend line. This is AB, huh? The first time I'm going to root for a stock to go down. I'm not very fond of that woman. But she's probably short anyway. Don't you worry about it. She's got this all locked up. And sort of a weird M formation up here, too. Up, down, or let's get rid of this flag. I'll show you what I mean by that. I can't see what you're writing in the room, buddy. It's like too many windows behind me. So, yeah, it doesn't look as pretty as it did if it breaks this spot. I'll tell you right now, I like that stock all the way up until I drew that trend line. If you break this spot, I don't like that at all. So for now, we'll say looks great, looks fantastic at the do or die spot. If it breaks that do or die spot, we may have an issue here, especially that the 50-ball moving average will set off alarms when it gets there. But what I was talking about, this little M formation, is you had, and nothing's ever perfect in trading, but you had up, down, up, down. And a lot of times that M formation it'll start like a new move in another direction. See what I mean? You had that happen as well. So do or die, once again, AB, we can put in the do or die list. I didn't expect that to happen. And
I wonder what
I see
contract
for you
is.
right now.
It's probably about to get a government contract. So
You got that right. Are you kidding me? She already voted on that. We just didn't hear about it.
Mike would like to look at Roku, which is, I think, Roku.o. Let's make sure it's right before you hit enter, though. ROKU.
ROKU.O.
Mm-hmm.
That's it?
Yep. Mm-hmm.
I've already been all over this one, obviously. Back here, I must have been going crazy on it. Let's see. So looking at I'm just immediately trying to make my eyes find trend lines. Broken. Let's see how much of a parallel that was. So you broke out of that weird bear flag look. Let's in fact see what the template looks like. My template. Let's see what that looks like. So same sort of thing. What is all this crazy do or die stuff going on here? You see we're at that same spot with this 50 bar. I assure you the street's paying attention to this right now. They don't need my video to see this. But that, another issue. And then, of course, that trend line that we looked at before, if we just go from here to here and extend it forward, has been broken. Broke the 50 ball moving average. I think you're in the same sort of area. Bear flag look to it. Another stock that absolutely will have to make up its mind this week. So I think we have a lot of action for us. This week, we're going to see a lot of green lights or red lights telling us whether we should be on the short side or the long side. Doing the type of analysis I'm doing here, as I mentioned, this is kindergarten. You know, I mean, I could do this with my eyes closed. I would take this, put it into my Omni laboratory and see exactly what comes up out of that. But you can see that this looks slightly top heavy, and I'll show you why. Let's see if we can cut that away and use another circle. So right here, you had this flat top that took place, right? Boom, right in here, flat top. Flat tops produce market drops. Market did drop. And now if it spends some time here, putting in bar after bar, and doesn't drop right away, you will have another one of those head and shoulders building. So that could be the fate of what's happening here, because a lot of markets have this same look to them right now. Interest rates moving higher would certainly make the markets have to readjust. And I think that's what we're seeing. We're literally just seeing a readjustment that has to take place because interest rates moved up. I don't think the top of the market's in yet by any means, but a readjustment, I think what we just looked at together, I just illustrated a readjustment to us before our eyes, whether we know it or not. Almost everything is telling us something's about to happen. Now, that doesn't mean it's going to crack, right? That doesn't mean the street won't come in and buy this right up to new highs, but we are at a quagmire in the market, if you will, according to my analysis.
Jeff wants to know if these are dies, are you shorting?
I personally don't like to short single stock. I don't like to trade single stocks. I like S&P because it's 500 stocks, NASDAQ, Russell, and here's why. You know, I'm not really particularly good friends with the owner of Roku, but what if he decides that he's going to stop his car on the Verrazano Bridge on the way to work Monday and jump off? Do I need to be in his stock? I don't care about his company. What I care about is the index, because you could take 30 people in the morning, have them all follow each other off that bridge, like follow the leader, and S&P will still go the way it was supposed to go. So I don't like to trade single stocks. I'll analyze them, right? I've got no problem with that. I'll show them to people. Why not trade the S&P if you think all the stocks are about to crack? So I prefer the S&P or NASDAQ or Russell over any single stock. I don't like to marry the CEO of a company.
John wants to know, how do you think the market will react if a 1.9 trillion stimulus package passes?
I have to say what I think is, first, of course, the quick elation, and then second is, what now? Because can we do that? Can we continue to do this again and print even more money? You know, the street and DC, I think before 2021 is over, is going to start to address the deficit. And if not, I mean, what happens to us, right? Eventually, the Republicans will have to address the Democrats, the money being spent, because the Democrats are in the driver's seat, so it's always the other side that addresses the bad stuff, right? So you'd have to think maybe this time around the Republicans show up and say, wait, we cannot continue doing this. Just speaking of that alone would make the market start to go down. So I think that this is the final hurrah. What more can they do after this without it creating more of that inflation I just showed you? See, we're at that. The question you asked helps to put into light that we are at that spot of dollar printing equilibrium. It's starting to create wrinkles everywhere now. So we got to stop printing. We've got enough in the system. I think if they stop printing dollars, everything can ride right back up again, and commodities would come back down. So again, I'm not saying the market has been broken. They haven't overprinted. They haven't ruined anything. We're reaching equilibrium. Maybe another few 100 billion printed, but it's time to slow it down. Because as you can see, it's starting to weigh on the stock market. It's starting to weigh on the commodities markets, which is why it's weighing on the stock market. Because if the commodities get more expensive, as I explained, the companies who create those commodities or turn them into products either lose money on the product, lose less profit, make less profit, I should say, or have to lower the price. Or worse, raise the price, hence inflation. So it's not, we're reaching dollar equilibrium. It's showing up everywhere, which is why I think we have this whole do or die scenario taking place.
All right. A couple comments for you.
Okay.
Waleed wants to say, I must say this was a very informative presentation. Just shows you what you get when a market veteran with great experience in the markets shares his thoughts. Thank you, Oscar, for this eye-opening presentations.
My pleasure, and thank you. And I kid you not, this is my 101 analysis, I promise you. If you're dazzled by it, hang out with me and see what I'm capable of. You have no idea. This is literally me kidding around.
Mike says, amazing performance. Maverick says, Oscar has, it just went away. Oscar has strong presentation skills, very interesting to listen to, and presents information in a very clear, logical, and common sense way. Excellent and informative presentation. So maybe if we're impressed, which I'm always impressed with kind of the work you do when you do stuff with us, but maybe I should go up to livewithoscar.com and sign up for a free membership.
If you did that, Jeff, you'd end up in a trading room with me right here. I'd have my camera on and my microphone, just like we do here, but I light up my trading room with that. And you know what this trading room is for? It's not to sell you guys anything. I spent my entire life on the exchange where, there's thousands of guys around, girls. We hang out and have fun. We talk. We read the papers. When it's busy, we work. When it's slow, you put kick me signs on each other's backs. You throw $100 bill on a fishing string and yank it when someone picks it up, right? Fun stuff. And then when it's busy, we go to work. Well, they handed us computers in 2007 and said, Oscar, do this by yourself. I don't like doing this alone. This room is my trading pit. It costs you nothing to be here. Hang out with me and we'll see what happens together, okay? My promise to you. Just show up.
All right. And I want to apologize for everybody. There's like tons of questions for symbols and that kind of stuff. I just don't think we have time for it.
No, I'm sorry. There's a presenter after me, so I have to be chased away.
Yeah. Do you still, real quickly though, Mike wants to know if you still see oil rising.
So looking at this oil chart, well, if they keep printing
Go ahead and
dollars,
look at it. Yeah.
it will happen inherently. But looking at the oil chart, which should be in our list here somewhere. Yes, I do think oil can rise further. I think you'll probably hit staying inside this channel, you'll hit the 65, 69, 71 area while you rotate inside of this channel. Now, nothing goes straight up, as you can see with crude, neither does it. So rotating inside the channel is what I'm talking about. Maybe it rotates back down, back up. So from here, maybe you rotate down a little, but I think we will go higher. And of course, fundamentally, we're closing down pipelines and stuff like that, and printing dollars couldn't possibly make the price of crude go down. So technically and fundamentally, I'd have to say, yes, you are buying dips in crude until further notice.
James wants to know what are the rooms your trading room is open?
So because the markets stay open 24 hours a day, with the exception of Sunday, my room is open 24 hours a day, even on Sunday. Because Sundays I sit and study the entire day from sun up till sundown. So the room's always open. It's my home. Just come join me in my home.
RL wants to know what the difference between your free and paid services are.
So free service is my videos, my trading room, sharing my knowledge. Paid service, there's only two. When the Omni, Oscar's market navigational indicator, which we haven't even looked at here, when the Omni gives us a trading signal, I send those signals out to certain people. It's called the Platinum members. We charge, it's $4, $5 a day, $4 a day for our Platinum membership. And literally when the Omni puts out signals, you find out about it. I send you a text, an email, a pop-up window. I mentioned it in the trading room, and I'm sitting here live on camera and microphone, or at least live in the trading room. So I encompass you with everything you could possibly want. That's the Platinum service. And then the only other service that I offer that I actually charge for is a seminar out here in Las Vegas. That is a 5-night, 4-day extravaganza. You will literally be in my home office for 4 days, and I only accept 3 people at a time. And That seminar, I will teach you exactly how the Omni comes up with the trades. There's no upsell. There's one seminar, and that is it. You will learn the entire Omni system at that seminar. I have one coming up April 29th. I've only approved one student so far. I've got 2 more students I'd like to approve. I generally accept applications, and when all of them come in, I plow through them. I throw most of them in the garbage, and if they're answered correctly, I'll call back a couple of you guys or ladies, of course, and we will have 3 attend my camp. You can go to omnibootcamp.com and fill out an application there, or at livewithoscar.com. There's always an OmniCamp application. You can always click it and just fill it out. As soon as you're logged in, it would show up for you. It's a banner across the top, and you can fill out an Omni application there. But those are the only 2 services I actually charge. For everything else, because I do this every day of my life, I offer it to everybody to hang out with me and just get through these markets together.
Emmanuel wants to know if you give out free alcohol. I don't know about that, but I can say that the food is amazing.
We actually, if you drink, there's a rumor that there's alcohol here in Vegas during the Omni camps. But if you don't drink, there's no alcohol here during Omni camp. So traders at night, we have 12-hour sessions. Our days are 12-hour sessions. They go home so tired they don't want to do anything but sleep and come back the next day.
All right. And if somebody wants to get in touch with you, is there a recommended way?
Absolutely. So again, through the website, livewithoscar.com, I can simply, I think I can just write in here. Let me just give you something very quick. I'll type it in, which will help you find me if you need me. So it's livewithoscar.com. That's where you'll normally find me all the time. You can email me if you'd like to send email. Oh, that didn't just drop out, huh? Let me do that again. You can email me. Let's give you a better one, futures analyst. If you email me, you'll get an answer. If you come to Live with Oscar, you'll actually see me live in a trading room. You can go to my YouTube spot. Here's what I have to say. If you can't find me, you're not looking. I'm always on camera and microphone.
I would like, make sure you look up his YouTube channel too. It's really entertaining.
I can give you that as well if you want, just to put it in. So it's YouTube.com/futures analyst. And we put out videos almost every night. And in those videos, it's basically the theme of what I expect to happen the very next day. So everything we talk about is stuff for the next day.
All right. Very good. Oscar, great job. Thank you.
Appreciate so much for tuning in, everyone. Thank you for the opportunity to present. I hope this helps you for trading next week.
All right. Thank you very much, Oscar. Much appreciated.
My pleasure.
Okay. So let's go ahead and do that. We go ahead and reclaim the presentation real quick here. All right. Yeah, he does such a great job. So we love having Oscar in, and he's always welcome. We bring him in as often as he'll agree to it. So in any case, I do want to talk a little bit about the summit specials today. Today we do have some great specials for those of you that have. Oh, wow. This is a full screen image of me. Today we have some great specials for people that are available. You can get the Steve Bigalow CPS, the Vince Vora, 3 months of that, permanent subscription to Victory Method, the Barry Burns Top Dog Toolkit, subscription to LearnMetastock.com is our next presenter today for 3 months. You can get Unleash the Power of Metastock, 2 years of Stocks and Commodities magazine, access to our white glove installation service, and our exceptional and good support team. Normally, all of this would be $3,739. As part of the bundle package we've put together today, we've dropped the price by more than half, $1,645 today. Most of it's included and backed by our money-back guarantee. Everything but the subscription-based components of this is. You can give us a call, 800-882-3040. You can chat online with us at metastock.com/sales chat. We'll be happy to help you. Or you can order it online at metastock.com/sales Summit deal. I'd encourage you to try it out. I hope you've been able to see some of the things Metastock can do that's helpful. Some of the reasons it's been rated #1 in its price category for the last 27 years in a row. It's a great software program. Give it a try. We look forward to helping you. 800-882-3040. Okay. And then moving on, thank you to Stocks and Commodities for sponsoring today's event. We appreciate the sponsorship that they do. They've been sponsoring it for 8 years now, as long as we've been running it. And they have 1.3 million subscribers, great articles delivered every month. If you don't do the bundle package and you just want to get a free issue, go to metastock.com/traders-summit, fill out the registration form and click the box that says, I want a free issue. And they'll send it out to you and you'll get added. You'll be basically sent to it for free. While you're there, you can get great training from most of the presenters today. You can get access to Oscar's room for a couple weeks. You can get access to Steve Bigelow's room for a couple weeks. It's a great thing. We've provided a lot of really good freebies, and you just have to go sign up for them to get them. If you're watching on YouTube, make sure you do this within the next either today or tomorrow. By Monday, we'll have a different registration form up, and I'll have already submitted all of the spreadsheets to the company so that they can get those out. So if you're watching on YouTube today or tomorrow, make sure to do that, and that way we can get you the free issue.
Hey, Jeff.
Go ahead.
Yeah, so RL has an interesting question. He wants to know if he can get anything special for being here all day.
I would love to give RL. I'm curious, how many people have been here all day? Go ahead and type that in. I know YouTube's maybe a little bit delayed. We have all kinds of bonus offers available. Just go to metastock.com/traders-summit and sign up for anything that you want to. And I hope you've enjoyed it. I hope it's been worthwhile for you. I think it's been great. I've been very, very happy with this one.
Awesome. You've been doing great. And I can't wait to hear from Kevin.
Yeah,
also,
let's go ahead and get to that.
They have our undying appreciation for being here all day.
Yeah, absolutely. I hope it's been worthwhile for you. Mike says he has. Emmanuel says he has. Julia says she has. Kenneth says, I have been here all day, and he did it in all caps. So Sheldon's been here all day. Topher's been here all day. So is William. Okay, all right. Time to get moving. The next presenter is the only presenter today who's actually hired me for a job. Kevin Nelson used to be the sales manager here at Metastock.com. For better or for worse, he hired me into this company 2.5 decades ago. Right now, he runs a company called LearnMetastock.com. It's a fantastic service. We've been kind of helping him promote it for a number of years. And, one of the things I talked about during my presentation is how good of a product Metastock is. And if you knew how to use the different tools, it was helpful. Kevin does a great job of actually providing lots and lots of really good videos on how to do that. Today, he's actually going to talk about finding breakouts. So it's going to be a great presentation. Let's go ahead and bring you in here. Kevin, how are you doing today?
Great. Thanks, Jeff. Appreciate
All
it.
Right.
That's a tough act to following Oscar like that.
Yeah, Oscar does great, but I'm sure you'll do good too.
Well, thank you. Okay.
All right. I do have the screen share over there for you. I can see your screen. I can hear you.
Perfect.
And we're ready to go.
All right. Thanks again, Jeff. Appreciate it. Basically, my history here with Metastock is I originally started with the company back in 1993, and I worked for him for a number of years. And as Jeff pointed out, I did hire him, and it was definitely a good hire, to say the least. But in 2008, I left the company to start another company to actually create just provide training for the Metastock customers. I saw that there's a pretty big niche for that. And from 2008 until current day, we've been offering unlimited training here for anybody who's interested in. Now, we help with the learning Metastock in a number of different ways, but if you go up to the Learn Metastock website, there's quite a bit of information about there. And I'll show you more about that at the end of today's presentation. But I want to just go ahead and jump straight into our presentation at this point. So my game plan today is I'd like to be talking about trend lines. And I'd like to show you how we can use trend lines and how to actually scan for breakouts using trend lines. And where this whole presentation actually came from, like all my presentations do, are suggestions from my different customers. And this particular one, the customer is interested in taking a look at trend lines and drawing them on his chart and seeing if there's any way that he could possibly use it. So that's what we're going to do here today. So my game plan here for you is, first of all, I'm going to show you the different tools that you have available. And as most people already know, like what Oscar was showing in the previous presentation, you can grab a trend line tool and you can draw it all over your chart. And that's very helpful, obviously, to say the least. And that's the way a lot of people trade. But in addition to that, there's a lot of other tools here that might be of help to you. And I'm going to show you how those work. And of course, I'm going to show you how to interpret them there as well. Once we actually show you these different tools that you have available, these are indicators that are inside the program. And the nice thing about that is once you learn how to access these different indicators, we can use them in a lot of different ways. And one thing that we can do is we can do explorations or scans looking for breakouts and what the prices are doing in relation to these trend lines. I'll show you how that works. And we can even take it one step further, and we can even back test trading strategies based on these trend lines here as well. So let's go ahead and jump over to the program now. And to get started, I'm just going to open up a chart here. We're going to open up a chart here, the Qs, and the symbol is just QQQ.O. And we'll start from here. All right. Now, the trend line tool that you have, everyone has available over here on the left-hand side is this diagonal tool. And the way that this works, of course, you just hold down your left mouse button, you drag it anywhere on your chart. And what's nice about that is it's really easy to work with. The problem with that is that there's not a lot you can do with it once you actually draw the trend line. And that's, again, where this class kind of came from, is that, oops, somebody's got their microphone on. But anyway, with these trend lines here, again, like I say, they're just static items that we have here on our chart. So again, great visual representation, but not a lot that we can do as far as like scanning or testing and so forth. So let me show you what else we have available here for you. And by the way, I understand that there's a lot of people here in the room that don't have Metastock. So I'll try to explain things as we go, and hopefully it's not too overwhelming. But as always, if you have any questions, make sure and send us questions. I'd be more than happy to help answer questions as we're going through this as well. So anyway, now this is our indicator quick list up here at the very top. And if you scroll down this list here, you'll notice that there's a couple indicators inside this list. One is called a linear regression indicator. Another one is called a linear regression slope. And these are two items that we're going to talk about here in just a minute. So the first thing I want to do is I just want to use, or basically use the trendline tool, which is the linear regression trendline tool. Now, to plot this or use this tool, we can do it a couple different ways. One way is this icon right over here on the left-hand side. You've got these little left and right arrows, and if you click on these arrows, and you can cycle through the different indicators that you have available here. But the one I'm interested in is this one right here. If you hover over it, it'll just say linear regression. And again, it works just like the other trendline tool, that if you hold down your left mouse button and you drag it from one spot to the next, it'll draw on that particular point. Now I'm going to zoom in here just a little bit here. I'm going to go back here just a little bit there. And let's go here to this area here. Now this trendline tool, what's interesting about this trendline tool, this again is called the linear regression trend line. And this is this trend line is actually automatically calculated for you. And the way that you can work with it, again, is you pick a starting point and an ending point. And then once you've done that, once you drag this around, you'll see that it'll actually adjust, for example, based on the prices. Now, this particular one, if you put your cursor directly over that line, you'll see that this one is actually, the periods on this one is taking a look at 38 periods. So that's a pretty long trend line in this example. So I'm going to drag this back here a little bit, and I'm going to adjust it back here to about 14 periods. So I'm going to go one more or two more bars there. There we go. Okay, so now this trend line tool is now covering 14 periods, as you can see here in the periods drop down there. So now if I drag this around, you'll see it's quite a bit more responsive now as I'm dragging it around to identify these upward and downward moves. So this indicator here, again, like I say, is again, it's automatically calculated. And since it's automatically calculated and available for you in the indicator quick list, we can now use this in a lot of different ways. Now, another thing I just want to point out real quick here is that with this trend line tool, for example, you'll see that what it did is kind of drawn right through the middle of the prices right here. And that might not be exactly how you draw a trend line, for example. You might draw a trend line, for example, like right over the top of the bars, for example, in the downward move. And what you're possibly interested in is looking for the prices to break above that trend line, for example. Now, this one you'll see actually drew it right through the middle of the prices. You can adjust this, by the way, and the way that you can do that is that if you hover directly over that line and then double click, for example, it'll open up the properties for that trend line tool. So now if I go to the parameters tab here, you'll see that this is the date range that I currently have it drawn on, and the price field is currently being calculated on is the closing price. If, for example, you want to adjust it, you can adjust it, for example, let's say that we want to base it off the high of the price bar. We can adjust it there and click on apply. And now you'll see the prices or the trend line is now drawn pretty much along the top of those price bars. Okay. And of course, vice versa, in an upward move, you might be interested, in adjusting it, for example, to the low of the price bars. Okay. But for this example, what I'm going to do today is I'm just going to use the closing price because I just want to show you the concept, but you can adjust it depending if you don't like the way it's actually drawn there as well. Okay, so again, this is called the linear regression trend line tool. And again, I grabbed it from over here on the left-hand side. Now you can also plot it as well if you go up here to the insert menu and you can choose the linear regression tool from this dialog here as well. So either way. Now I'm going to go back here to the indicator quick list here. And I'm going to scroll down our list of indicators. And the one that I'm looking for, again, are these two different linear regression tools here that we have available. The first one I'm going to work with here is called this linear regression indicator. And what I'm going to do is I'm going to drag this directly on top of the price bars here. And we're going to plot it. And what this is going to do, it's going to come up with the default values of 14 and then the price field based off the closing price. Now, I'm going to go ahead and leave this because this is the default here, and I'm going to click on OK. And this, of course, will plot that indicator directly on our price bars. Now, what I want you to take or pay attention to is that when I drag this trend line tool around, take note of where that trend line intersects that red line. So, for example, no matter where I drag this trend line tool, you'll see the very ending point of that trend line is going to intersect again that red line. And this is actually kind of an important point here. What this is telling me, once I understand what this indicator is, this again is just showing me the ending value of that line. And once I understand that, now what I can do is I can go out and I can have the program look for different types of situations. I can look to see if the closing price, for example, is above the trend line or if it's possibly below the trend line. All I really have to do is look at the value of this indicator and I know exactly what the ending point of that trend line is going to be at that point. So for example, I'll go ahead and drag it backward in time here. And there you can see, for example, the prices are clearly below the end of that trend line there. And then of course, vice versa, if I drag it over here, prices are clearly above it there as well. All right. So this again is called the linear regression indicator. All right. So now the next thing I want to plot here is this next linear regression tool, and it is called the linear regression slope. And in this case, what I'm going to do is I'm going to drag this one up here to the very top of our window here. And we're going to plot this as a separate indicator. And again, you'll see the default is just 14 and it's based off the closing price. So again, we're just going to work with the defaults here to, hopefully keep it pretty standard. All right, so now we've got a pretty weird looking indicator kind of up here at the very top here. And this indicator though actually can tell you a lot of information. For example, if this line is moving upward like this, I know that the linear regression trend line tool at these different points is becoming more and more positive during this upward move. And vice versa, if this line is moving down like this, I know that this trend line is becoming more and more bearish, or basically pointing down more and more as it travels down this line. Now, the other thing that's actually really important here too is the value of where it changes from positive to negative. So you'll see that we've got a 0 point over here on the right hand side. So what I'm going to do is I'm going to add a 0 line here to this indicator. And the way that you do that, if you double click directly on that indicator itself, you can see that, again, we're back into this properties dialog here. I can click on this horizontal lines tab here, and then I can put in whatever type of horizontal line I want. So in this case, I'm going to put in a value of 0, and I'm going to click on the add button, and then I'm going to go ahead and leave the color blue, the weight a little bit heavier. That's fine. We'll click on OK, and that'll put in a horizontal line here at a value of 0. Now, why this is so important again is that I know now that when this red line is below the blue line, I know that this trend line tool, for example, is actually pointing downward. Okay. Whenever this red line is above the blue line, I know that this trend line is pointing upward. And again, that's really important. Now, what's the way that I can use this now is a lot of different ways. And another thing that I can determine very quickly by looking at this indicator here is I can tell exactly where it goes from a positive trend to a negative trend. And again, in this case, for example, when it goes from a negative trend to a positive trend. So let me go ahead and drag this over here just a little bit here. And I'm going to drag it over to, let's see, what is this date right here? You'll see it says a value of September 8th. Okay. And so where are we right there? Is that September 8th or September 3rd? Oh yeah, that is September 8th. So let me go one more bar here. There we go. How's that? That's the 4th. Where am I at here? Okay. Yep. Oop, there we go. There we go. Okay, I think I got it now. All right, so now the ending point of our trend line tool here, you'll see it has an ending point on September 8th. And you'll see again, of course, it's showing us a value, then it's number of periods of 14, and it's showing us a slope of 0.49 or a positive 0.49. And now if I drag this just one more bar forward, if I can just do that, now what'll happen here, again, if I put my cursor there, now you'll see the slope is changed to a negative 0.14. So in other words, at this point right here, I can tell exactly that my trend line was positive before that point, and at that point it went negative. So again, that's again something else that I can use in a lot of different ways. So the next thing I can do too is looking at this shape of this line here. And again, I know that if it's above 0, that this trend line is going to be pointing upward for sure. But what happens here is that when this thing goes up to the top and starts to move down, that means my trend line, for example, is getting steeper and steeper all the way up until that point. But then what happens, it starts to lose it a little bit, and it's actually starting to point down here at this point. And then finally, it'll cross to the negative point at here. Now, what's nice about this is once I understand how this works, now I can use this in a lot of different types of situations. So one thing that I created here for the subscribers of Learn Metastock here is I've created a lot of different tools. And once you become a member, you can download these tools as just part of your subscription. So the first thing I'm going to do here to show you one of the tools that I created here is I'm just going to reset this window here just a little bit. I'm going to leave the slope indicator up here at the very top, and I'll leave the prices here with this indicator plotted. And then at the very end, I just drag the trend line tool all the way into the end of the prices there. Now, the reason why I want to do this is because I'm going to set this up as what we call a default template. And the reason why I'm going to do this is because now I'm going to go out and I'm going to show you how to scan for different types of situations. And I want to look at the charts as they come up, and I want all of my charts to look exactly the same way. So the way that you do that in the Metastock program is, again, you create what's called a default template. And by creating this default template, all your charts will look the same from that point forward. So how you do that is once you have a screen set up the way that you want it, you just right-click anywhere inside the screen, and then you choose a Save as Default Template about halfway down. It'll ask if you want to replace your existing one. We'll say yes. And then close down your chart. And then the second step to that is you have to go up to the file and you have to delete Smart Charts. And And by doing this, basically what you're doing at this point is you're kind of wiping out Metastock short-term memory. So now every time I open up a security, whether I've looked at it before or not, they'll all look exactly the same way. So again, I know a lot of people here, haven't used Metastock, and haven't heard of, for example, like smart charts and things like that. But that, of course, is a lot of stuff that we do go through in quite a bit of detail in our training. But anyway, so what I want to do at this point is I'm going to open up the Explorer. So I'm going to click on the pair of binoculars up here at the very top. And once you go to the Learn Metastock website and you download any formulas from the site, where you'll find your formulas once they're installed is they'll all begin with LMS at the beginning of it for Learn Metastock. So this particular exploration that I created is called the Linear Regression Exploration. So I'm going to go ahead and open it up. And in this exploration, what this is going to do, or what the Explorer does for you, is it allows you to go out and search or scan databases looking for technical setups. And these technical setups can be just about anything that you can imagine. So the Explorer, in my opinion, is probably my favorite tool inside the program, just because of the versatility of this particular power tool. But anyway, in this particular exploration here, you'll see that I've got the different columns here, columns A through I here, and I've got explanations of what each one will do for you. So when we run the scan, the first column, or column A, for example, is going to return back the day of the month. Now, you might be asking, well, if I run a scan, why do I want this thing to come back and tell me the day of the month? And the answer is because when you run these different scans or explorations, it's really easy to run a scan and not be looking at the type of data that you originally intended or wanted. So in other words, what this is just a real quick check to make sure that your data is accurate. And as you might imagine, if your data is not accurate, then everything else is fruitless, right? So in this case here, you'll see the first column is going to return back the day of the month. Column B and column C are going to identify if the trend line slope is either positive or negative. Column D and E are going to return back whether the slope just became positive or just became negative. Column F and G is going to identify if the closing price is either above or below the trend line. And then column H and I are going to identify if the closing price just crossed up above the trend line or crossed down below the trend line. Okay, so let's go ahead and run a scan, and let me show you how this works. So we'll click on OK. And to run a scan, what you do is you select the exploration that you want to run to begin with. Step 2 is down here at the bottom, you choose the database that you want to run on. So in this case, for example, I'm going to go ahead and I'm going to go ahead and scroll down. I've got a database set up of the NASDAQ 100, for example, and you'll see there's actually 102 securities in there, but I'll talk about that here in just a second. But over here on the right-hand side, I'll tell it to scan on the last 1,250 records. So on end-of-day data, that's approximately about 5 years of time. And I'll tell it to scan through the current exchange date and time, or the most recent data that it can get. And then I'll go ahead and just click on my Start Exploration. All right. So this, again, like I say, what this is going to do now, it's going to look for my linear regression tools based on the NASDAQ 100 securities. Now, the first time you run the exploration, it typically takes a little bit longer for it to actually kind of get going, but once it starts, it actually goes through pretty quickly. All right. Now, the other point I want to bring up just real quick as well is that I ran this on the NASDAQ 100, and your question might be, well, why are there 102 securities inside this folder? Well, the answer is because there are some securities that have more than one class of security. So, for example, like Google's a good example. Alphabet, they have a Class A and a Class C of the same security. So that's basically what happens. Is that, again, if there's more than one class of security, they'll list them both. So you'll see the same thing, for example, when you open up like the S&P 500. I think there's like 505 securities in the S&P 500, for example. So anyway, all right. So now once our scan has basically run through, you'll see that our securities are listed over here alphabetically. The next column here is that day of month. And this is what I'm looking for. If you can click on these column headings, you can sort on the data here. But what I want to make sure is quick heads up is that if any of them have anything other than the 26, I know that I've got a problem there. So this is again through yesterday's close. The next column of data is the slope positive and the slope negative. Now, the way that the this particular formulas and so forth were written for the exploration is that you'll see that all the fields here will either have a 0 or a 1 in it. And what that means is that when you ask the program or the explorer a yes or no type of question, if the answer to your question is yes or true, it comes back with a value of 1. And if the answer to your question is no or false, it comes back with a value of 0. So very quickly, if I click on the positive slope, for example, I can then grab all the securities, for example, that have a positive slope that'll have a 1 in that column. And then vice versa, for example, let's go ahead and grab one. I'll grab analog devices there. And then I'm going to click on the negative slope here. And then we'll grab Activision Blizzard, it looks like. So I'll go ahead and highlight those two. And we'll click on the Open Chart button over here on the right-hand side. And then we'll go ahead and close and minimize this dialog. All right. So for our first security here, here's analog devices here. And you'll see that, for example, again, if I highlight or basically just hover over that trend line tool, you'll see that it has a positive slope of 0.24. So in other words, the slope for the last 14 days using that regression tool is basically still pointing upward at that point. All right. So let's go to the other security in Activision. In Activision, as you can see, very clearly has a pretty big negative slope at this point there. All right. So that's what that first scan will come back with. It will just identify if your slope is positive or negative. The next two items here are the slope positive X and negative X. And what I use the X for is I identify that as a crossing point. So in other words, slope positive X means that the slope just changed to a positive slope, and then vice versa. This will identify any securities where the slope just changed to a negative slope. So again, you can sort on or basically click on the column heading. And if you don't have any securities that have 1 in, that just means that we didn't have any securities on Friday, for example, that changed to a positive slope. So on the other side of the coin, if I go to the negative slope, you'll see that there's actually a number of securities here that just changed to a negative slope here. So let's go ahead and open up this first security here. I'll just go ahead and click on our open chart. And again, we'll minimize this dialog. And again, let's go ahead and go back here. All right. So this particular one here that we're looking at right now, you'll see that right now it has a negative slope, and it's just barely negative at negative 0.01. So if I drag this trend line back just 1 bar, there you can see that it was pointing up. And then again, on Friday's close, it just started pointing down again. So this is the type of situation that, again, if you want to go out and find securities where this situation is happening, where it's just changing from either a positive to a negative or a negative to a positive, that's exactly what it'll identify for you. All right. So let's go back into the exploration here again. And then the next ones here is the closing price either being above or below the trend. And again, we'll do the same thing. I'll just sort on that column. So there's advanced micro, for example, and then I'll look for the close to be below the trend. And this one is, again, Activision. So let's go ahead and choose Adobe this time. And we'll open up those two charts and we'll just take a quick look at those. All right. So this one, for example, this is advanced micro. What this is looking for now is looking for the closing price in relation to that endpoint here on the trend line here. And you can see it's clearly above that trend line at that point. So we'll go ahead and close that one down. And this is Adobe. And again, same thing. Now this one is looking for the closing price to be below the trend line. And again, as you can see, the closing price is clearly below the trend line on that last point again. All right. Now that we know that what these different columns will do and what they actually represent. Oh, actually, my bad. There's actually 2 more columns. So these last 2 columns, what these will identify is the closing price just crossing above that trend line or crossing down below the trend line. So let's go ahead and just open up a couple securities there as well. So again, there's advanced micro. We can open that one again, and then I'll grab the negative one. And this one is going to identify, for example, the securities that are crossing down. So I'll go grab that one and we'll open up that as well. All right. All right. So this first one, Fiserv. I don't know I don't know exactly how to pronounce that, or if that's actually the full name. But in this situation, what this one is identifying now, it's identifying that the closing price just crossed down below that trend line on that last bar. On this bar here, the closing price was above the trend line, and on this bar, the price is just crossing down below it. All right. And then again, whoops, let's go back to it. Did I not open Advanced Micro? Let's go back into it again, just real quick. And that was the positive cross, I think. Yeah. And we'll open up that one. And then with Advanced Micro, what this was looking for is the closing price to be below the trend line or on Thursday in this case, and it's closing above the trend line on that last bar right there. Okay. All right. So now once we understand, for example, what this report is telling us and how to interpret these different indicators, now we can actually use it in a lot of different ways. So for example, one thing that you might be interested in doing is you might be interested in identifying, for example, securities where the trend line has been pointing down, and then the last price, for example, crosses up above it. So to do that, let me show you how we can do that. Let me jump over here again and close that down. We'll go back into the Explorer here. And the way that you can do that is you open this back up, and we're going to use now what's called the filter. And the filter is really kind of the key to the Explorer. The filter is what allows you to weed out those securities that aren't of interest to you. So you only end up with those securities that are meeting the criteria of what you're looking for. Now, there's a couple different ways you can use the filter. You can actually put the formula inside of this box, or what you can also do is if one of the formulas are located underneath one of these tabs that are coming back with a value of 1 or 0, what you can do is you can just reference that tab. So what I mean by that, let's say, for example, in this particular example, let's look for securities that the trend line is pointing down, but the last bar crossed up above that trend line or closed above it. So in this case, we look up here, and what we look for is, for example, like column C, that's identifying the slope to be negative. So the way that you do that in the filter is you type it out as COL, which is an abbreviation for column, and then the letter or the column letter that you're actually looking for. So in this case, it'd be column C, right? So this will give us all securities that are meeting that criteria. But in addition to that, I also want to identify where any securities that are crossing up above the trend line on that last bar as well. So I also want securities that are meeting the criteria underneath column H. So to add that to our filter, we say and column H. Okay, so now we've got our two criteria built in here. We've got securities where the slope is pointing down and the closing price just crossed up above the trend line there on that last bar. So to run it again, let's go ahead and click on OK. I'll leave everything the same, and then I'll just go ahead and click on our Start Exploration here. And again, we'll go ahead and rerun that and see what we come up with here again. So again, we're going to run it on those same 100 securities that we have in there, or 102, and see what we come up with. And again, make sure that if you have any questions as we're going through this, make sure and let me know, because I'd be more than happy to try to help you out here as we're doing this. So, all right, we'll give this just a second here while this thing goes through. But usually once you, the one thing I have noticed is that when I'm doing a live broadcast like this or a live webinar, I have found that a lot of the tools do get slow. They're slowed down quite a bit, or so. But usually when I shut off the webinar, then these things pick up speed quite a bit. But obviously must be using quite a bit of bandwidth. So anyway, so again, we got Advanced Micro here in our list here. And now you'll notice here is that we've got Advanced Micro, Align Tech. We've got 9 securities that basically met the criteria. And now you'll see that 93 were rejected out. So this is really the power of using the Explorer, is the ability to go through it very quickly, just rip through the data and tell you exactly what you're looking for. So now in this situation, again, we are looking for securities where the slope is pointing down. So every security inside this list now should have a 1 underneath the negative slope, for example. And in addition to that, every security should also have a 1 in this column here, which is the trend positive X or positive cross up. So again, for example, we'll take a look at advanced micro. Maybe I'll grab just a handful of securities here and we'll open those up and we'll just show you what they look like here. So each one of these securities now, again, like I say, should all have a negative slope down, but the last security is closing up above the end of that trend line. All right. So that's Charter, it looks like. This is Cadence. Again, same thing. We have a negative slope that closed up above it. Again, this is Align Technology. And then the last one, of course, is the one we looked at before, which was Advanced Micro. Okay. So again, we have a pretty steep drop here, but the last bar did close up above it. So again, I do want to point out here again that this trend line tool, in this case, I'm basing it off the closing price, but everything that you're looking at can be adjusted. So the one modification that you might be interested in making is you might be saying that if I got a negative trend, or basically the trend line's pointing down, maybe I want to use my trend line and have it calculated off the high of the price bar and then look for the last bar to be closing above the trend line at that point. That's an easy modification to make. And so as you might imagine, I'm going to give you all the different formulas here, you know, when you subscribe to our service. Now, in addition to being able to go out and scan for securities like this, the other thing that you can do as well, once you understand how this works, is then we can also test these different trading strategies and we can ask the program different types of what if questions. Like how would we have done if, for example, that if we bought when the trend line became positive and then we sold when the trend line became negative, for example, you know, how much money would we have made or lost? Well, once we've gone to this point here and we've created an exploration, what we can do here is we can actually go through the Explorer. We can grab the formulas directly out of these tabs, and then we can jump over to the system tester and we can test out those different types of trading ideas. So for example, I'm going to go ahead and click on this tab over here on the left-hand side, which is our system tester. And in preparation for this, what I did is I actually wrote a few different system tests. But the first one I'll just show you just real quick is this one. It's called the linear regression slope becomes positive. So I just entered a quick note in there to say that I want to buy it if that linear regression indicator goes from a negative trend to a positive trend. And if it does, I want to buy that security. And vice versa, I'm going to get out of that trend if that trend line takes or basically starts to slope downward. Okay, so let's go ahead and run this scan here. I'll just go ahead and click on OK, and I'll go ahead and select it. And for this example, what I'm going to do is instead of running through all NASDAQ 100 securities, I'm going to run it through, for example, like the Dow securities. I've got a list of, or a database here called the Dow Industrials. There's 30 securities, of course, inside that folder. And the way that you set up, again, like I say, I know a lot of people haven't run Metastock, so I'll just go very quickly through the settings for you anyway. But we're going to test going long only at this point. We're going to test going back approximately about 5 years of historical data. We'll use the most recent price bar that it can get. We'll base it off of daily price bars. And then underneath my trade options, the way that I'm going to set this test up is I'm going to run what's called a points only test. And what a points only test is going to do for us is just going to return back a raw number of points that were gained or lost in that system test. So it's not going to factor in dollars, you know, or number of shares or anything like that. It's only going to look at a raw number of points that were gained or lost. And by doing that, when you click on this broker tab up here at the top, that takes out of the equation interest rates and margin requirements. And in my opinion, that's a good thing, because when you're running these different system tests, the purpose of the system tester is to see if you can find something that's worth exploring or taking a closer look at. And when you start to factor in interest rates and margin requirements, that can really kind of muddy your test results or makes it kind of hard to compare test results against each other. So I like to take that out of the equation so I can very quickly just see, you know, did it improve or, you know, did it get worse or what happened? And then for our commissions, we've got that set at 0. And then lastly, for our trade execution, you'll see that I've got it set up to buy and sell at the opening price with a 1-period delay. So meaning that if I get a buy signal on Wednesday, I'm going to get in at the opening on Thursday. If I get an exit on Friday, I'm going to get out at the opening on Monday. Okay, that's what it's going to simulate. So we'll click on OK. And again, I'll make sure that everything is selected, it looks good, and then we'll go ahead and start our system test. And that'll, of course, will begin the process here. So, and as you might imagine, I mean, there's countless combinations of different ways to kind of go through this. But, you know, the one thing that we do in our training here is I go through a lot of different combinations, and I'll show you, you know, what I think are some of the best results there and how you can kind of duplicate exactly what I'm doing there as well. So I'll click on my view results. And you can see here on our view results, you can sort on any of these columns, for example. I'll go ahead and make this screen here a little bit bigger so we can see it here. But in this case, I'll go ahead and sort on the net profit. And you can see by doing that, we've got most of the securities actually tested positively. We only had a handful here that did not test positively. So that's initially is a pretty good indication that we might actually have something here worth looking at. But really what you want to do is you want to open up a security, like for example, like the one that did the best in this group is Goldman Sachs. We'll go ahead and open up that security here. And this will open up the details for that system test. And you can see there's a lot of information in these reports, and I'm certainly not going to go through everything tonight, or today, but a few different things will kind of like jump out at you once you start working with this more and more. And one thing that a lot of people like to look at is they just like to look at how much, you know, what was the profit or the loss overall, and then how did that compare to, for example, like the buy and hold. And the buy and hold means that taking that same date range, if I would have bought that security and literally held on to it for that entire time period, that's how much I would have made at that point. So in this case, for example, if I would have bought Goldman Sachs at the beginning of the time period that was tested, I would have made 172 points by the ending or Friday's close. But using this strategy, it generated 134 points. So the one thing that a lot of people look at and say, well, gosh, you know, it didn't beat the buy and hold, so that can't be very good. Well, there's a lot of things that you need to take a look at here in the system tester before you come to a conclusion like that. And I mean, I can point, I'll go into that kind of stuff later on, or actually in my training, but I don't want to bore you with all that. But one thing I'll take a look at, for example, are the profitable versus unprofitable trades, but more importantly, the average profit to the average loss. And what I'm looking for in most of my trading strategies is I'm looking for the average profit to be anywhere from 2 to 3 times the size of my average loss. And by doing that, what that allows me to do is it allows me to be wrong more often than I'm right and still make good money with that trading strategy. So that stuff is really important to me. And then the other thing that's actually pretty important here in this report here as well is this number right down here. This shows me how much I was in or out of the market. So as you can see in this particular example, it's showing that I was out of the market 578 bars. So what does that mean? Well, if I go back up here to the top, you'll notice that I tested 1,250 bars, but I was out of the market over 500 of those bars, meaning that I generated this number in about 700 bars instead of this number, which took a full 1,200 bars in order to generate. So that's another important concept to look at when you're looking at these trading strategies here as well. So again, that's just one idea here for this particular one. And this again is just looking for this line to go up or down above or below that blue line. Now, another one that I was taking a look at here to see if we could offer something else that might look good as well is that I noticed that a lot of times here that when this line is moving down and then starts to move up, a lot of times that can be a pretty good buying opportunity. And a lot of times when it hits the top and starts to turn down, that might be a pretty good selling opportunity. So there's, as you might imagine, there's a number of different ways we can tell the program to look for these different situations. But a real easy way to do that is just to take, for example, like a moving average and plot that directly on the indicator itself. So on this example, for example, what I'll do here is I'm going to change the moving average, or basically set a moving average to 7 periods. I'll use the method to be simple, and I'll make sure that it's plotted directly or using the indicator prices. And for the color, I'll go ahead and change the color just so we can see it a little bit better. And we'll click on OK. All right. So this is a really simple way to take a look at an indicator, for example, and possibly look for different entry and exit points. So the way that I would interpret this one is that if this red line, for example, goes above the blue line, that might be a possible indication to go long. And vice versa, when it goes up and crosses down, that might be an indication to get out, get back in, for example, if it crosses back up, and again, get back out again if it crosses back down. So again, it's just a real simple way to look at that. So I created another system test just doing that, looking at this indicator with that particular moving average. And that trading strategy right here is I called linear regression with a moving average. And again, we'll test it on those same 30 stocks, and I'll just go ahead and click on my start system test. And by doing that, by the way, I'm going to keep all my settings the same as what we just did here a second ago. But again, now this one, what it's going to do, it's going to look for buying opportunities when that red line crosses up above the blue line and selling when it crosses back down. So once it finishes, we'll go ahead and take a look at it by clicking on the view results button. And now you'll see, for example, again, I'll sort on the net profit here again. And here, for example, again, Goldman Sachs came up to the top of the heap here. And again, now you'll see that, for example, like if I open this up, now it actually generated over 229 points and the buy and hold was 172. You'll see that it had 34 winning trades, 29 losing trades. The average winner was 11.2 points and the average loser was 5.3. So again, that's better than a 2-to-1 ratio anyway. But if I scroll down here a little bit further, the out of market timing actually increased to 634 bars. So now, not only did this beat the buy and hold, but it did it in half the time that it took to generate this 172 points for the buy and hold. So it literally did it in half the time. So this is, whoops, let me go back into that. I didn't mean to close that down. Let's hang out for just 1 second. Let me grab it. There we go. There we go. Okay, so anyway, this is the type of things that I can help you with. And just basically taking a look at some really simple strategies like this, just looking for these lines across. Here's Caterpillar, for example. We'll open it up and just take a quick look at this. Caterpillar generated 192 points versus 148. 61 winners, 33 losers. The average winner, 33 winners, 28 losers. The average winner was 8.3 and the average loss was 2.9. And then the other thing that you can look at, for example, you can click on the equity curve up here at the top. This will tell you how the account did or how that trading strategy performed over that period of time. And then the other thing I think is also really important is to make sure and click on this plot on chart down here at the bottom. And by doing that, what that'll do is that'll also give us the actual signals here, you know, as they occurred. So let me kind of zoom in here. We'll see if we get some signals here and take a look at it. But so to let me grab this moving average and I'm going to drag it directly again on the slope indicator here. And we'll use the 7-period simple moving average. And I'll color code it, for example, in this case to be blue. And again, click on OK. So again, what this is doing now, it's basically saying that when this red line crosses up above that blue line, 1 bar later, it's going to enter into a long position here. So in other words, what happened here is actually, if I kind of scroll backward here a little bit, you'll see that this is the point where that trend line starts to change direction like that. And based off of that, that was an entry point right there. So we had an entry point right there. Looks like it kind of flopped around a little bit right there, but you kind of get the idea is that this will identify, again, where that trend line is actually changing direction. So, all right. So I hope that's helpful. I know that that's a lot of information, to say the least. I know there's a lot of people in here who probably don't have Metastock, and it might be a little bit over your head and so forth, but that's what we do. What we do at Learn Metastock is that we help you get whatever it is that you want out of the Metastock program. And we can help you in a lot of different ways. But to kind of check things out, if you went up to the Learn Metastock website, you'll see you've got a number of tabs up here at the top. But the first one I'll click on is this Live Classes tab. And in our live classes, we do live classes on Tuesdays, Wednesdays, and Thursdays at 12 o'clock Eastern time. And once you become a member, all you do is just log into this site here, and then down here you just click on join live class, and you're registered, and you're basically good to go at that point. So the nice thing about the live classes is that, of course, you can come in and you can ask as many questions as you want. And I think it's actually, it's a great way to kind of get your questions answered very quickly. So then the other thing that where most people spend their time on the website here is underneath what's called the video library here. And what you'll find in the video library is that we have well over 100 training videos up here now. And we've got them structured for whatever type of user you are. So if you don't have Metastock right now, and you want to kind of learn more about it and figure out how to really use this thing, what I'd recommend that you do is go to the video library and literally just start working your way down here. For example, you might be interested in taking a look at the introduction to technical analysis, and then take a look at the risk of ruin and so forth. And then this section here, getting started, this of course will get more into the Metastock aspect of it. But the other nice thing about the website too is that when you click on any of these buttons here to watch now, for example, if there's any formulas or anything else available for you, you'll find that you'll be able to download them by clicking on a button over here on the right-hand side underneath this resources section. And then in addition to that, for most of our videos, we also have quizzes available too. So again, if you want to learn about this stuff, this is a great way to kind of basically have that stuff sink in, or basically help get that stuff sink in a little bit more. Because again, there's a lot of information out there, and doing a quick quiz at the end of each video, I think, can also be just a really good learning tool. But let me go back here again, and let me just show you some of the different categories that we have in our video library. But what I recommend, again, for somebody just getting started is literally to start at the top and just start working your way down. And once you've gone through these first 4 videos here in the getting started, then what you can do is then you can start to move down your page here. You don't have to go through these. These are a little bit short, quick demonstrations of how to do one particular thing, for example. But if you scroll down here, once you've gone through or gotten the basics down a little bit better, then you can jump into the different power tools. For example, like the forecaster, the expert advisor, jump over to the option scope, system testing. You'll see we've got quite a bit on system testing. And my favorite, of course, is the Explorer. Again, this is just a really versatile part of the program that I'd highly recommend that you spend some time figuring out how to work with. And for those of you who really want to get more out of it, we've also got a lot of formula writing videos there as well, where we cover a lot of different aspects of formula writing. And again, we can literally start you off in little baby steps and work your way on up. And the nice thing about these is having the videos, of course, you can watch them as much as you need to. We've got a number of videos on the RMO. We've got, as you can see, we've got 5 different videos just on stops. Stops, for example, in my opinion, are really important. If you think about trading, anybody can get into a trade, right? Anybody can basically hit the button to get into the trade. The question is where you're going to get out. And where you get out is going to determine whether you've got a winning trade or a losing trade, right? So understanding stops and figuring that part out before you start trading, in my opinion, is extremely important. Scroll down, then you've got a number of different videos just on the indicators that you have available, but probably the most popular section of the videos that we have available is underneath this section here, which is called trading strategies. And what we do here is we'll take a trading strategy that's published, for example, especially like in Stocks and Commodities Magazine. By the way, if you don't have Stocks and Commodities Magazine, I would highly recommend that you get it. I reference it all the time. And typically what happens is somebody will contact me and say, hey, I'd like to learn more about, in this case, for example, like gap trading, So what I'll do is I'll go up to Stocks and Commodities. They've got a huge library, an archive, where you can go up and you can search articles. So I'll go up and I'll read a half dozen articles about it and then figure out how to put it together for you. So that's what I do here in this trading strategy section. And we've got a lot of different systems here that we publish. And again, the same thing, just like with all these other ones, when you decide that you want to take a closer look at it, you'll also have access to downloadable formulas to go along with that training video. So again, I think that can be pretty helpful for you as well. And we'll scroll down here. There's quite a few in there. We've got a whole nother section just on product reviews or the add-ons that Metastock offers. And in addition to that, we've also got another group just, for example, on Zenith for our real-time traders out there. So again, we've got a lot of different ways that we can help you, to say the least. So, you know, if you haven't, if you're, again, new to Metastock and trying to figure these things out, of course, you can go up to YouTube and so forth and try to find, you know, the free videos and so forth. But I can guarantee you that if you go through my training, I can cut your learning curve drastically, to say the least. So I don't know what your time is worth, but again, I can save you a massive amount of time, you know, if you're interested in taking a look at our training here. All right. So with that being said, that's what I've got for you here today. Again, I hope that was helpful. And Jeff, are you there?
Huh?
There you
Me?
go. Perfect.
How you doing, Kevin?
Are you snoozing? Are you snoozing?
No, no. I have a couple comments I'm going to read to you. You ready?
I'm ready.
Okay. These are people that have apparently tried your service. So Michael says, I took the offer some time ago and recently rejoined again. It's an amazing amount of material that that I missed the first time around. Kevin is tops. He replies promptly to emails, and he's always there to help. Highly recommend. Paul says,
Well, thank you, Michael.
Kevin,
good. Oh, sorry.
Okay. No, you're fine. Kevin does a great job with Learn Metastock. He covers all different features Metastock has to offer, the basics to formula writing, 140 videos, question mark, along with weekly classes. A great value, exclamation point, exclamation point, exclamation point.
Man, and these are not paid, right? These are not paid
No.
testimonials, right? Okay.
No, Greg's actually typing him in the other room. So Kevin, it's an amazing presentation.
Thanks,
this is
Greg.
from Wally. I'm really enjoying my Learn Metastock membership worth every penny. Quick question: with all this great knowledge, how come you're not having your own add-on to Metastock?
Oh, there's a good question. That's a good question, Jeff. How come I don't have an add-on? Why do you shoot down all my add-ons?
Well, you just include them with your website. One of the things I like about your website is like you go in and you kind of review a stocks and commodities article, and then you provide the code, and you have like a really good video to go with it. I think some of the stuff you do up on your site some of the stuff is really, really cool, and then the rest is amazing.
Yeah, and just to reiterate that point as well, is that I spend so much time reviewing strategies and putting together these formulas and so forth that, quite honestly, I mean, some of these I probably could repackage as an add-on, and I could probably charge quite a bit for it. But again, like I say, it's just being a member of our service. You know, that's just basically what we're offering. You know, so
those are all the praises that we got this time around, but those are pretty good praises. Mike wanted to know what's the name of the magazine. Mike, that was Technical Analysis of Stocks and Commodities magazine. And if you go register today or tomorrow at metastock.com/traders-summit, you can get your first issue for free. So, Kevin, great job today. That's great.
Thank you. Appreciate it.
All right.
Yeah, thanks for having me.
Any final thoughts?
No, I just I was just going to say just real quickly, and that I know we've got some people that have had my service in the past too. And if you haven't had our service for a while, then take another look. And we were constantly trying to add content to the site and so forth to help you out. So we'd love to have you back as well.
Yeah. Thank you very much, Kevin. What a great way to cap off tonight. I do want to remind everybody, so learnmetastock.com. If you're a new subscriber, it's $99 per month. It includes all the live classes, hundreds of recorded videos, topics on technical analysis, Metastock, topics about formula writing, lots of formula downloads, weekly market outlook. $99. If you're a brand new subscriber, we'll give you your second and third month for free, which according to my math, and it has been a long day, it's only $33 a month for the next 3 months to kind of go in and soak up some of this great content. So to take advantage of that, I would recommend, if you haven't done it, give it a go. 800-882-3040 or metastock.com/saleschat. Thank you very much, Kevin. Really, really good to see you today.
Appreciate it.
All right. And then I'm going to go ahead and Oh, I didn't even share my screen again. I'm gonna go ahead and thank you, Kevin. I'll show you the screen that I was reading off of too, real quick, and then we'll just kind of wrap up. Okay, I guess I am showing my screen. Okay, so you can see that. Okay, good enough. I do want to thank everybody for coming. I want to thank all of our great speakers. I think this was one of the best summits we've had. I might be just like I have had too much caffeine, but I think it went really well today. We do have the Traders Summit Action Pack. I want to thank everybody for that signed up for Metastock, either today or on a different day. The Traders Action Pack is going to give you all of those add-ons that we talked about from all of the market experts. Some of our most popular, best add-ons here today at more than half price. So $16.45 instead of $37.39. Most of them have a money-back guarantee. Give us a call, 800-882-3040. Chat online with us at metastock.com/saleschat or visit us online at metastock.com/summitdeal. I do want to personally say thank you to all of the presenters we had today. All of the presenters we had today are, I consider, friends and great technicians and just great business partners over the years. And I do appreciate all of the time they spent with us today. I think they really did a good job. In terms of everybody that came and attended and sat through 8 hours of market analysis education, thank you. You know, the reason I'm proud of these things and the reason they work so well is because you guys come and watch and enjoy it. So if you're new to our YouTube channel, make sure to like, subscribe. It does help quite a bit. Stay healthy, wear a mask, and we hope to see you at the next one.